reasons. One, their consolidated crude steel production up about 14% YOY, but down 5% quarter on quarter. And the quarter on quarter impact is due to a planned maintenance shutdown of blast furnaces, which, as a result of which, the capacity utilizations at Indian operations was about 87% for quarter one FY26. But the other interesting piece is, so they might have whatever, a 14% YOY uptick or whatever the news, the uptick may be depending on prices, etc. But JP Morgan is saying that steelmakers could see a quarter on quarter EBITDA growth led by higher steel prices and lower coking coal costs. So their numbers might look okay because the steel prices are higher and EBITDA might be better, and their consolidated crude steel production itself YOY is up about 14%. Watch out, maybe the street likes JSW Steel, so watch out for that one today. Varroc might, who knows, sees a bit of a negative reaction because they received an arbitration order from the ICC International Court. It's for a number of $66.4 million initiated by Op Mobility Lighting, that company's alleged breach of covenants under a share purchase agreement executed in April 2022. Varroc may react negatively. Keep an eye out for that one. And Jefferies has come out with a note on consumer staples. Contrarian opportunities in fallen angels, they say. And they say that they see gradual improvement in some of the issues, which is of demand, margin, etc. They see limited downside, but a meaningful upside in case of a turn. So risk reward, according to Jefferies, is favorable. Varun, HUL, Asian Paints. Best contra 12-month ideas, according to them. Asian Paints has been upgraded to a buy from an underperform, guys, double upgrade. Target price hike to 28.30 from 2000, so watch out for that one. And then Varun Beverages, target price has been cut to 560, but it's a buy, and HUL maintained a buy with a target price of 2950. So maybe Asian Paints, watch out for that stock.
And you know, as you're highlighting brokerage notes, you have a JP Morgan note on EMS.
EMS stocks.
Yes, and they are saying it's a sunrise sector probably. All initiating coverage, and that should probably be
or a change of analyst
maybe, but it seems very interesting for them to initiate coverage and call it a sunrise sector at the moment.
And what stocks have they highlighted, Hiral?
All of them, from an Amber to Dixon, all of them, majority of them in fact have buy coverage. Few of them are neutral on the list, so we should be highlighting that note as well on the show. But that's going to be an interesting space that we should be watching out for pretty closely. But let's quickly look at the watch list. Your implied open currently is showing you a marginal downtick of around 20 to 21 points, so that's what you're watching out for. But on the watch list today, we have Bajaj Projects. This is on the back of a capacity addition to 1.1 lakh MTPA versus 40,500. CMAC also will be in focus. In the green, secured a 39 crore offshore repair contract. You have Supreme Industries again on the back of an order win from BPCL that will be in focus in today's session. NTPC has gone ahead and commissioned a 250 megawatt pumped storage project. As we were talking about Asian Paints, a Jefferies double upgrade on this one. You have Sirma, Dixon, Keynes. JP Morgan has initiated with overweight rating, so all of these EMS companies that will be in focus as well.
Now you've got Tata Steel. It has reported a dip in production. Signature Global was on my list. The pre-sales are down 15% year on year in the first quarter. And Union Bank of India, the balance sheet has degrown on a sequential basis. Pharma companies, we've spoken about this, potential for an initial downtick in a few of the companies that are exposed to the US markets. 200% tariff has been threatened by Trump. And Varroc Engineering, we spoke about this as well. It's gotten an arbitration order, $66.4 million from the International Court. On that note, it's time to slip into a very quick break. Of course, the implied open is indicating a marginal downtick, if I'm not mistaken. 26 points or thereabouts was where I saw it last. We'll get you the top trading strategies and everything to do with stocks before the start of trade. Do stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news.
Welcome back. You're watching India Market Open, and we've had quite a few conversations so far about everything that's happened overnight. But let's focus in and drill down into the stocks that you should watch out for at the start of trade today. And Somil Mehta, Mirae Asset Sher Khan, is joining us this morning, along with Avinash Gorakshakar of Profit Mart Securities. Gentlemen, thanks so much as always for taking the time, and very good morning to you. Somil, I'll start with you first. We've seen a couple of days of very narrow ranges of trade. And understandable, because there's so much that is uncertain globally. What do you anticipate for the start today, and do you see at all any chances of a breakout?
Good morning to everyone. Absolutely, I'm positive on the entire trend at this point of time. We've seen a very good rally in the last couple of months, and we've been consolidating in a range from last couple of weeks now. The rally which we've seen in the last couple of months from 24,500 to 25,700 almost. We're retracing that or having a small pause. That's what my sense is. And in the medium term outlook, the trend remains positive. So in the short term, we are in a narrow range, but yesterday we've seen a very good move. And I think that is the start of the breakout, and I'll be expecting this trend to resume very quickly now. The targets in the very short term would be 25,900, and in the medium term outlook, definitely I'm expecting the all-time highs to be, the targets, 26,200, 26,300 would be my medium term target. On the downside, the supports would be around 20 daily moving average, because every time Nifty dips down, it takes support at 10 daily moving average and then 20 daily moving average. 20 daily moving average will be my very, very crucial support level, which is 25,200 at this point of time. It may slide higher in few days, but 25,200 will be my crucial level to watch out for. Now in Bank Nifty as well, that's the same case, a narrow range. I'm expecting this range to break out on the upside. It is outperforming, and now especially the private sector heavyweights are looking very good. Kotak Bank, ICICI Bank and HDFC, all three are looking really good, and I'm expecting these stocks to participate in outperforming Bank Nifty. So yes, buy on decline should be the strategy, and the view is positive in the short term and medium term both.
Interesting. Buy on dips, a positive view in the medium to the short term as well. So, good morning, Hiral on this side. So, taking a buy on dip strategy into consideration, what would your top picks be?
As I said, a few sectors are looking very good, and we should be focusing more on sectors and stock specific. Private banks are looking great. So ICICI would be my top pick from the private bank large caps. ICICI Bank has a consolidation and has taken support at 40 daily moving average, and now high top, high bottom formation has already started. Good setup. 1420 would be the stop loss, and target would be 1500 in the short term. Medium term, of course, looks really good, and I'll be targeting much higher. The second stock is from the real estate pack. Yesterday, we've seen a good bounce back, a good start of the short-term trend for real estate sector. So TLF would be my pick. DLF has formed a huge consolidation in the last couple of months, last 1 month. This consolidation I'm expecting to break on the upside. Stop loss would be 820 and the targets would be 880.
Okay, makes sense. So DLF and ICICI Bank on Somal's watch list, and he's got a buy call on both. Avinash is joining us this morning. Avinash, very good morning to you. What do you make of this tariff announcement on copper? And of course, Indian copper producers largely cater to our own market. So is there likely to be an impact, or do you think that it will only be an incidental impact if the global copper prices move?
Yeah, good morning, Alex. See, my sense is I think, let the fine print come out. These are just announcements, Alex. I think, what finally comes out is going to matter. But if at all, the import duty on copper goes to 50%, then obviously the local producers will get the benefit of significant amount of pricing power, because copper largely is imported in the country. There's not enough copper production. And I think the end user sectors, like cables, wires, typically electrical equipment, many sectors which consume copper are definitely going to be impacted, because obviously when the cost goes up, the end user will have no choice but will have to pay a higher price. So I think today you could probably see a little bit of bump up in the copper producers like Hindustan Copper or something like Vedanta. Typically because these are companies which manufacture copper in the country, although they are not very large players looking at the global kind of positioning and the kind of consumption India has. But nevertheless, I think you're going to see a lot of stock specific action, not only in copper, but just to mention earlier your anchor Hiral mentioned about pharmaceuticals. I think pharma stocks are also going to be under pressure, because clearly if there's a high tariff announced on companies, then it's going to impact players which largely cater to the US market. So I think you're going to see a little bit of sentimental kind of crackdown in the initial few minutes. And I think how the market looks at it, probably in the second half some value buying could come in. But I think all of us are waiting for the final details of the trade policy, which is expected very soon.
Well, pertinent points, and in fact, let's probe those to, let's post those to somebody who tracks this very, very closely. Rakesh Arora, founder of GoIndiaStocks.com, with us on the show. Rakesh, great having you as always. Thank you so much for joining in. Good morning. What do you make of these announcements? 50% tariff on copper into US has, at least the US copper prices were up, though I don't think LME prices have reacted too much, or at least the rest of the world prices have reacted too much. What's your initial thought on this?
So, the street was expecting around 25% tariff on copper import by US. So 50% has come as a surprise. That's why you see a 10% jump in copper prices. If I look at overall copper consumption in 2025, China has been building solar power like there's no tomorrow. And just to give you some numbers, in the first 5 months, China has added 105 gigawatt. Now that is equal to India's total solar capacity. So that gives you, a lot of color. US added around 10 odd gigawatt in the first quarter, and this was down like 7%. China was up 150%. So what is happening is that, we have strong demand growth coming in China for copper, which is growing at around 13%. And because of the tariff, the inventory is all moving towards US. So rest of the world is left with much lower inventory. When you club the inventory of US and the rest of the world, it is probably higher than what it was in 2024. But since everything is rushing to US, the rest of the world is seeing much lower inventory, and that's why the prices are moving up. This phenomena will last for some time because US demand is not there enough to support that kind of inflow. So you will see bump up in copper prices in the near term. We're already seeing that. And probably, in 1 or 2 quarters, as things settle down, copper will start to come back to below $10,000 level.
But Rakesh, if these tariffs, we don't know they will come or no, but if these tariffs come into play, and if US copper prices go higher, not because of demand, but because of tariffs, do you think it will have an impact on global copper prices as well?
So, Neeraj, the rush is only to beat the tariffs coming in. So, before the tariff impacts the imports, people are trying to push material into US. But the inventories in US are rising, and the premiums in US are actually dropping. So that inventory would be lying idle after the tariffs are implemented, and then the rest of the world can go back to the balance where it was. So this rush is only till the tariffs are actually implemented. People want to beat that and take advantage of the lower tariffs right now.
Rakesh, hi Alex here. I'm just wondering then, from the perspective of the Indian producers, our understanding is that they cater largely to India and exports don't form a large part of their sales. So would you say that the impact net, at least for the short term, since you're saying copper prices globally will go up, would be positive? And then will it reverse over a period of time?
So Alex, there are two types of producers in India. One is integrated producers who have their own mine. So there's only one Hindustan Copper. So for them, they gain when copper prices go up. Not to say that it's a buy recommendation because stock is costly. Number two, we have players like Hindalco and somebody like Adani who just started. They are converters, so they buy copper concentrate and convert into refined copper. These guys are finding it difficult to even get copper concentrate from the market because of the shortages. And the TCRCs, which we call the refining charges that we get, are actually trending in negative zone right now. So converters are not making any money. It's only integrated player like Hindustan Copper which will benefit from this rising copper prices in the short term.
Okay. Rakesh, good morning. Hiral on this side. We've spoken about producers. We're talking about now usage impact. If you have to talk about wire companies, so the consumption side of copper, how are you seeing that impact come in? Because if you're expecting copper prices to go up and then settle, will it be a knee-jerk impact in the near term, but longer term, no impact? How do you see the consumption side of it?
So, there would be, losses which copper consuming companies will make in the near term because it's very difficult to raise end product prices with that kind of speed. So near term, 1 or 2 quarters, they will be impacted because of, not being able to pass on the higher copper prices. But they also tend to gain when copper prices fall and their end product prices don't fall that much. So over a year or two, it balances out. But in the near term, they will be under pressure from rising copper cost.
And primarily wire companies, right, Rakesh?
Yeah. Primarily it's a wire and air conditioner. There's already a large shift to aluminum and air conditioner industry, but wire definitely will be impacted.
Rakesh, just one quick follow-up here, Rakesh. For the wire companies, right? If copper prices are higher and if it's a pass-through, doesn't it help the revenue growth for them just automatically?
Yeah, Neeraj, but it's difficult to increase prices immediately in the consumer field. So, and also we are into our lean season right now. So they may not be able to pass through immediately, but over a period of 2-3 quarters, they will be surely able to pass it on.
Got it. Okay. Fair call. Okay. Thanks, Rakesh, for joining in today and giving us those thoughts. And guys, just as we move on to the next segment, but before we end this, I'm using what Somit told me in the morning, that copper has played its trump card, if you will.
He was very proud of that line.
But it is a very good line.
It is a good line.
But I hope viewers, this helped you understand the impact on various copper end users and otherwise. But on cue, because it's I spoke about a Somit
quote. 8:45, 8:46 now.
Yeah. Let's get in, Somit.
Yeah, it's by the way, if you're tuning in for the first time, then this is a segment that you'll see on India Market Open every day, 8:45 around, and Somit joins in with the chatter from the dealing room. Somit, what are you hearing?
Well, multiple stocks in focus. In fact, multiple stocks have also, that we have earlier highlighted in Harder Street, has been confirmed today. So firstly, it's Aditya Birla Lifestyle brand, where there's a buzz of some positive corporate development that could come in, and hence the stock has been gaining in trade. Dealers also indicate that there could be a potential fundraise announcement as well. And when it comes to Aurobindo Pharma, buy flows on institutional desk continues despite the downgrade that we had seen from Macquarie yesterday. Dealers believe that Aurobindo Pharma continues to remain as one of the best bet in the pharma sector based on valuations as well. And multiple covers that we had indicated earlier, like on July 8th, we indicated that Varun Beverages and Asian Paints are seeing buy flows on FI desk, and today multiple brokerages have come out with a positive note on Asian Paints and Varun Beverages. For Vale Estate, yesterday we did inform that the demerger date for the record date for the demerger of hotel business could be announced anytime soon. And yes, the company has come out with this announcement on the exchanges where they are saying that the record date for this demerger is July 18th. For India Shelter, we indicated yesterday that a big block deal happened of around 50 lakh shares where Nexus Fund was a seller, and the block data that has come in post-market confirms that Nexus Fund was the seller of 50 lakh shares have been sold by them, and Kotak Mutual Fund was a buyer. They bought around 45 lakh shares. And on July 2nd, we did indicate that Dixon Tech has been moving higher despite the downgrade that had come in from Morgan Stanley on the back of a potential JV with a global company. And yesterday, Dixon Tech did announce that they have formed a JV with Signify, which is a Philip lighting company. So a strong JV that the company has formed on the lighting segment as well. And Brokerage property was also part of the khabar on July 2nd, where there were sell flows and dealers indicated that there could be a negative note that could come in from a multinational broking firm. And today Nomura has come out with this note on Brokerage properties where they've initiated a reduced rating with a target price of 1900 rupees, and they're saying that the valuations appear to be quite stretched for Brokerage property.
Multiple covers confirmed. So,
I love it.
Yeah.
Okay, Soumit, thanks so much for putting all of those into perspective. So a lot of things to watch out for, and you know, in kind of syncs with what we were talking about pharmaceuticals. So two questions to Avinash Gorakhshekar.
Yeah.
One is on the khabar that was confirmed, which is Valor Estate, and the hotel demerger date announced. Avinash, I don't know if you track Valor Estate or erstwhile DB Realty, but is there some value unlocking because of this now? And is that therefore making the stock an attractive proposition?
I think, Neeraj, clearly it would definitely unlock value for the shareholders because this business definitely would get a significant amount of re-rating from the markets as a separate entity. Although, the stock is fairly illiquid, but I think if you look at the overall kind of positioning, the hotel business has got, they've got a very running existing hotel kind of chain network and at very good locations. So I think obviously, once this demerger happens, you're going to see a lot of buying interest on this counter. Later on, of course, on a standalone basis, how this company does, what's the kind of commentary from the management. Typically, that is something which the market should look at. But definitely, we are structurally positive on the hotel business from Valier, and I think it should definitely get listed at a reasonably good premium valuation. And obviously, going forward, it's going to be the earnings and the data points which is going to decide the future trajectory of the stock.
I wonder if you've had a chance, Avinash, to take a look at the quarterly update for Signature Global from the Realty Pack, and 15% decline in pre-sales numbers, and that's really what the street focuses on. What did you make of it? In that same press release, they have maintained their guidance for the full year, though.
No, I think, Alex, this is a slightly disappointing kind of input which has come out because pre-sale number is the first indication of the pent-up demand. And I think earlier, if you look at the previous one or two kind of conference call updates, the management was pretty upbeat because they operate in North India, specifically in the Gurgaon belt. So I think it's a little difficult to believe that, pre-sales have gone down by 15%. But yes, maybe because the prices in that area had got elevated very significantly upwards in a very short period of time, there could be a slight kind of decline in pre-sales. But obviously, I think, that market is still not crowded. There is enough appetite for new projects. So I think we'll have to wait for the actual numbers to come out. And obviously, once the Q1 numbers come out, we'll come to know what is the kind of, built up inventory and the kind of pent up demand. So net, I think in the short term, the stock may react negatively to this news. But in the medium to long term, I think the downside is fairly well protected.
Okay, so that's with regards to Signature Global. But coming back to what Trump is talking about, and this is in his latest threat of imposing 200% tariffs on pharma imports, there could be severe ramifications for Indian pharma giants. Again, this is not in the near term because he has a good amount of timeline that he's given out. Varsha joins in with more context on the same. Varsha, how are you seeing the impact in terms of immediate versus long term?
Yeah, actually, so if you see the 200% will not be levy in immediately, as you rightly said. It will take almost 12 to 18 months, and this may provide a little comfort, I would say, or a relief to the pharma companies, because the tariffs will be levied after 12 to 18 months, and this is the reason. If you see, US shares yesterday pharma shares ended in green after this announcement. So you have Pfizer, Amgen and Coherus, which were up in trade yesterday after this announcement. Now, what Trump actually said, that there are going to be tariffs at very high rate, like 200%, but they'll give a certain period of time to get this act together, and they'll give people about a year and a half. Now, if you see pharma stocks with high exposure to US, you have Gland Pharma, Aurobindo Pharma, Dr. Reddy's, where the tariff range from 45% to 50%. Lupin, Glenmark and Sun Pharma has tariff range of almost 30 to 35%. The least company which will get impacted from this tariffs would be Torrent Pharma. So as you asked me the question, in the near term, no, there won't be impact. But the analysts are saying that to set up a company or to set up a facility in US, that will take much, like 4 to 5 years to set up a facility there. So they don't see this 200% tariff into play. But we need to see go ahead what the Trump will, maybe there will be negotiations or not. But let's see how much India export to US. If you see, India exports almost 10 billion 10 billions of pharma goods to US, and Indian exports contributes almost 6% to overall US export. Generic provides more than 400 billion USD in annual savings to US healthcare sector. So this is the industry analysis, how much India export to US when it comes to pharma products.
Thank you, Varsha, for that. In fact, let me take a quick question with Avinash. Avinash, you're talking about a 200% tariff, but again, 1 to 1.5 years is the kind of timeline. How are you seeing the dynamics change?
Well, I think, Hiral, clearly, even if this 200% import tariff comes in a staggered way, I think clearly the market is worried that at these tariff levels, how viable will be the operations of these players in the US markets. My sense is that, I think in the longer term, obviously all tariffs are going to be passed on to the final customers. But in the short term, there could be a little bit of worry, although these would be implemented only over the medium to long term. I think the markets would obviously build in the narrative that a higher tariff eventually is going to come. So I think to that extent, we'll have to see how the managements gear up to this new challenge and how it impacts their earnings in the medium to long term. But I think overall, I think there would be some amicable solution for the, pharma players, because it's a large market for them. And to suddenly change their business strategy in the near term or in the longer term will take some time. So I think it's better to wait and watch. I would say that, as of now, it's advisable to stay away from all pharma companies who are largely dependent on the US market. Let the fine print come, and then I think we could take a conscious call.
So a conscious call that one needs to take with regards to pharma. But let's quickly slip into a short break. We'll be right back with pre-open as well.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. it will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India. Back with India Market Open right here on NDTV Profit. If you've been with us thus far, we've discussed pharma tariffs. More importantly, we've also spoken about the copper proposed copper tariffs and the impact, if any. And we'll continue that conversation with KIA Industries coming up in just about a minute and a half from now. So keep that in mind. The implied open suggests about an 18-point downtick, so nothing too dramatic. Again, a flattish start. Very, very likely. Now, keep in mind, it's also an important day from a trade perspective because the markets are just consolidating for the last few days. What do you do in a scenario like this? Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal Johnson right now on the show. Chandan, always good having you. Thanks much for taking the time out. Are you taking any index positions or strategies at all, Chandan? Or is it better to look beyond the index into specific stocks these days?
Good morning, Neeraj. Thanks for having me. So I believe position can be built in both index as well as the selective sector and stocks. First, to comment on the Nifty index, just a couple of days back, we've had a decent rally from 24,473 to 25,669 marks. And after that, index has been consolidating from last 6-7 days. We have noticed that in this consolidation market from the higher base at 25,331, respected previous breakout of 25,200. So I believe that till it holds about 25,200, overall bias could remain intact to positive and expecting market to commence the next leg of rally. So buy on decline may be seen, but till it holds about 25,200, I'm expecting market to be on a bullish mode to rally towards 25,750 to 26,000 marks. Those who are looking for intraday point of view, I believe 25,400 could act as an immediate support for a bounce towards 25,650. Similarly, if I look at the Bank Nifty index here, expecting fresh leg of rally in the breakout, a corrective move was seen with higher base at 56,500, and I believe for day point of view, hold of 57,000 can take it towards 57,550, 57,800 marks. So overall, expecting both the indices to remain on the positive side. However, due to the lower VIX at 12.2, some consolidative move could be seen, but I believe both the indices have potential to head towards the lifetime high territory.
All right, so that's a view. Chandan, we'll circle back to you on your stocks, but before we do, we'll talk about a new debutant on Dalal Street, and that's Crizac, which will be listing today. Remember, in case you missed it, this is an 860 crore IPO, which was oversubscribed 63 times. So the question is, will it list at a premium and how much? Sajit, do you have some of those answers? What is possible?
That's right. It's going to be a good listing for Crizac. To give you a perspective, Crizac is a B2B platform which connects agents and foreign universities. So anyone who's looking to go for a higher education to the UK or applying to some of the universities in New Zealand or US or for that matter Australia, I mean they mostly go through some of the agencies like Crizac, and that's what the business model is for Crizac there. The IPO, as you know, closed on July 4th, and the listing is today. It was a 860 crores offer for sale with the upper price band of 245 there. As you said, 63 3 times the issue was subscribed, and that brings in a little bit of a premium on listing for the company at roughly around 40 odd rupees. So 60 for a retail investor who got one lot, and that lot comprises of 61 shares, he would have got a profit of roughly around 2,440 if the premium is around 40 rupees on listing for Crizac. To give you a perspective on the financials, it had a top line of 850 crores, EBITDA margin of 25%, and a profit after tax of 152 crores. So it's the listing is today, and let's look out for the premium when it lists.
Most certainly watching out for that. Thanks a lot for that, Sajid. So keep an eye out for this IPO, or a listing rather, subscribed so healthily. Well, one of the sectors in news is of course everything related to copper. And Mr. Anil Rai Gupta, who's the CMD of KEI Industries, of course, Johnson right now, to talk about his view on what impact this could be. And Mr. Gupta, I must say, you've been candid all through and through. Every single point of time there is a news flow in your sector. So thank you once again for agreeing to join us and talking to us today. What do you think the impact of a move like this, which has got the US copper futures soaring, be on end user industries like KEI?
Good morning. It is, it has been announced yesterday night, so it is too early to gauge the impact. As of now, there is no clarity, and what we understand that the tariffs has been announced on raw copper, like anodes or cathodes. We don't know whether it will be impacting the user industry like cables, conductors, transformers. So it is yet to be determined, and there is no news that from which date it will be implemented. So let's wait and watch for the more clarity on this.
Right, sir. And pertinent points raised, and therefore let's wait and watch. Agree completely. I'm just trying to do a hypothesis, sir, because we may not get a chance to talk to you again if this were to become a reality, right? So let's assume if this does become a reality in months' time, 2 months' time, what have you, and if copper prices move up higher significantly, in the US at least, if not the rest of the world, and I don't know how you think about the correlations thereof, but if indeed there is a high uptick there, does it have an immediate impact for procurers and users such as KEI?
No, I don't think so. Reason is, if there is a tariff in US, maybe temporarily the copper flows may goes there, but not then it will stop also, because 50% tariff, their user industry, how will they absorb? And it will, I think, limit the consumption of copper in US by the local manufacturing companies. We are yet to ascertain whether it will be, this order will be impacting the products made of copper into US. That is no clarity, because their HSN codes are different.
Mr. Gupta, just to drive home that point, Alex here, I'm just trying to understand, because we've spoken to a few analysts, and what they're saying is that in this uncertainty on tariffs, there seems to be a buildup of copper inventories heading towards the US. And that logically would mean that in other markets, including our own, the inventories would be lower than normal, or lower than past years at least, and you've seen an uptick in the prices over the course of the last 3 months. Have you seen that occurring? What is the implication if this shifts? Do you anticipate prices to come down? And if prices go up, are you going to be able to pass it on completely?
See, as of now, it is, as on today, LME copper prices have not gone up. Secondly, so far as our business is concerned, but whenever the copper prices are rising, we are immediately passing it on to the users. And if it is dropping, we are also reducing our selling prices of our cables. So I think so far as we are concerned, it will have no impact. But any significant rise in copper price may impact the demand temporarily, because ultimately the user industry normally does wait and watch policy for some time if the prices goes up significantly.
Mr. Gupta, thank you so much for joining in for that clarification, and look forward to chatting with you very soon, possibly after your results.
Thank you.
All right, let's talk about the big brokerage call of the day, and that is Jefferies' double upgrade on Asian Paints, calling it a fallen angel. Find out why. Harsh is joining in to tell you just that. Harsh, what is the target price? And double upgrade is quite significant on a company that has been facing the doldrums.
Well, yes, Alex, absolutely. So 2,830 being the target price. Now, why or how much upside does this offer? Around a 14% odd upside from the current market price. Of course, in pre-open itself, we're seeing a bit of a spike on that. But you know, when you're looking at the overall environment, and this is what Jefferies talks about, consumer-facing categories have actually been grappling with subdued demand, is what they're saying. But that hopefully seems to be changing. With regard to rural, they're starting to see stabilization. They believe that is visible. And with regard to urban, demand has moderated post-COVID, but hasn't moderated as much. So that's also a possible positive. The lack of a price hike is the other reason why the industry is impacted as a whole. They're also saying that margin pressure has been varied across players in the industry, and that's due to impact of inflation. And we're talking about the larger consumer-facing names is what I'm trying to clarify here. Now, acutely competitive landscape where Asian Paints and the paints industry is concerned, that's what it's facing in terms of a headwind. And many stocks within that consumer basket have corrected 25 to 30% from peak, therefore offering an opportunity. They have hiked the target price from 2,000 to 2,830, and here's why. Asian Paints will benefit from a normalization in gross margin, is what they're saying. There'll be a gradual pickup in growth for Birla Opus in FY26, and the worst may be behind where Asian Paints is concerned, is what Jefferies is saying. They value this at 49 times, believe it's reasonable. 49 times FY27 EPS is where they value this. A huge hike in target price, 40% plus.
That's an interesting uptick as well, and a 1.5% pre-open uptick is what you're seeing in terms of Asian Paints. Chandan, let me quickly come to you. We're just around 5 minutes away from open. Your top picks in terms of trade today.
Yeah, so I'll focus on selective mid-cap ideas. First trade will be buy on delivery. Delivery has seen a positive price action. In fact, has been making higher tops, higher bottom. Positive price action with a decisive hold above 400 could continue to take the counter on upside. So with support of 399, recommending to buy for an upside target towards 425, 430. Second idea, there is buy on ITC hotels. We have seen good attraction in most of the hotel name, including Lehman, ITC and all. After the corrective or consolidative move of last 8 days, we have seen a positive price pattern. The stock is holding well above support trend line and key moving averages. So one can buy with support of 218 for an upside target towards 233.
Okay. So beyond that, of course, you're seeing a bit of an uptick on Hind Copper at the start. Just pull up that chart and see where it's moving. And we spoke with analysts early on in the show, and they pointed out that the one beneficiary, if at all, of higher copper prices would be Hind Copper. So I'm just wondering, Avinash, would you buy at this point? Are you comfortable with the prices, or are valuations a little steep?
No, I think, Alex, based on the narrative, I think clearly copper prices are rising. There's a huge demand appetite, and supply, in the domestic market is pretty low. So definitely, I think I would definitely, look at buying a small quantity now and wait for the Q1 numbers to come out. So I think net, yes, it's a structurally good positive story. Because going forward, I believe copper prices are going to rise further, and that would definitely help a integrated player like Hindustan Copper. But prices have got elevated quite sharply in a short period of time. So I would prefer to wait and buy on declines. But nevertheless, a small allocation can be made even at current levels. But obviously, buying on dips would be making a better strategy.
Okay, buying on dips indeed. Some of the stocks which have been highlighted as the fallen angels, if you will. And I wonder if Chandan Thapar, you have a view on Asian Paints as a trade. Chandan?
Yeah, so we have seen good recovery in most of the FMCG name in last couple of weeks. And in fact, Asian Paint has seen a V-shaped recovery after a decline of last 2 months. So I believe momentum could continue. In fact, the crude and the, recovery of the FMCG theme is supporting the sentiment. The good part is that decisive hold about 2500 could give a short covering trigger, because this level is coming after the long consolidation of almost 150 days. So I believe buying interest could be seen in the counter. Looking at the price structure, one can buy with support of 2450 for an upside target towards 2600.
So that's Asian Paints. Avinash, a quick view in terms of JSW Steel as well as Tata Steel. Both of them have reported a sequential decline. Though you have a JSW on a year-on-year basis is slightly better, marginal uptick on that one. How would you advise to play these two names?
So I think in the very near term, Hiral, one could expect a soft trend for both JSW as well as for Tata Steel. I think clearly we expect a better second half for these companies. Domestically, output is increasing, demand is also increasing, government is spending a lot of money on infra. So that is definitely going to boost up the domestic market for them. But I think globally, metal prices still continue to be volatile. So I think probably in the first half, one could not expect a very strong earnings kind of growth trajectory. Possibly in the second half, there could be a reasonably good bounce, but valuations seem to be reasonably attractive. I think somebody who wants to make a contra bet can definitely allocate some funds here. But I think you need to wait for the second half performance to come to see some positive trajectory in both these stocks.
There seems to be very little in the way of big movers, and I wonder if that will shift and change over the course of the first couple of minutes of trade. But something that is moving perhaps from the broader markets, Pfizer seeing a downtick of about 2.8% or thereabouts, Emphasis 1.8% lower at the start, Union Bank interestingly 1.6% lower, Sirma SGS is up about 2% on the other side. Chandan, any of these names stand out to you?
So yes, Sirma looks positive. In fact, we have seen a good run up from 500 to 627 in just 12 trading session, and it has been making higher tops, higher bottom. So I believe ongoing momentum could continue. One can buy with support of 612 for an upside target to a 650. So I believe Sirma could be one of the outperformer counter in this market scenario.
A quick pick. What is your top pick? Last 20 seconds, Chandan.
Yes, so I'll go with delivery, expecting next leg of rally in the counter. First target is 425.
Okay. Delivery is Chandan's top call. Target is 425. Watch out for that one. That's his first target, by the way. So keep that in mind. Maybe we'll talk about that stock post. It opens as well. Let's see if it opens with a start or otherwise. But here come the first trades this morning. And will it be a flat start like always? I think yes. Yes, it is. It's an absolutely flat start yet again today. Nifty IT, doubt it's moving too much. No. Mid caps and small caps, doubt they'll be moving too much. There is the pattern that is gotten formed these days. The markets just open absolutely flat. As Navjot Singh Sidhu says, flat as a pancake. Now, let's get the heat map up on the screen and see if individual stocks and the movements thereof. So, a minor reaction to pharma. We were talking about the reactions if they are sharp being bought into. There isn't a reaction. The top loser is Wipro, then L&T, then Tata Steel. Dr. Reddy's and Sun Pharma come much later. So therefore, there are not any dramatic reactions on any of the pharma names. Tata Steel, a bit of a reaction to its numbers. But even Stevens per se, so not too many losers. On the gaining side, HUL, Asian Paints, two stock reactions, presumably because of the Jeffries note, wherein they have said that they will double upgrade on HUL, on Asian Paints with a higher target price, and they maintain the buy on HUL as well. So two stocks reacting because of the Jeffries brokerage note. Shriram Finance is up. Cipla, in fact, in the green. A lot of India presence for Cipla, therefore, and you can understand that. Adani Enterprises, Maruti, Power Grid are some of the others. So no big news here from the center on the large caps at least, but for the fact that it's a flat index and it took a brokerage note to make two stocks move, Alex.
Absolutely, you said it. And flat as a pancake, I don't think that I would be able to do it in the kind of verve that Navjot Singh Sidhu manages. That is exactly what it is. And I would wonder whether the broader markets are also moving the same way. So let's pull up the mid-cap index. There you go. It's just about unchanged. Small cap index, let's pull that up as well. It's again unchanged. Pull up the sectoral heat map to see whether there are any big movers, and I would be surprised if there are. Okay, right at the top of the screen you have the India Defence Pack, which is once again gaining, but just about 0.5% or so. Remember, selectively you've been seeing instances of profit taking in some of these counters at higher levels. Pharma is doing reasonably well. It's up about 0.25% despite the threat of that 200% tariff. I guess if you've heard threats too many times, you will start to ignore them, at least in the short term, till something actually comes about. On the bottom of the screen, you have the realty pack, and I would probably assume that a couple of these stocks are reacting to quarterly updates, and we'll see that in just a bit. But you also have the IT index, which is losing ground yet again. It lost ground, if I remember correctly, on Monday. Let's talk about individual stocks, and I want to pull up Hind Copper right at the start. If copper prices go up, this is going to be a key beneficiary. And the initial uptick indicated that it was trading higher, but it has cooled off a tad bit from that, now trading with gains of less than 1% or so. Let's pull up CMEC and see where it's moving. It's secured a 39 crore order, not the biggest one. It's down about 0.8%. Supreme Industries, 54 crore order. These are small orders, and in this kind of a mood for the market, not really likely to move the needle. What else? Among the newsmakers, you have Bajal Projects, capacity addition to 1.1 lakh MTPA, and this is clearly a big reaction. Bajal, one of the stocks of the day so far. NTPC not moving too much. It has commissioned a 250 megawatt pump storage project. JP Morgan, Neeraj said perhaps a little bit late to the party on some of these EMS players, but then there clearly is a move on Sirma. Dixon up about 1% or so, but it has been moving in the recent past, remember that as well. Somit spoke about it today on Heard on the Street, and Keynes is up about 2% or so. I wonder if Amber is moving. If we can pull up Amber, we'll see that if we can later. Beyond that, let's talk about Signature Global on the downside, because this is something that was a bit of a concern. You have an uptick of about 0.8% despite a downtick of 15% in the pre-sales numbers. So the street seemingly looking through that. Union Bank, wow. So this is a big one. We pointed this out to you. The advances growth not very much, but more importantly, the balance sheet seemingly shrinking on a quarter-on-quarter basis, and that's something that the bank is going to have to explain. Varroc Engineering moving lower about 1% or so. It has gotten a $66 million arbitration order from the international court. Not too much of a mover. Let's check Amber. I had pointed that out. It's not moving too much, just about 0.4%. The biggest casualty seemingly here today is Union Bank of India, and on the upside, Bajal seems to be doing reasonably well.
The Union Bank is what is hogging the limelight, and HUL, it's the second day where you're seeing some strong gains coming in there. HUL, yesterday there was a positive brokerage note as well, and today again that has added on. IT has been under pressure. Varun Beverages is another one which is seeing some good moves in today's session. Pharma, what's interesting it seems is that the sector seems to be now vaccinated against, Donald Trump, and that's what it comes across like in terms of the sector. Aurobindo is up in trade. It's just a Pfizer. Yeah, it's just a Pfizer that has been trading under pressure. So I think Pharma seems to be a sector that we should be focusing on as well. Let's in fact also get in Aditya Khemka, fund manager at Incred Asset Management. Aditya, good morning and welcome to NDTV Profit. Always a pleasure to speak to you. Do you also think that pharma as a sector is now vaccinated against not Trump, not the tariffs, but Trump, taking into consideration the way things are moving 200%, 1.5 year? How are you looking at it?
Yeah, good morning and thanks for having me. No, I couldn't agree more. I think the sector is definitely not, vaccinated when it comes to tariffs, but it is definitely now seems immunized to what Trump is saying. I think pharma has now become a part of the taco trade. Trump always chickens out trade. So I don't think investors are now going to react to any more threats. As your colleague anchor also said, once you have heard a threat too many times, you stop reacting. I think that's where we are today in pharma.
Aditya, to take that conversation forward, hi, morning, Alex here. I'm just wondering whether these dips, if any, and today are not seeing any, the stocks are mostly higher, but dips, if any, would be buying opportunities considering that you've seen a little bit of an easing off in some of these prices.
Yeah, so look, buying opportunity is not at a sector level, it's always at a stock level. So there are stocks I'll be happily buying even at today's prices or even 5 or 10% lower, obviously. And there are stocks which need to correct 30-40% before I can even think of buying. So when you say, dips, the counter matters because pharma, as you know, has multiple buckets into it. So you're not definitely gonna say that, you can buy anything and everything at a correction. You need to be stock specific in pharma.
Where are you focusing then, Aditya? And I wasn't meaning to ask you about a sector buy as a whole, but where would you be focusing?
So today I'll be more focused on domestic pharma. I'll be more focused on CDMO companies, which do a large part of their business with innovator big pharma companies globally. And I would also be focused on hospitals and diagnostics focused on India. So I'll have less inclination to buy companies that are selling generics into US simply because the economics of that business currently doesn't work out to be value accretive for the investor.
Well, Aditya Khemka's views now are translated well. He doesn't like these US generic exporting companies, but more domestic focus and more the other aspects of the healthcare space. But Aditya, just wondering, now I'm trying to understand the negative here, that if indeed, I mean, the threats are over 1.5 years away, but he might keep on saying things in between. And if indeed there is a higher form of tariff coming in, does it reinforce your negative view fundamentally as well, that these stocks, if they are in the portfolios, should be maybe replaced with other forms of healthcare investments?
So just let's hypothesize, because this is a hypothetical question.
Agreed.
So hypothetically, there are two ways this can play out, right? Number one, let's say Trump imposes a tariff, 10%, 25%, 200%. God knows what percentage he'll end up imposing. So hypothesis one, he imposes the tariff. A part of the tariff has to be absorbed by the manufacturer, and rest of the tariffs have to be absorbed by the consumer in the US or the insurers in the US, whoever ends up paying for it, right? In which case, obviously, all of these stocks are a sell because their margins are already thin in the geography. And then if they further sort of absorb any part of the tariff, then the profitability is going to further go down. And that's going to really, really hurt the stock prices and the financials that these companies report, the cash flows that these companies report. So that's hypothesis one. Hypothesis two, if I were to just turn the entire story around and say that if they impose such high tariffs, nobody will be willing to sell to the US market if they are asked to absorb any part of the tariff, because they're already at very low profitability. So if they stop selling, then you have a shortage situation, and then drug prices will actually go up. And then some of these generic pharma companies will actually benefit from higher drug prices. So hypothesis one, hypothesis two, I don't know what will play out because it's just such a hypothetical situation at this point. My simple input is that when we as fund managers look at stocks to invest in, we look at a risk reward, right? Now, the fact that the Trump has been harping on this, and it will probably continue to harp on this for the next year or so, increases my risk in the stock. But has the reward in the stock gone up? The reward in the stock would go up if the stock were to correct by 10, 20, 30%. That just hasn't happened. So my reward hasn't gone up, but my risk has. So it just makes sense to avoid it at this point.
That's such a nice way to put this, and Aditya, trust you to do that. So great, thank you for agreeing at such a short notice to speak to us, Aditya. But this just encapsulates the actual impact or the possible impact of this so well. The risk has gone up, the reward hasn't, and therefore, why would you want to take that chance with the generic makers? Appreciate your time, Aditya. Thank you so much.
Thanks.
All right. Well, that's Aditya Khemka, and 5 minutes. The conversation tells you everything that you want.
And I think you've been able to do that with both copper and pharma, to the point, whether an impact, no impact,
and who gets
or
impacted.
Status quo, right?
And with the right people.
Absolutely. I think just one quick highlight, Neeraj, in terms of Lupin, is the reason why the stock is up right now as well, because they've entered a commercialization agreement with Zentiva, that is for one of the biosimilars. And the way they will do this is where Zentiva will make a non-refundable payment to Lupin of around $50 million on the regulatory milestones, and an upfront fee of around $10 million upon agreement execution. The profits from the defined markets will be shared between the two companies. And if you talk about the opportunity size with regards to the drug, it's around $2.2 billion in 2024. So that is one of the other reasons why Lupin is also up around 1.5%.
Chandan Taparia, thank you for staying by, but couldn't let you go without talking about 2 or 3 things. One, of course, pharma. And then, of course, we'll talk about delivery, simply because there is also a Motilal Oswal fundamental coverage note that has come out, and so would love to know about that too. But and therefore your view whether you're buying that or no. But first, a view on pharma, because some of those stocks are actually doing better than what the street might have believed.
Yeah, so Nikunj, Pharma has the mixed set of cues. If I look at the Lupin, the upside seems to be kept trading below key moving averages. Glenmark is one of the strongest pharma, and I believe it could be the buy on decline. However, we have seen a corrective move in last 2 days, but any decline towards 1780 could be bought in Glenmark. If I need to talk about Syngene, I believe again consolidative move is clearly visible. So one has to be very selective in the pharma. If two picks are required in pharma in terms of relative strength and buy, then two name will be one will be Glenmark, second will be Divislip. And now to on comment on delivery, yes, positive on the technical and the fundamental both. Technically, we have discussed and given the target of 425 kind of level. And talking about our initial coverage, we believe that scale is going to be built with the speed, and this stock has potential to rally by 15-25% on higher levels. So with that view, we have positive stance on the counter. Looking at the change in the fundamental stance and the revenue growth of 32%, we are expecting the positional target of 480 as per the fundamental. But on immediate basis, I believe 425, 430 could be hit on the counter.
Splendid call, by the way. The stock started off flat, 411. It's 1.88% higher. If you got in, you're already in the money. Chandan Taparia's target are 425, 430 on an immediate basis. Remember, the Motilal Oswal view on this one is a lot more constructive. They believe the stock could actually do much better, and their targets are maybe much higher, 479 or something like that.
480,
so 480, right? Yeah.
Oh, and so it's an initiation, right?
Initiating coverage, target 480, 17% upside. So, well, keep an eye out for this one. Chandan, anything else that you want to highlight very quickly before we let you go?
Yeah, so I think we need to focus on ITC hotel and selective hotel companies, which already I've discussed. And I believe FMCG name could be in focus because after a long time, such name are on radar. So counter like Hindustan Unilever, Godrej Consumer Product, these might see some uptick, especially when market has been moving in a range and pharma is getting concerned because of the global comment. So I think FMCG could be again on radar in the Indian market.
What about real estate? Would you avoid this? I'm specifically asking about a company like, for example, Godrej Properties, which is down about 1.5%, 1.6%. Phoenix, by the way, is losing quite a bit of ground today, 3% or so lower in trade today. And most of the constituents of that realty index are lower. Chandan?
So yes, Nifty realty counter have seen some consolidative in last 4 days, but overall from last 4 weeks, it has been making lower top, lower bottom. If I do a comparative analysis, I believe DLF could be one preferred idea in terms of technical setup. However, it has seen a corrective and consolidating move in last 5 days, but it seems that 820 could act as a major support to drive this swing towards 880 kind of level. So to compare all, I believe DLF could be the preferred idea. On reply on Godrej Property, multiple supports are visible near 2240, but requires a hold beyond 2315 to get some short covering trigger in the counter.
Okay, Chandan, leave it at that. Thanks much for taking the time out and being with us. All the best for the day ahead. And it's an absolute delight to welcome in our next guest, a global thinker, thinks of economies, thinks of the economic impact across the Asian landscape. Chetan Aya, Managing Director and Chief Asia Economist at Morgan Stanley, joins us on the show. Chetan, such a delight talking to you today. Thanks for taking the time out. Hope all is well.
My pleasure. Thank you for having me.
Well, I wonder if too many people can talk about pleasures these days, Chetan, considering that the news flow is so heavy from maybe the junction where you live in. And the interesting part is that now the news flow is coming with time extensions given in advance, as Donald Trump did yesterday. But how do you think of all of the developments in the last 3-4 months since Donald Trump has gone on this overdrive of making announcements, and gauge and hypothesize the economic impact on impacted countries, if you will, particularly in the Asian region?
Look, I think for the longest period that this trade tension story has emerged, what we have been highlighting is the most important implication from this development will be on corporate confidence, therefore corporate capex, and onwards to Asia's growth as well as trade outlook. So we still pretty much stick to that story. We've seen hard data points holding up as of now, but that is to be expected. And we'd seen that happen in 2018-19 as well. Initially, as tariff was being imposed, we did not see much impact on trade numbers or capex numbers. But after a period of 5 months, we began to see that impact come through. And we are building in something similar in terms of our growth forecast trajectory in this cycle as well. So I would say watch out for the damage that this trade tensions does to corporate capex and regions growth. It's still in the pipeline.
Okay. So Chetan, one would understand that corporates would be a bit skeptical about taking large-scale capex decisions, and therefore, would the baton of growth fall in on enhancing consumer spends as well as government capex in almost all of the Asian economies? Would that be the recipe, you reckon?
Yes, that's true, but it will be difficult for everybody to offset that kind of a growth slowdown that will emerge from this private capex as well as trade with just the government spending. Look, as far as consumer is concerned, it's going to be hard for consumption growth to accelerate in an environment where capex results into job growth slowdown and therefore income growth slowdown for the households. So the only real offset that can be provided is with the government spending.
Okay. Chetan, good morning. Hiral on this side. My question coming to you is, the recent capex details that did come in the month of May are clearly telling you that India's private sector capex is at record high levels. How does this fit in terms of your analogy? And secondly, when you're expecting Asia's GDP to grow at a pace similar to 2018-19, the ramifications you saw then, and how are you relating it to the ramifications that could come in now?
So for India, the private capex number that you mentioned, that's the trailing number. What I am highlighting is that there will be a challenge to the private capex story. Even in India, yes, there are policy reforms being taken up, and therefore we should see India's private capex doing better than other parts of the region. Also, at the same time, India is less exposed to global goods trade cycle. So India should outperform other Asian economies as far as private capex is concerned. But there is still going to be some downside that even India will have to face on private capex as goods export slows down. And then on the second question that you had in how we are thinking about it, I did mention at the start that the framework that you have to keep in mind is that what trade tensions does is it affects the corporate confidence to invest. What happened in 2018-19 is that, once you take the decision to not to take up new investment, it takes about 4 to 6 months before numbers begin to show that hard data points. Because in the initial period, you would be completing your past projects that you would have announced. But as time goes by, you will begin to see the impact on economic numbers with new investment decisions not being taken by the corporate sector. If you just think of it like any company in the US, if it was to set up a new factory, it would have to then think about what material is going to be sourced from which country. But currently, with the way the tariff decisions are, it'll be hard for them to go ahead and make that investment decision. And so that's what will then filter through to global trade. And then correspondingly, we are going to see that in Asian corporate sectors decision making as well, that they will hold back the investment decision. And so you will see an across the board capex slowdown. That's what will then eventually show up in hard numbers.
Got it. Okay. Chetan, so yeah, would you reckon that what's the antidote to these growth challenges? Because it doesn't seem like the news flow and the actions from the US will change. They seem to be a regime that is looking at higher tariffs for multiple reasons. So if that isn't changing, what's the antidote to this?
So, for Asian economies, it's hard to really be able to offset this downside. They'll have to take some pain on the growth. But what they can do is to take up this domestic demand stimulus, which can come from both fiscal and monetary policy. Now, good news on monetary policy is that we are also seeing the dollar weaken. That opens up the room for Asian central banks to go ahead and take up interest rate cuts. As it is, because of the fact that there has been a slowdown in China, we've seen inflation coming off across the region. And now this trade slowdown will further bring deflationary pressures in the region. And so central bank will have the leeway to go ahead and cut interest rates, which we have seen. Central banks in the region are beginning to do that, but they can do more. And at the same time, we will see that governments will have to do some fiscal policy stimulus measure. So that will then additionally help defend this growth slowdown. I think the problem for everybody, and we've seen that live in India as well, that post-COVID, public debt to GDP shot up, fiscal deficit had gone up. So governments around the region are not very confident to go ahead and take up big fiscal expansion. And therefore, we have been highlighting that heavy lifting will have to be done by the monetary policy as far as defending growth slowdown is concerned. This is slightly different for China. For China, we think that fiscal policy is going to do more heavy lifting because they are already running very low interest rates. But for Asia ex-China, including India, we think monetary policy will have to do the heavy lifting.
Okay, so Chetan, then can I focus a bit on India based on what you just said? So one, the new RBI and the monetary policy stance that it has taken and the moves that it has done. Part one, is that a shot in the arm? And two, the case for India, because there is a large dividend that has been given to the government, the GST collection thus far seem to be okay. Does the government have the wherewithal to continue with the government capex in the way it has, maybe try and spur consumption a bit and still be on track for the fisc glide path that it has laid out for itself? And the final encompassing thing is all of that enough for India?
Yeah, so we think monetary policy is definitely on the right track. We've seen that the RBI took the bold decision to cut interest rates by 50 basis points. We didn't expect it, but we think that was the right approach. And we expect more. So I think monetary policy is on the right track and it's doing what one would expect to defend the growth slowdown. As far as fiscal policy is concerned, look, I think the government has already been, if you look at the first 3 months data for this financial year, capital expenditure is growing at about 35% average. So that's pretty strong. And we think that the government has the room now also because oil prices have fallen back again. And that can open up the room for managing the fiscal policy better because the government can increase some excise tax revenues. They've already done one round and then use that to ensure that they have enough funding available to do extra capital spending to defend this growth slowdown. At this point of time, we haven't heard many governments talk about taking up active expansion. But eventually we will see that more governments will talk about this because there will be that support that will be needed, and everybody is just waiting for growth data points to actually come through. At this point of time, since growth has not slowed anywhere meaningfully, we have not heard much. But I think as growth data point slows, you will see governments talking about taking some fiscal support measures. And at the same time, we think central banks will also act in a more aggressive manner.
Chetan, so let's, talking about Asia and putting India into perspective out of this, you have been looking at the way Asia-US growth differential has been improving as well. I think, if I'm not mistaken, 35th consecutive year where you're running a current account surplus, right? Taking that into consideration, if you're expecting Asian currencies to see an impact given the weakness in US dollar, where do you place the Indian rupee, number one? And number two, from here on, would investments in India still be a better bet as compared to other emerging markets if you have to look at the China plus one strategy as well?
Yeah, so look, I think the dollar has been generally weak, and our global macro strategy team expects the dollar to weaken by another 6% by May of next year. And we expect that something that will basically result into a situation where all the currencies across the world will appreciate against the dollar. We expect euro and yen to appreciate a lot more. And as far as Asia is concerned, DM-like currencies, which is DM-like emerging markets in Asia, will appreciate more. And the EM-like currencies will appreciate less. So India falls into that last bucket. And we're expecting India to INR to appreciate by 3% by May of next year, 3.5%. And something similar will be the case for other EM-like Asian economies like Indonesia and Filipino peso. So yeah, that's the view we have as far as the currency is concerned.
Right. All right. Thank you, Chetan, so much for joining us on the show. Always a pleasure to speak to you and get your perspective in terms of what everything means for the global markets and in turn for India as well. So that was Chetan Nair from Morgan Stanley. But very quickly, let's just address the flashes at the bottom of your screens where Tamil Nadu CM M.K. Stalin has intervened in the battle between the Maran brothers. And the Maran brothers have agreed to truce after TN. Tamil Nadu CM has spoken with them about the same. On the back of which, if we can just quickly have Sun TV on the screens and see what the stock is doing in trade, if there is any positive reaction that comes in on a Sun TV. No major reactions. It has cooled off slightly, but 0.8% higher with regards to Sun TV. But moving on, Union Bank of India has reported a disappointing start to the fiscal year, and that's coming across through the business update that they've given in for the first quarter, which is showing a sequential decline. Harsh is standing by to get us more. Harsh, what are you picking up?
Well, degrowth, both with regard to deposits and advances, not looking very impressive, right? And it's not like the base was too high either. When you're looking at the YOY numbers as well, we're seeing roughly a growth of 4% on the deposit side YOY and less than 7% growth on the advances side. So a degrowth QOQ, a growth which is maybe mid-single digit on a YOY basis. Neither of those looking too impressive. When you're looking at the CASA as well, 5% degrowth on the CASA ratio, on the CASA absolute number on a QOQ basis. Again, not looking very impressive, even from a current savings account growth perspective. So none of those numbers really looking impressive, and therefore that reaction that you're seeing on your screen.
Right. So that's with regards to Union Bank of India, 4.5% downtake. In fact, you have Crisac, which has listed as well. It settled at around 281.05. That's on NSE versus an issue price of 245. That's the pre-open rate that we're picking up with regards to Crisac. 280 is where it's settling at in terms of BSE as well. Just 280, 281. So uptick, a premium to the issue price is what you should be watching out for in terms of Crisac. But moving on, This is the curious case of SML Isuzu. The stock continues to rally, and this is what is puzzling the street. Now, since Mahindra & Mahindra announced its acquisition of the company in April, the stock has surged a whopping 79%, and this is despite a lack of any major fundamental trigger. My colleague Puneet joins us with more. Puneet, if you could help us understand, in terms of the offer price versus the kind of uptick that you've seen in terms of the counter, a 79% after the acquisition was announced, with no particular fundamental triggers backing this 79%, how do the dynamics change for a shareholder of SML Isuzu, and what could probably happen with regards to the open offer pricing as well?
Well, thank you for that. So it's definitely very curious in terms of the sharp share price movement, because we're almost up 80% from when the deal was announced. So the M&M announced that this will be the open offer price, 1,590 rupees per share. They've actually acquired the company from its promoters at 650 rupees per share. So that is the key difference. And from those levels of 650 on April 28th is when they announced the acquisition, to almost 2,915 rupees. They've already made 4x of their investment in just about 3 months. So that is the three key price points that you need to know. 650 is where M&M acquired from promoters of SML. The open offer price almost 1,590 rupees per share, and the current price of 2,112. When you look at the share price, we specifically addressed this as well. It's 4x of the acquisition price and almost 2 times the open offer price that the company had announced in the end of April as well. But what has happened in the last 3 months for this particular rally of 79%? Well, nothing really. What's actually happened is that the companies come out, reported results that were largely in line. So they have reported a 13% growth in terms of revenue. Margins were also largely stable, almost up 190 basis points to come in at 12%. So nothing out of the ordinary. But the volumes have also risen and keep in pace with the revenue growth of the company. And M&M has received a CCI approval for this particular acquisitions. But that's the case, that this 80% rally currently does not have any kind of legs on, at least on the fundamental basis. What's important to note in that the CCI approval came in middle of June, and since 24th of June till 9 July, the share price is up almost 60%. So those are some of the key aspects for SML to know about. But the next part is, what is M&M's plan with SML Isuzu going forward, and what led to this acquisition? Now, M&M largely operates in the 2 to 3.5 ton trucks range, and the weight is important because this is for fleet operators who buy trucks in bulk. So these are generally sold, at least M&M's current product portfolio is between 2 to 3.5 tons, and that's a huge market for them. But SML largely operates in a 6.5 to 9 ton range. So this is a new product category that they get with ready products and can address the market directly. So it makes all sense for M&M to acquire this one. With this, their current market share is 3% of the overall tonnage space in the truck space. With this acquisition, that will increase to 6%, and M&M has plans to increase this to 10 to 12% by FY31 and almost up to 20% by FY36. So they have long-term plans to capture 1/5 of the commercial vehicle market with this particular acquisition as well, and that's going to be one of the key positives. Finally, the key question for all investors: will M&M actually revise its open offer price to the current market price? Now, they don't have any kind of compulsion for this particular revision, so that will be something to watch out for. But if you're an investor in SML, you've seen the current market price of 2,900, it wouldn't actually make too much sense for you to sell it at the open offer price to its shareholders. So it could be a case that the shareholders will refuse to tender in their particular share as well, and M&M will likely spend less actually on the acquisition, which was expected to be around 1,100 crores. They've already paid 555 crores to the promoters, so they might actually spend a lot lesser compared to what they were planning to, at least in terms of the open offer price announced at that time as well. Now, key aspect is who are the current promoters as well. Sachin Bansal is one of the key ones. He was a co-founder of Flipkart. He owns almost a 19.4% stake. But it's important that there are no mutual funds, insurance companies, FIIs or DIO holdings in SML, because it's only a 4,000 crore company as well. Finally, what's next for you as an SML Isuzu promoter. The open offer dates are yet to be announced, so that will be something to watch out for. The CCI approval came on 17th of June, so it shouldn't be that far away as well. The 12-month forward price to earning multiple for SML is right now at 49 times price to earning versus the last 2-year average of 31 times. And that's largely because of re-rating, because of this acquisition. But retail investors and minority shareholders should stay cautious of this up move. You could get caught on the higher end of the price range, but nonetheless, for M&M and the shareholders, it's a very good accretive acquisition in terms of both business as well as valuations. But for retail investors of SML Isuzu, caution is needed, at least for now.
Okay. So I mean, this is a very interesting, thank you Puneet for that, Neeraj, because clearly if you see the up move and if you see the open offer price, the question will be, one, will the shareholders tender to the open offer or not? Will M&M have to go ahead and change the open offer price? Because see the up move, 79%, and the open offer price is way below that.
Yeah, certainly interesting. Well, so great piece of research, Puneet. Now I'm gonna request you to set up the next conversation for us, Puneet, and that's Belrise, right? Jeffries, I mean, recent listing, brokerage coverages have started. Puneet, just tell our viewers the importance of talking to Belrise now.
Well, thanks so much for that. So it's definitely a very interesting one because the IPO price was 90 rupees per share for this auto component maker. Yesterday we saw a 10% up move because of what, initiating coverage report from Jeffries on the stock. But they are in the auto component space. They have almost 24% market share in the product space that they operate in. They largely make chassis and exhaust system amongst other products. But the current aspect is that 67% of the company's revenue come from the two-wheeler space, and Bajaj is one of the single biggest client with 40% of the revenue. So the key question will be if they are looking to diversify. The other aspect is on components for four-wheeler space is something that they're looking to enter. They've already entered with one of the acquisitions, the H1. How much is the aspect in terms of building up that business? That will be one of the second questions that I would want to know. And thirdly, in terms of the trading business as well, it's 20% of the company's revenue, but not too much, at least contributing in terms of profits as well as valuation. So that business, what is the future of that business as well? But overall, it's a stock which is currently valued extremely favorably at 18 times price to earnings compared to the other auto component makers. And in terms of business performance as well, it's going to be very interesting to follow this through over the next couple of quarters as well.
Okay, let's get in Mr. Sumed Badwe. He's promoter of Belrise Industries, joins us right now on the show. And it's good to be a promoter at any point of time, but good to be a promoter of a company which has had a good listing and is being appreciated by the street as well. So Sumed, great having you. Thanks so much for taking the time out. Just tell us a bit. I know we've spoken just before your listing, etc. But for people who are tuning in right now and want to know a bit about Belrise because it's a recent listing, just tell us in a nutshell, what do you do?
So we manufacture automotive parts and components across two-wheelers, three-wheelers, passenger cars, commercial vehicles, and agri products. We mainly work in the sheet metal space, but from an end-to-end value chain perspective, right from raw materials to not only processing all of that, but also to assembly and working very closely with our OEMs. We're transitioning from a traditional tier 1 supplier to a tier 0.5 supplier, where we're even more deeply entrenched with our customers, which are the OEMs. So that's largely what we do in the sheet metal as well as polymer as well as other proprietary product space.
Interesting. I haven't heard too many people talk about this phenomenon, but if you are transitioning to a desire to be a 0.5% supplier, or probably already there, so would be competition, right? Is it a hyper competitive space right now to become the 0.5% or 0.5 tier supplier with an OEM?
I think it comes with a lot of trust. It's built on a legacy of having worked with OEMs over the past, multiple decades. And ultimately, when you're getting that deeply entrenched with an OEM, the customer essentially wants you to be an extension of their facility. So from a competition perspective, I would like to believe that it really depends on what kind of a valuation that you can do and what kind of relationship that you have with customers, which we believe we're at in one of the top few. So we wouldn't like to say it's very competitive.
Sumit, good morning. Hiral on this side. Now that you're expanding into the four-wheeler space as well, how is that revenue contribution expected to pan out between two-wheelers and four-wheelers? And in turn, if you have to see in terms of the product profiles, how do you see profitability and margins being impacted?
Gotcha. So right now, our four-wheeler contribution is in our revenues is fairly small. It's only about 12 to 13%. As you know, in the automotive component space in the industry, about the two-wheeler industry versus the four-wheeler industry is about 3x the size. So there's a large opportunity for growth. We have capitalized as our economies of scale and achieved a market leadership position in the two-wheeler industry. We would like to believe that we can replicate that in the four-wheeler industry. The four-wheeler industry is looking very promising. There's an upward mobility across socioeconomic strata in India. The two-wheeler our two-wheeler buyers are now moving towards four-wheelers. And from that perspective, we believe there's a large opportunity to grow in that space. We've just completed an acquisition of this company called H1, which is owned by a Japanese parent called H1 Japan. And we've expanded our foray in the four-wheeler industry, and we believe there's a large opportunity to grow there.
Okay. Sumit, very quickly, if you could give me a response to one of the brokerage notes which had indicated that any simplification of the Belrise group structure could potentially boost valuations further. If you can dwell on that as to what is the kind of simplification that could be expected.
Correct. So we have some of our dedicated suppliers, which are group companies, who are looking to simplify that structure, get it under one roof, and we expect that to happen in the next in due course, and that simplification is probably what it's referring to.
Okay, so that's the simplification you're watching out for as well. From here on, if you have to look at 2 or 3 years, say 3 years from now, what's the CAGR growth that you're expecting in terms of top line and bottom line?
So we would like to believe that I'll give you an approximate we expect to grow in the mid-teen space with stable margins. That's what we'd like to comment.
Okay. Sumit, I have a couple of questions more, but just stay on. Because you are recently listed, you will understand the importance of a listing day, right? And we have somebody like that just listing, so we'll just mark that and then come back to you. But Hiral, interesting.
Yeah, interesting one in terms of Crizac because of the kind of subscription it has got. 86 times you're watching out for. You're just around 40 seconds away. It's a new kid on the block. If you talk about Crizac as well, a proprietary technology platform which is making it an asset-light company. It has long-standing partnerships, I think, with over almost 150 to 170 higher education institutions globally and a debt-free company. The only weakness you can look at over here is that its revenue contribution is majority coming in from the UK. So around little over 90 to 95% is UK concentrated. And top 3 global institutions account for almost 70 to 85% of the revenues. So let's quickly look at what that listing number looks like as compared to the issue price, because that is what we will be eyeing right now. Revenues, again, around 8 to 9 odd crores is what you've seen, 14 to 15%. So that's a strong listing as compared to the other companies that you've seen as well. Lists at a premium 282 as compared to the issue price. 15-16%, Neeraj, a strong 100%. And I think that 86% oversubscription, 86 times subscription clearly told you the deal.
Yeah, had this been doing, remember viewers, in 2024, this 86 times over subscription might have led to maybe a 30-40% uptick.
Yeah, but as compared to the recent ones, I think, it was single digits, right?
Completely.
So 14-15%.
No, this is healthy considering all the listings that we've seen this year.
But you know how it pans out over time, whether people are looking at listing gains or a long term is what you need to watch out for, because the weakness is clear. UK, 95% revenue contribution. Your top 3 global institutions account for that 70 to 80% of the revenue. So any of the deals that go away, you see a disaster there.
keep an eye out for this one, 15% and counting. We still have Sumedh Badwe with us. And Sumedh, one final question. In a brokerage note that came out yesterday on your business, they've given some assumptions which you kind of corroborated. So I'm not going to question that at all. But one thing that they mentioned, that any simplification of group structure can boost further valuations. Now, Hiral asked you about it. My question to you would be that if you want to do it, are you prioritizing that in any fashion whatsoever in order to do this? And are there any timelines with regards to that?
So we are definitely prioritizing it. We have some internal timelines, but I think it should be fairly soon. That's as far as I can comment.
It was important to get the timelines going, and that's why I just asked you this question, Sumedh. Well, all the best, and look forward to talking to you post your numbers as well.
Most certainly. Looking forward. Thank you for your time today.
All right. Need to slip into a very quick break. Back with the big voice, S. Naren, on everything about markets. Stay tuned. We'll be right back.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations?
Welcome back. You're watching India Market Open. Let's quickly look at markets, what they are doing. You had opened absolutely flat for the benchmarks as well as in terms of broader markets as well. But you're seeing some mild recovery from the day's lowest levels, but still 25,500 is where you're trading at right now on Nifty 50. Let's pull up Bank Nifty. IT was a sector that was under pressure. Let's see what that is doing in trade. And you had the pharma and the metal pack also that were in focus in today's session. IT ahead of the numbers that will start trickling in this week. 0.5% downtick. Nifty Pharma absolutely insulated. 0.3% higher. Metals is under pressure. 1% downtick, and this is on the back of Tata Steel, JSW Steel, both of them that have been reporting a weak set of numbers. Hind Copper is now taking a beating as well. If you can just have that one on the screens. Hind Copper also trading near the day's lowest levels with cuts of around 3% coming in there. But moving on, in a significant development from Tamil Nadu, sources confirm that Chief Minister M.K. Stalin has successfully mediated a truce between the Maran brothers, ending the feud over the Sun TV network. My colleague Vishwanath Nair has the exclusive details. Vishi, over to you.
Right, so what's happened here is that the brothers, the Maran brothers, Dayanidhi and Kalanidhi Maran, have actually likely entered a truce after a lot of discussions that happened last month. Essentially, what sources are telling us is that Tamil Nadu Chief Minister M.K. Stalin has actually intervened in the matter and mediated this truce between the two brothers. In fact, Kalanidhi Maran has agreed to extend more shares in Sun TV to Dayanidhi Maran, because that was one of the points of contention between the two brothers. others. Details of this specific deal are not yet available. Those will become clearer as time goes on. But this is an important development, considering that this was becoming a big political as well as a succession issue as far as one of the largest television networks in the country is concerned. Now, if the agreement is finalized and it's a share is transferred to Dayanidhi Maran, then we'll need to see how the shareholding of Sun TV changes. But of course, this is for later.
Okay, thanks a lot for that, Vishy. That's an important piece of news, not moving the stock, remember though, keep that in mind. Now, all that sparkles is not gold, and all that is a buy rating doesn't translate into a gain. A whole host of stocks have a buy rating, but not too many gains. Somit has a detailed analysis. Somit, very quickly.
Well, yes, there are around 6,200 companies that are listed in India, but only 317 have analyst coverage of more than 10. Now, out of these 317 companies, there are 12 companies where all the analysts that are covering the stock have a buy rating. But of these 12 companies, 5 of them have given a negative return so far on a YTD basis, despite the fact that all of the analysts that are tracking the company have a buy rating. So, which are these companies? First on the list is Piramal Pharma, which has fallen nearly 24% on a YTD basis. Then it's REC, down around 22%, Suntech down around 13%, PFC down around 8%, Jindal Stainless down around 3%. Now, these companies have nearly 12 to 14 analysts covering the stock, and all of them have a buy rating, and despite that, we have seen such kind of a downtick on a YTD basis in these companies. However, if you look at the return potential, for Piramal Pharma, it stands around 30%, REC around 37%, Suntech 39%, PFC 25%, and Jindal Stainless 9%. So here's a look at what led to this downfall in the share price of these companies and what's the outlook going forward. Firstly, when it comes to Piramal Pharma, what's been dragging Piramal Pharma, it is the weak set of numbers that came in, the conservative guidance that the company has given, and the US tariff concern that has been dragging the share prices. But on the positive side, the cheap valuations, the company trades at a 60% discount compared to its nearest peer. The fact that company could see a potential rebound in FY27 earnings, and the growing product pipeline is keeping analysts bullish on Piramal Pharma. When it comes to REC and PFC, what led to the underperformance? Firstly, it was the weak outlook on loan growth, higher prepayments that remained, higher prepayments and higher asset provisioning on discoms that are seeing rating downgrade led to that has been dragging the share prices for both these power financiers. But on the positive side, it's the fact that cheap valuations are continue to remain cheap for these companies. They aim to have a net zero NPA by FY26 end, and the uptick in thermal capex is something that is keeping analysts bullish on REC and PFC. When it comes to Suntech Realty, the fact that the second half of financial FY25 was a weak set of numbers. In fact, Q4 revenue, EBITDA and PAT declined more than 50% is something that has been dragging the share prices. Apart from that, the cash collections has been lagging pre-sales, which means that cash collections have been muted, is also something that has been weighing on the share prices. However, on the positive side, the strong launch pipeline, given the fact that their gross development value for FY26 stands at around 8,300 crore, and their asset-light model is something that has been keeping analysts bullish. And lastly, when it comes to Jindal Stainless, why the company has been underperforming, the fact that there could be a potential dumping by China amid the lack of duty protection that we are seeing currently is something that has been weighing on the share prices. There is lack of visibility on the export market growth, and margin decline is something that has been weighing on the share prices. However, on the positive side, analysts are bullish given the fact that the capital expenditure of the company will increase their capacity by nearly 40% by FY27. There is raw material security, and there could be less volatility when it comes to input costs going forward. And lastly, is cheaper valuation, and given the fact that company's volume is expected to grow at a CAGR of nearly 10% over FY25 to FY27 is something that has been keeping the analyst community bullish when it comes to Jindal Stainless.
Fantastic piece of research. Somit, thanks so much for doing this. And of course, we'll bring this to you during the course of the day as well. But on to a big market voice and the idea is to speak to S. Narain was about Jane Street impact, about what retail investors are doing, about what should happen to individual sectors or what could happen to individual sectors. Let's hear out from S. Narain, ED and CIO of ICICI Prudential AMC, who talks about all of this, starting with the impact on the Jane Street probe.
What has happened is a positive development for investors. Traders and weekly settlement don't make the market.
Perfect.
Investors make the market.
Okay. Has the Reserve Bank of India in the last 6 months taken steps which will actually help investors? Because I think it's been on an overdrive of sorts in trying to create liquidity, take so many good steps. What have you made of all the actions?
See, basically there was no problem with the investors. The problem is with the economy. And you needed to actually give a fillip to the economy. And liquidity was very tight. and India had very, very good macro. When you have a very, very good macro with very, very lower fiscal deficit, current account is in surplus, inflation is low, you had to get the interest rates down and make liquidity very, very comfortable, giving incentive for the banks and the other financial institutions to lend. So that's what the Reserve Bank has done. I don't think there was a problem on the investor side of the economy. I think equity market, barring 3-4 months, has been good over the last 3-4 years. So the challenge was to get the credit markets to actually lend. I think they've done all that they can on their side. Now the credit growth has to pick up. Credit growth can't be 9%. It is far too low. Yeah. We have to see that acceleration now. But have they done what is needed? They have certainly done what is needed.
And do you think, I mean, in your wisdom, because you've seen so many cycles, you think a credit growth upcycle is ahead?
I think so, but I think maybe a little bit of fiscal push is now needed for certain parts of the economy. I think there are people who are indebted, and in that part of the economy, maybe a little bit of push, I think maybe on the if they are able to do in the GST Council meetings, in the next few GST Council meetings, I think the combination of interest rate cuts plus a little bit of areas like, if they were to give some benefits to two-wheeler industry or some of the auto sectors, some of the FMCG sectors, if they are able to bring down GST rates, I think the combination will lead to a massive boom in the economy. When the entire world is slowing down, India will be one of the accelerating growth stories of the world.
Okay, so effectively some consumption-led push, you reckon, is required per se?
Not in all areas. It's not required, for example, in all the higher income consumer areas, because they're doing extremely well. It is only in some of the lower discretionary consumer areas that it is required.
Okay. Now, when you think of the market from the lens that you're thinking of, you've said that you prefer large caps over mid caps and small caps currently, I presume, which is why your schemes are closed for closing. But there is also this, with the valuations that we are at, re-rating is difficult. So will earnings growth be strong enough to take the markets higher, or do you reckon markets could consolidate or maybe correct in the near term, in the next 6 months, and while these moves take shape and take effect?
I think in the near term, it has become a story of flows minus supply. Okay. How much money we get minus how much supply is there in the market. So if you have too much supply and the flows are smaller than that, markets could correct. As such, if you look at valuations, you can have a correction. But if we keep getting big flows because people don't want to invest in any other asset class, markets can go up. On the other hand, you have supply, which is significant every month. So it has become, a market has become flows minus supply, and FIs are not very keen on investing very big money, not because India is a bad economy or a bad market. The rest of the world is so cheap compared to India that people are saying, should I invest in such a costly market? So they have not been investing big money. They are investing in other markets because the other markets trade at a fraction of India's PE. So that's why they are not putting big money in India. So it has become a market where market returns are based on flow minus supply. One month supply didn't come April. After that, markets went up. So immediately then supply has come. So this is how we are looking at the market.
And you reckon flows will continue based on your assessment, at least the domestic flows?
At this point of time, it is coming. But if returns slow down, actually it may have this thing. But we keep telling people asset allocation, but still equity is still the prime asset class for people. But we have to try our best, and we have to try to, because see, finally mutual funds are custodian of public money. When they make money, they are very happy. When I go to a social event, any of our colleagues go from the mutual fund industry, people are very happy. I have to tell them equities is a riskier asset class. No one wants to believe. They say that, why are you telling this? Don't say this. But we have to tell them, because on another day, I don't want to have a situation where people say that ICICI mutual fund did not give negative return. But we have to continuously tell people asset allocation, asset allocation, and asset allocation. And along with that, we do new fund offers in interesting areas, because we think, in new fund offers, we are not looking at peer funds. We try to run the fund as we want, and try to run the fund in the way we like, and hope we can run those funds in a more defensive way if needed. That's what we've been trying to do over the last 1 year. We hope that it works.
Yeah, certainly. Though wondering, RBI has done these rate cuts, right? And therefore, I wonder which of the asset class, as you said, Naren, is cheap enough to invest in. Gold is high, silver is high, everything is expensive. So, if you equities mein paisa nahi daloge, where do you put in money?
That is why, actually, if you look at it from a medium to long-term view, people have to condition themselves to a moderate return, first of all. And how to convince them, I just do not know. How to convince them that today even the risk-free rate has come down to 6.3%. So, and if you go and tell people what is moderate return, I don't answer them. I say that double digit is today 1.5 times the 10-year GSEC. People think 10%, what is 10%? I tell them equity can give negative returns. See, it's a very, very tough job. And honest truth is, if you look at the last 1 year, returns have been very moderate in equity. And despite that, people think equity gives very big returns. That is the irony of the situation.
Is it because the diversity of availability of sectors and themes, even if the Nifty is flattish or the Sensex is flattish, is very high? I mean, a lot of new sectors have gotten created in the last 3 or 4 years. Is the optionality value very high? Or is it just that the retail investors believe that what has worked in the last 4 or 5 years will continue to work?
No, I think after 2011, we have never had minus 20%. And till you have minus 20%, people will not believe me that equity has risk. People say debt has risk. That is the challenge, and that's why when I tell asset allocation, but we have managed to convince people, my sales team has managed to convince people, put money in multi-asset, put money in categories like balanced advantage. We have succeeded, and but I would still say this is not an easy task.
Most certainly. Having said that, a lot of people who are watching this would also want to know as Naren's view on equities by and large. So you've given us your broad view. Moderate returns expected, markets are expensive. You believe large caps are the port of call within equities. Just trying to understand, Naren, a lot of newer themes, the popular themes, one where the promoters or the companies are talking about strong growth, energy transition, EMS, platform companies, etc., are mostly not a part of the Nifty 50 or Nifty 100. A lot of the promising companies are probably beyond at least Nifty 50, if not Nifty 100, right? Do you feel that there will be pockets of strength even if the markets were to consolidate / correct?
See, today if you take, for example, this electronic manufacturing, you look at the valuation, they are already positioned for 4 years of growth. 4 or 5 years of growth, then you don't know. Suppose in the 3 or 4 years of growth there's a bad year. It's just not. See, the markets today, there are no easy pockets. In fact, over the last 3 to 6 months, we found oil and gas to be the best sector because no one was willing to look at it. And oil and gas did well in the last 3 to 6 months quietly because no one was willing to look at it. So, did anyone believe that oil and gas will deliver good returns? No one. Yeah. So the fact is actually the best opportunities today is coming out of stocks where people have got frustrated and they sell. Because every stock is discovered today. Every stock which people want to think about is discovered. So return is made today out of stocks where people have got frustrated, not delivered for the last 2 years, waited patiently, they sold the stock. We can make money out of those stocks. This is what is the easier idea because there is no stock which is not discovered in India at this point of time. Every stock, there are so many brilliant stock pickers in India today. They have managed to find it and invest in the last 3 or 4 years. So, but now today some of those stocks don't deliver. They wait 1 quarter, they wait 2 quarters, they wait 2 years. Then after that they get patient, they lose their patience and sell. Actually, people like us today are waiting for all these stocks where people have lost patience and they sell to us. Those are the ideas we get, rather than, new ideas.
And is it very bottom up or is it sector specific too? Are there sectors like oil and gas which are hated right now according to you?
It is coming across sectors, because in many sectors there are stocks where people have lost patience. It can happen in retailing, it can happen in sometimes in mid-cap cement, it can happen in every sector, it can happen in auto anchors. It is happening across sectors because you have to think about it. This is a long bull market. In that long bull market, there are people who have lost patience in some of the stocks. In fact, today the ideas are not new, the ideas are old, but that it is that old idea which has not worked, which is coming out as a good idea now.
Got it. So how do you then, and this is lovely, Naren, so lots of wisdom here. Just one thing, what is the new thing that you are doing? Because you told me that you are doing NFOs which are not benchmarked against others. I believe there is a factor investing or a momentum fund as well. I mean, tell us a bit about what is the new thing that you're doing in order to kind of generate alpha.
We were always known for value. So when we thought of momentum as an NFO, people were actually very surprised.
Exactly.
So, we obviously were the people who used to come up with the ideas first. But here, when we thought of price momentum, we didn't like the idea. But later we realized the momentum can be done through earnings revision. And earnings revision as a theme works very well. And it doesn't work like value. That's why I can't be a fund manager in it. But the fact is that you take something like a telecom where we bought early and we have cut some of our positions. In earnings momentum, what happens is you buy a bit late, but you hold on. Look at telecom, the kind of returns it has delivered at this point of time. Fabulous. But with a value orientation, what happens? You buy it early, but then you don't keep it till today. So you lost one part of the returns. So we said that earnings revision as a model and active momentum works. And that is the kind of idea. So, you have to come up with interesting late cycle funds. Because today we are in that late cycle kind of framework at this point of time, not an early cycle. In early cycle, you buy value and you will make money out of value. Today, there is no value in the market. Today, you are in late cycle. In late cycle, you have to do more interesting things like momentum, because that is the kind of thesis which works, because there are sectors which keep going up, because the earnings keeps revised upward, because the companies keep on continuing to do well. But if the companies stop doing well in an active momentum kind of fund, we will sell it off. That is the kind of framework we believe in. So we thought we should do something interesting. So we first came up with a minimum variance fund, which was actually a different type of fund. Now we've come up with an active momentum fund. Because along with, people are bored hearing asset allocation from us. We have to do something in addition to asset allocation. That is what we thought we should do.
Naren, my final question on themes that are, to my mind, based on I don't have data to back this, but based on the questions that we receive or the comments that we received on our social media platforms and handles, people want to know about two things predominantly the most. I would love to know if you believe that these are late cycle, is there value here? One of them is defense, which got a revival post-May, the unfortunate event in May, but suddenly the sector got revived. And the other is what people say is a 5-10 year story, which is energy transition. Both are overowned, crowded, retail, institutional, everybody's in these. What are your views here in this pocket? Because again, they are not cheap. None of them are. All facets of energy transition companies, be it T&D, be it generation, etc., are expensive. And almost everything in defense doesn't look cheap. What are your views here?
No, energy transition is bound to happen. If you look at energy transition, and you could play it through transmission, you could play it through, solar, but I think it is bound to happen. And given that we have sunshine, I think, as the technology develops, as battery technology develops, it is something which is waiting to explode in the next 10 years. You have to identify the right technology, and if the correct technology comes, you're going to bet on it, it is going to work. But you've seen the rare earth problem in recent times. So frankly, we believe that you have to keep one leg in, one leg out, and keep on doing work. Once you are very clear, you can actually go in with both your legs in. That stage has still not come. So we keep on doing work. See, in defense, frankly, it's a completely, it's a very difficult sector for us to understand, because no one is going to come and explain to you all the technologies involved. It is stupid of any government to come and say, here is the technology, I'm going to explain what I'm doing. It may
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hi, you're watching NDTV Profit, and we're talking about the new debutante on Dalal Street, that's Crizac, and it's up about 18.5%. What a debut. My colleague Sajit Mangat speaks with the management, Vikash Agarwal, as well as Christopher Flood Nagel. Listen in.
give us a sense of the kind of growth that you see for your platform and the kind of opportunity that is there for Crizac.
The company has been growing at 35% year-on-year basis, and we believe, looking at the industry, similar trend going forward. Now that Crizac is listed, it will bring more trust to people we work with, and we see a very healthy growth because of that. Overall, the industry and the desire of students studying abroad has been growing year-on-year basis, so that should help both the students and the company in their dreams.
Christopher, UK being one of the biggest business for Crizac, can you give us a sense of the kind of opportunities that you have, and is there any more tie-ups that you are doing with many other universities in UK?
Yeah, so the UK is still our largest destination market, and our largest source market remains India for now. However, as we are expanding into more and more different source countries across Africa, across East Asia, we continue to grow our market share in the UK. So maybe previously we were working with a partner just in South Asia, then we expand to work in Africa as well, and finally also East Asia. So continued growth in the UK is coming from our continued expansion across the world.
Because, Christopher spoke of the fact that, you're looking at sourcing markets. Which are the big ones which are coming in, and what kind of growth that you see from Africa or from Southeast Asia?
Sure. Africa would be the biggest growth market for us. It's an emerging market where the desire of study abroad is much, much bigger compared to that of any other geographies we work with. Southeast Asia is fairly developed, but since we don't have much of a presence, we believe that should also help us grow in that region because our base is very low.
Because also, if you can give us a sense of, are you tying up with more universities in South Asia or Asian countries, and especially we have a trend of students looking at some of the Asian countries like China or Singapore or Hong Kong for higher studies. Is that a market that you're looking at actively?
Yes, we are definitely looking at expanding into Malaysia, Singapore, China as well. At the same time, we are also looking at expanding into UAE and India as a destination as well. There are a lot of universities who have set up their foreign campus in India, some in Mumbai, some in Gift City. So we are looking at getting students from Africa, Southeast Asia and South Asia to India as well.
One of the biggest challenges that comes in with foreign universities is the visa issue. How do you see the visa issue vis-a-vis UK and the US market? Because if I'm not wrong, you have some tie-up in the US as well with respect to University of Texas. So can you give us an idea of the kind of challenges which are there and how you're navigating those challenges?
Yeah, right. At the moment, US has its challenges. There are some turbulence. Trump had stopped a visa appointment, but those things has been revoked. Now things are going okay, but we do believe that there will be some headwinds for US. But at the same time, other countries are a bit more liberal. For example, Dubai is giving a golden visa to the students. At the same time, a few other countries like Malaysia are welcoming students quite a bit. So with a few years, US should also become a more stable market.
All right, so that was the management of Crizac speaking to NDTV Profit on the day of its listing. Let me draw your attention to the latest data from the mutual fund space that you're seeing at the bottom of your screen, and I'm looking at the data release as well. This is for the month of June, and remember, usually at the end of a quarter, you see an outflow from overnight and short-term debt funds. This is something that has occurred once again, but I'm surprised to see that it's a lesser extent than what you normally see at the end of a quarter. So for the overall mutual fund space for the month of June, there is an inflow to the extent of 49,000 crore rupees, and a large part of that is coming through from the equity mutual funds, that is the pure play active equity mutual funds, as well as the hybrid mutual fund schemes. I'll delve a little deeper into each of these categories. First of all, on the equity category, there is an improvement in the inflows net basis. Though the gross inflows have more or less stayed the same in the month of June as well as in the month of May at about 57,000 crore rupees, the outflows or the redemptions have actually come down from about 37,600 crore rupees in the month of May to about 33,360 crore rupees in the month of June, as a result of which the net inflows into actively managed equity mutual fund schemes have come in at 23,587 crore rupees. Now, interestingly, the ones that have gotten a lot of interest over the course of the last several months, something like a sectoral and thematic category, which a lot of people tend to invest tactically into, the inflows are only to the extent of 475 crore rupees in the month of June on a net basis, which is considerably lower than what you've seen in the past. For example, in some months last year, you saw inflows to the extent of 19,000 or even 20,000 crore rupees in just this one category. What else has gotten inflows? You have the small cap category that has gotten inflows on a net basis of about 4,000 crore rupees. You have mid caps that have gotten inflows about 3,750 crore rupees, and the large and mid cap also seeing a sizable 3,500 odd crore rupees coming through. So all of those categories, interestingly, even multi-cap has gotten inflows of about 2,900 or 2,800 crore rupees. But the biggest inflows in this actively managed equity category has come through in the way of flexi cap funds, which have gotten 5,700 crore rupees. I find it interesting that arbitrage funds in the hybrid category have also gotten a very sizable inflow to the extent of about 15,600 crore rupees, and that accounts for a large part of the inflows into hybrid mutual fund schemes. Now remember that arbitrage funds are being used by a lot of investors in lieu of the short-term debt funds, even though they're not necessarily like to like. They do give you a little bit of a spread above or a little bit of a better return compared with the liquid funds. All right, now beyond that, take a look at the passive space, and here you have index funds which have gotten inflows of about 1,000 crore rupees in the month, and other ETFs, which in the past few months has actually been a focus area because a lot of people have been trying to tactically invest in ETFs, which is equity ETFs. We have inflows of about 844 crore rupees into this route as well. If you compare it with the previous month, though, it is a drop, where in the month of May, you saw inflows of about 4,100 crore rupees into other ETFs. And this, by the way, is a pretty wide category. It also includes silver ETFs, which is quite interesting. Gold ETFs have seen an inflow in the month of June to the extent of 2,080 crore rupees, and that compares with just about 290 crore rupees of inflows in the month of May. So it's gone up. Of course, this is a period where you've seen elevated geopolitical tension. And remember, the month of May was a month where a lot of mutual funds were anticipating that there would be a little bit of a drying up of investments because of that uncertainty that did take place. However, you had the SIP numbers that were at an all-time high or very close to that. We've got Ashish Somaya of White Oak Capital joining in to talk about the numbers somewhat. Ashish, I'll just run you through some of the headline numbers. Whereas in the month of May, you had inflows into active equity mutual funds to the extent of about 19,000 crore rupees. That has risen to about 23,600 crore rupees in the month of June. And you have sizable inflows into flexi cap as well as all of the broader categories, small cap, mid cap and multi cap. Whereas thematic has seen just about 475 crore rupees of inflows. Is this something that you would have anticipated? There isn't too much in the way of NFOs either. So what is your initial read on the numbers when it comes to equity mutual funds? Ashish, can you hear me? Okay, so we'll try and get Ashish back. So broadly, it seems like it's a decent set of numbers for the mutual fund space. Of course, it's not anywhere close to record high inflows into actively managed equity category. But I would say that on balance, given that it's the end of a quarter and you see outflows to the extent of about 1,700 crore rupees from debt mutual funds, an inflow of 49,000 crore rupees into the mutual fund space as a whole is certainly a positive. Did you see the numbers? Does anything stand out to you?
I think the thing that stood out for me was the sectoral and thematic fund that you talked about. I think finally people have realized that, you know, it's not the best idea to go ahead and invest in these thematic funds because it's highly cyclical and you need to monitor that constantly. So if you're just investing every month without actually checking your investment, it doesn't make sense, right?
Yeah.
The second thing is NFOs. If I'm not wrong, NFOs this month were also less in terms of launching. So that's quite a small number there as well.
I have the numbers.
But Flexi Cap is interesting because that's almost month on month 2,000 crore plus increase in that.
No, much more, 5,000 crore.
No, I mean the addition as compared to the last month. So that's interesting.
So we've got Ashish Somai. Ashish, can you hear me? Just checking.
Yes, hi Alexei.
Hi Ashish. So I'm not sure if you've gotten the numbers, but the headline that stood out to me is that there's an improvement in the inflows on a net basis into actively managed equity mutual fund schemes from about 19,000 crore rupees to about 23,600 crore rupees. And this seemingly is on the back of lower redemptions. The gross inflows have remained the same. And also, tactical investments seem to have dried up. And here I'm specifically talking about sectoral and thematic funds. The inflows seem to have come through from flexi caps as well as multi caps and even small and mid caps. What is your reading?
Yeah, Alex, I think, if you look at, say, for example, a couple of months back, I mean, in general, you see this whole cyclical behavior. I mean, if you see, say, months like April and May, one saw probably less confidence. I mean, one thing I'm noticing is that the gross inflow seems to be declining. I mean, if you see, say, September last year or August last year, you must have seen that if you just look at equity and hybrid funds, that is the active element, I think at the best time we saw gross inflows like 75,000 crores. And I think in recent times, the gross inflow has been kind of going down. And at the same time, I heard you mentioning that redemptions have gone down. So what is happening is that while gross inflows are going down, redemption is also going down, and that is what is resulting in buoyancy in the net inflows. That is something which is interesting to watch. Second, I think clearly confidence is back. You can also see my expectation is that if you look at, say, for example, July, you will again see gross inflows going up, and I think this is somehow more correlating with the market behavior, which is giving confidence to people. So my sense is numbers will improve further from here on.
Just a quick check, and I'm sure that you yourself have a pulse and you do your channel checks. In terms of the big investors into mutual funds, I'm wondering what the flows are, because in the month of May, a lot of people anticipated that there would be a little bit of a cautiousness because of all the geopolitics. And you mentioned that seemingly things are going back to normal. Do you have a sense of how retail investors have behaved and how maybe the HNIs have?
No, that's difficult to kind of difficult to get a breakup of that. But Alex, to the extent that a large part of our retail base is more the regular investing type, it's counterintuitive. But my own sense is that the retail flow is a lot more sustainable and a lot more consistent. Whereas I think it will be the high value flow, which will probably be, which anecdotally my sense is that is the one which is more inconsistent, if you really ask me.
Okay, the last point with regard to fixed income funds, I find it interesting that you've seen a durable shift seemingly into arbitrage funds, and I'm thinking that a lot of retail money is going into arbitrage funds now. But at the end of the quarter, Ashish, you normally see a significant outflow from the shorter term debt funds, but I'm seeing on a cumulative basis, fixed income funds have only seen an outflow of about 1,700 crore rupees on a net basis. What explains that?
See, I think, Alex, out of the 1,700, I think a big part is liquid funds. So I wouldn't really read too much into it because liquid funds have the biggest overnight funds and liquid funds. So if you adjust for overnight funds and liquid funds, actually the buoyancy in interest rates has resulted in money flowing across. Like, you could take these short-term bond funds or you take corporate bond funds. They actually have a handsome net inflow. And bulk of the negative is actually accounted for only liquid and overnight, so wouldn't really read too much into that. But yes, on the overall point that fixed income funds have lost material numbers over the years, and that money is not only moving into arbitrage. If you really ask me, let's say, for example, you take conservative hybrid funds, that category has some 30,000 crores. If you look at multi-asset, dynamic, balance advantage, I think bulk of the fixed income flow is not only going to arbitrage, because arbitrage you can see now is nearly 3 lakh crores of assets almost. But even hybrid funds with varying proportions of equity, they are also the ones who are witnessing big gains in terms of inflows.
Just one last point, and not asking you to comment on a specific player, but I'm referring to the significant inflows into the passive space because of a couple of new fund offers that got closed. And I'm guessing that those numbers will come through in the month of July. I'm just wondering whether you anticipate there to be a churn, or do you think that new investors are coming into the fold because a new player has entered, etc., and so you see overall AUM going up?
Yeah. See, my sense is that, if you look at number of investors, number of accounts, number of investors, I think the industry itself is growing leaps and bounds. And I think diversity of players and diversity of strategies will only bolster that further, I have no doubt. But when you look at the rupees crores value, I think that would probably be more explained by churn rather than, because it's only logical that you will not have so many institutions and corporates or family offices just coming into being in a short span of time. But definitely, as far as number of investors are concerned, any which way the industry is growing leaps and bounds month on month, and then of course new players and new strategies only augment those numbers. The base of investors is bound to rise, but assets, I think, yes, there will be gains and losses of market shares.
Interesting. Thanks for that perspective, Ashish. Always a pleasure speaking with you.
Thank you, Alex.
Okay, by the way, just a little bit of context. I didn't want to ask a specific question to Ashish about a specific mutual fund, but then you need to know. And I was speaking about the introduction of a couple of new fund offers and the closure of those new fund offers for Jio BlackRock. They have mopped up 17,000 plus crore rupees in the new fund offer stage. And so what I was asking was, do you anticipate that this is new money coming through, or do you think that there will be a churn within the system? And you got the answer. All right, let's turn to Ask Profit now. I'm sorry to keep you waiting if you've got questions that you have lined up. And by the way, those numbers that you see on top of your screen, that number is where you can send us a message, or you can call us on the landline number. We've got Vaishali Parekh as well as Nirav Ashar joining us this morning. Vaishali, I'll just quickly come to you on why we're seeing such range-bound action at the index level, and does that change in the near future in your opinion? And how should somebody who is trading in the index react to what you've seen in the recent past?
Very good morning, all of you. So yes, market is actually, as far as the index is concerned, is in a no trade zone. We are seeing some choppiness every single day, but the bias, that's what you're asking me for days to come, continues to be positive. But we need to respect the support of 25,400 levels. If we see a dip, decisive dip below that, then that could call for a further correction. But till then, it is a sideways. We also need to see index moving about 25,660, which was the previous high, to look for the further targets of 26,000 and so on. So right now, I would say just follow stock-specific movement. Nifty as well as Bank Nifty are in a no trade zone.
Nifty as well as Bank Nifty no trade zone is the view that Vaishali has. All right. Our first caller for the day, Pradeep, is calling in from Bengaluru. Pradeep, hi. A very good morning to you. How can we help you today?
Good morning, ma'am.
Good morning.
See, I had Paras depends on the on my watch list.
Okay.
Apart from being highly overvalued, the fundamentals seem to be on the better side. So I wanted to know what would be the correct level to enter Paras defense for long term.
Okay, got your question, Pradeep. I'll take this up with Vaishali quickly. Vaishali, on the charts of Paras defense, what entry level point would you recommend?
So I think overall the way this stock has performed, we have already seen a good surge coming in, and right now once again I think there is a big, was it a bonus or, well, technically I would say it is at a support of 800 levels. Do buy at these 800 because that would make a risk reward ratio very favorable. When I'm looking at the weekly chart also, there is a cluster of support coming at 800. So this support should be respected. Start buying from these levels and wait for it to surge high. Above 1000 levels, it would call for further clarity that yes, it's out of the woods and we can see further run up from there on.
Okay. All right. Let's pull up the chart of Ramakrishna Forgings because that's the counter that we're talking about next. And Aniket Hiramath has got this question. He's bought at a level of 653.5 for the long term, and he's looking at 2027 to 2029. So it's a pretty decent time frame that he's looking at. It's very close to the current market price though. Nirav, sorry to keep you waiting for so long. What's the view on RK Forgings?
Well, good morning and thank you for the invite. I think if the outlook is long term, then definitely he should continue to hold from the current levels. One can expect a decent upside in the next 2 to 3 years.
Okay, continue to hold is a view on RK Forgings. We've got our next caller from Gujarat. Sanjay is calling us. Sanjay bhai, very good morning. How can we help you today?
Very good morning to you, sir.
Please go ahead.
Yes, I have Himadri Chemicals.
Okay.
At the rate of 54.23 paisa.
Wow, when did you buy it?
That is 13 January 2021.
Wow, okay. Fantastic returns. What would you like to know?
Yes, I know that every time his breakout is coming, but the breakout of 500 rupees and 550 is not broken simultaneously. When should I hold, or that is the...
That's a good question, but Sanjay, when you bought it in 2021, obviously you had a long-term view. Has that changed?
Yeah.
Do you need the money now, or do you still have a long-term view?
No. I have no to worry about the staying here. But every time he is breaking 500 rupees notes and coming down up to 450 level, that's why I saw that some part of the churning or not.
Yeah, that's a good question. Let me go to Vaishali on the charts. Vaishali, when does that breakout and sustained breakout beyond 500 take place?
Of course, I would say it's a very good observation. So, but talking about the chart, yes, rightly so, 540 acts as a very crucial resistance. But today's candle also shows hope that yes, there is a new round of momentum setting in. So some stocks do take a longer gestation period, but I would say continue holding because even when I'm looking at the longer term chart, it's poised for a target of 650 to 700 from here on. So keep 470, 60, that is a support band. So 450 as your stop loss and hold on because I think once it shows a decisive move above 540, you will be looking for higher targets.
Okay, all right. On that note, we have to slip into a very quick break. We'll be back on the other side to take all of your questions, so do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, the next query for the day then, Ravi from Vijayawada is writing in and has 1,000-odd shares of HPCL, that is Hindustan Petroleum, at 400 apiece and wants to know a short-term target for this counter for the next 2 odd months. Vaishali, your view on the charts for the next 2 odd months?
So yes, all these OMCs have been doing well of late. So I would say for the next 2 months or so, right now the trend is intact, and even on a weekly chart, it's looking for a brighter chance of giving a breakout. So I would say right now, keep your stop loss of around below 440 and continue holding, because if we see the stock moving above 460 levels and sustaining above that, that could give you higher targets of 480 to 500 levels. So stop loss of 440 and hold.
Stop loss of 440 and hold is the view that Vaishali has on HPCL. All right, our next caller Arvind is calling in from Uttar Pradesh. Arvind, hi, very good morning to you. कैसे मदद करें आपकी?
Good morning, ma'am. Ma'am, first of all, thanks to NDTV की उसमें एक आपका शो आता है Know Your Company. उसमें से मैंने एक शेयर लिया था सिग्मा SGS टेक्नोलॉजी.
ओके.
ये मैंने 527 रुपए पे लिया था. 200 शेयर थे मेरे पास.
ठीक है.
अब क्या है ना कि लगातार ही 11 दिन पॉजिटिव बंद हुआ. कल जाके थोड़ा नेगेटिव बंद हुआ. आज फिर ये 7% करीबन ऊपर हो गया.
करेक्ट.
तो मुझे बड़ा डर सा लग रहा है कि ऑपरेटर्स के पीछे तो नहीं है कुछ.
नहीं
ऐसा नहीं पंप एंड डंप का.
नहीं अरविंद जी, एक्चुअली आज स्टॉक इसलिए बढ़ा है क्योंकि आज एक ब्रोकरेज जेपी मॉर्गन ने इसके लिए इनिशिएट कवरेज किया था और इसका टारगेट प्राइस दिया था 800, जिसकी वजह से आज सारे ईएमएस स्टॉक्स जो है वो बढ़ रहे हैं.
और सिरमा का एक और अपडेट है. हाँ. सिरमा का एक और अपडेट है अरविंद जी, जिसमें उन्होंने ये अनाउंस किया है कि वो 1800 करोड़ मतलब 1800 करोड़ का एक मल्टी लेयर प्रिंटेड सर्किट बोर्ड और कॉपर क्लैड लैमिनेट मैन्युफैक्चरिंग यूनिट सेटअप कर रहे हैं आंध्र प्रदेश में. और ये सोर्स बेस्ड मतलब सूत्रों से एक न्यूज़पेपर ने चलाया है स्टोरी, तो उस न्यूज़ पे वो ऊपर जा रहा है.
ओके.
तो आपका सवाल क्या है वैसे? आपको लॉन्ग टर्म होल्ड करना है?
मैं सोच रहा था कि मेरे को 25% मिल गया 10-15 दिन के अंदर. हाँ. तो मैं बुक करना चाह रहा था, पर इतनी पॉजिटिव है तो मैं बुक नहीं करूंगा.
ओके. तो मैं एक काम करता हूँ फिर, मैं
टेक्निकल बेसिस पे.
हाँ, मैं वैशाली जी को पूछ लेता हूँ कि उनका क्या राय है. वैशाली, इस समय इस प्राइस पे बुक करना चाहिए?
नहीं, मैं कहूंगी कि होल्ड करिए, बिकॉज कई दिनों से हम देख रहे हैं वॉल्यूम में भी सुधार आया है और आज तो एक्सेप्शनली हाई है. तो 620 का अभी 600 का एक नियर टर्म सपोर्ट बन चुका है और जिस तरह से मैं देख रही हूँ लंबे टाइम फ्रेम का भी चार्ट, तो मुझे लग रहा है ये 700 750 तक जा सकता है. तो धीरज रखिए, 600 की स्टॉप लॉस के साथ होल्ड करिए और ये टारगेट्स के लिए वेट करिए.
Interesting. So that's the view with regards to where Sirma SGS stands. The next question is a question on Dreamfox, and I think every investor in that company wants to know about this counter. Charan is asking about Dreamfox, who's writing in from Vellore, by the way. He's got 500 shares at 360 a piece and wants to know whether he can continue to hold the counter or not. Neerav, I'll come to you on this one. With everything that's happening around the company, there were news-based sources saying that the company, there are certain banks that have ended partnerships with the company. The company came and denied that, but post that they came out with a filing saying that there are certain aspects of contracts which are being shut with some banks, and that will have a material impact on the company. And because of this, we've seen a significant downtick in the stock. In fact, if we can try to pull that up, in the past 1 month, the stock has seen a significant amount of downtick. What is your view with respect to where Dreamfox stand? There you go, it's down 38% almost in the past 1 month. Should a person continue to hold this counter?
Well, I think it's better to exit the counter because there can be no smoke without the fire. And of course, initially there was some kind of a buzz that things are not right as far as the business developments are concerned. And I think now the company has had to acknowledge that there is definitely something which is not right at this point of time. So the better course of action will be to exit and maybe invest into something like a Thomas Cook, which has better prospects.
Right, so exit the counter is the view that Neerav has on Dreamfox. All right, our next caller, Ramchandra, is calling in from Bengaluru. Ramchandra, hi, a very good morning to you. How can we help you today?
Hi, good morning.
Good morning.
I'm holding Srila Energy 2000 shares at the rate of 64 rupees.
Okay.
Can I for short term 6 months? Technicals. I want technicals.
You want the technicals. Okay, I got your question, Ramchandra. I take this up with Vaishali. Vaishali, what are the charts indicating for Suzlon for the next 6 odd months?
So Suzlon, well, right now it's currently at 66. it is quite in a positive trend. So I would say if you're looking at 6 months horizon, 60 should act as a stop loss. We would look once the stock catches momentum. I think this can go towards 74. That would be the near-term target, and 85 would be the next. So for 6 months horizon, I think we'll wait for a target of 85 with 60 as stop loss.
Interesting question coming in from Thomas George, who says that he's a senior citizen writing in from Cochin, and Hitachi Energy is a stock that he's got. He's bought 100 shares at a price of 4,887. He says that he can continue to hold for the next 2 to 3 years, but considering the kind of run-up that you've seen in the price, should he book profits at this stage? Nirav, the question is for you. These stocks, I think it would be a little bit of an understatement to call them over-owned or crowded. What would you suggest?
Well, I think the prospects still continue to be quite good as far as the T&D space is concerned, power transmission and distribution space. And these Hitachi Energy, they are the pioneers in HVDC technology. So I think they should continue to do well. Plus, there's a lot of focus on companies which are into the T&D space, especially with respect to HVDC. We also saw the recent listing of Siemens Energy Limited, which is also into a similar space. So I think at least for the next 3-4 years, I think the outlook is going to be quite strong. So I think he should continue to hold.
Okay, the next question is from Likita, and this is an interesting one. She's asking about BSE for the next 3-month time frame, considering the kind of drop that you've seen in the share price in the recent past. It's up in trade today at about 2% higher, but the question really is whether you want to take a position right now or wait for better levels. Vaishali, on the charts, for a relatively short-term time frame, the question is and there are murmurs that perhaps the Securities and Exchange Board of India is going to step in and give additional regulations for the derivative space, and if that results in lower volumes, that is a negative for these exchanges. Having said that, on the technicals, what is the advice that you would have?
For technicals, I think the run-up has been quite substantial, and right now it's on a corrective phase. So 2400, which has been the near-term low, that would act as a crucial support level. But if these support levels break, then this could trigger a further downslide going towards 2200 and so on. So if one has to get into the stock, 2400 acts as a strict stop loss. Maybe things, if they come in favor and we see a bounce, then we are lucky. But if 2400 levels break, then I think the weakness should continue.
Okay, so that's the view on the technicals. Nirav, quick view on the fundamentals. Do you anticipate that this could be a headwind, regulatory in nature?
Well, yes, it does seem so at this point of time, because considering the fact that the kind of undercurrents which we have seen, I think it does seem that there could be some challenges going forward as far as the volumes are concerned. So I think that could impact earnings in the quarters ahead. So I think it's better to stay away.
Okay. By the way, at this stage, the Nifty 50, the traded volume is only 0.22 times. And I'm going to refresh my screen just so that I am absolutely certain about this. The volumes are indeed 0.22 times the 30-day average. And even if there is a spike in the rest of the session, I would hazard a guess to say that half of the 30-day average is likely what you will end up with, because we're more or less at the halfway point of the session. So we have seen a pretty sharp plummeting of the volumes in the recent past. Let's go to Mohan, who's calling us from Hyderabad. Mohan, very good morning to you. How can we help you today?
Yeah, good morning, Mr. Alex. I'm happy to, thank you very much for taking my call.
It's our pleasure.
I would like to know about Lloyd Enterprises, sir.
Okay.
I've been tracking this company. Recently got a news that they have acquired 33% stake in gold mining.
Uh-huh.
And when I studied the company, they were the promoters of Lloyd Engineering, and they got stake in Lloyd Metals also, 12%.
Right.
And 6 months back, they invested 100 crores in Lloyd Real Estate.
Mm-hmm.
I would like to know the prospectus of Lloyd Enterprise, which is a group head company.
Yes.
Can I hold it for long term or can I book profit?
It's a okay.
I bought
So
it for 65.
yeah, you bought it for 65 and you're making a decent profit already. I've gotten your question,
Yes.
Mohan. Let me go across to Nirav just to check if he has coverage. Nirav, is this something that you track, and if so, what is the view?
Well, we've seen Lloyd's Engineering, and I think this seems to be a holding company, and it's got investments in other.
No, sorry. Let me amend. This is Lloyd's Enterprises.
Lloyd's Enterprises, and
Yes.
I think it has got holdings in Lloyd's Engineering, if I'm not mistaken.
Yeah.
Yeah. So this seems to be a holding company, and they have a lot of investments in group companies. So I think there is a lot of value which can be discovered, particularly in light of the fact that all the subsidiaries have reported very good set of numbers in the recent past. So I think there could be a re-rating on the cards as far as Lloyd's Enterprises is concerned. So I think he should continue to hold.
Okay, continue to hold Lloyd Enterprises, the view that Nirav has. The next question is from Aman Saraf, who wants to ask if he can make an entry in Max Healthcare at current levels for the next 2 to 3 odd years. Vaishali, do you think the charts are attractive enough right now to make an entry from a longer term perspective?
Well, I'll just have a look. Max Healthcare.
Yeah, it's Max Healthcare, Vaishali.
Yeah, so the price is 1269. And well, we are seeing a little bit of a profit booking coming in. I think if one has to buy, wait for it to retrace up to 1200 levels. That would be an ideal level. Or you rather accumulate, keeping in mind that this is the support, and accumulate it every day.
Okay, so that's with regards to where Max Healthcare stands. The next caller, Nikhil, is calling in from Nellore. Nikhil, hi, a very good morning to you. I believe you have a question on One Mobiquick.
Yes, ma'am. First of all, good morning to all the panel members.
Good morning, Nikhil.
Ma'am, I bought one Mobiquick share at 316 rupees. Now they are currently trading at 242 rupees.
Right.
I bought this almost around like 6 months back.
Right.
Should I be selling them or holding the stock?
Okay.
I need advice, ma'am.
Okay, got your question, Nikhil. I'll take this up with Nirav. Nirav, your view on One Mobiquick. We've been seeing a significant amount of downtick in this particular counter, and it's also below its issue price as well. What's your view with regards to this counter, and should you continue to hold?
No, I think you should exit, considering the fact that there have been a lot of negative developments, and it's better to move to some more stable telecom or an IT counter where there are better prospects.
Okay. And where would that be? Just to name a few?
I think he could go in for an Indus Tower maybe.
Okay. All right, so that's the view. Indus Tower is something you can look at. Hopefully that answers your question, Nikhil. Protean eGov is the name of the counter that we're talking about next, and Pankaj has got this next question, and he's looking for a long-term view on this one. Coverage of this company, Nirav, and would you suggest a fresh entry?
Well, not at the moment, because they had a recent setback in terms of the order which for the income tax department PAN cards, and I think they had bid for the level 2, and I think they have been disqualified, and after that the stock has come under a significant amount of pressure. And from what we understand, the company had scaled up its manpower requirements, etc. And I think all the additional costs are likely to get reflected in the next quarter. So I think it's better to stay away from the stock.
Better to stay away from the counter is the view that Nirav has. The next question is from Dinesh Ved, who is writing in from Gurgaon. And he's asking about Coal India and wants to know if the current levels are the right levels to make an entry from a next 12 months perspective. Vaishali, on the charts for Coal India?
Yes, the chart definitely is at an attractive level, because the stock has really not participated in all the rally that we have witnessed in the recent past. But technically, I would say yes, it is a very attractive level. 375 acts as a very good support. Further conviction in the strength of the stock would come only above 410 levels. So keep a range of 370 to 410. So long-term perspective, yes, this should be the view. Add more if 410 is crossed and we are sustaining above that.
Okay, all right. So I'm coming back to you on this next one, and Nidhi's got a question for us. First of all, she says, she says that Mahima is amazing. Mahima, so compliments to you.
Thank you so
much. Yeah, and thanks for the insightful session. So she's asking about Imagica, and she's bought 200 shares at a price of 101, and she's lost a little bit of ground here, and she's wondering what to do. It is trading at 66 or thereabouts. So what's the strategy on the charts that you would recommend, Vaishali?
Well, there's nothing happening. It's just been consolidating since a very long time. So I would say rather shift to a better stock, which is already in a good established trend, or wait it out till it crosses 70 and then we can have a relook.
Okay, all right. So that's the advice on Imagica. Sorry, it's a hold for now. Is that right?
Yes, it is her hold if time is not the factor. But if I were to make a decision, I would say switch on to the other stocks.
Okay, and what would you recommend at this stage?
Well, so I do like capital goods like ABB, Cummins, Siemens. These are good stocks which have not yet participated. Even in the defense category, if you look at HAL, so frontline strong stocks would be a better option right now.
Got it. All right. All right. Kalyani is calling us from Telangana. Kalyani, very good morning to you. I think it's been a while since you called us. How are you and how can we help you today?
Fine, Mr. Alex. It's been a long time since I've been trying to get to you.
I'm glad that you managed.
WhatsApp, I didn't get an answer.
I'm glad that you managed finally. How can we help you today?
At last I could get your call. My query is regarding Orient Pro Solutions.
Okay.
Is it right to buy at this rate at this time? And my main concern about this is the shareholding is very less, at about 28.8% only.
Okay.
And it's a data center stock, so I thought maybe all the other parameters are good, sir.
So when you say shareholding is less, you're talking about promoter shareholding?
Yeah, sir.
Okay.
Shareholding is very less.
Okay, promoter shareholding is low and you're wondering whether that is a concern. Okay,
Yes,
and you would like to buy this for the long term, is it?
Yeah, long term, sir.
Okay, Neerav, so first to address that, from what I can see, the promoter shareholding points to a 27% holding, and I'm not sure if that really is something of a concern because that would imply that the float is reasonably high. And so, would you buy for the long term? What have you, if you've studied the company?
First of all, I think promoter shareholding being around 27%, it's also important to see whether any holding has been pledged or not. That is one thing. The second thing is to see the FII shareholding or the HNI shareholding. Those shareholders who are holding more than 1% in the company.
Neerav, it's not pledged, huh? 0% pledge.
Yeah. So just pointing that out. Since she's done all the hard work. So, and secondly, the stock has been doing quite well in the recent past. I think it's better to wait for some correction before making an entry into the stock. Maybe I think a 10 to 15% correction should warrant a relook at the stock.
Okay, so that's with regards to where Orient Pro Solutions stand. The next question is from Raghu, is writing in from Pune and wants a short-term view on Canara Bank. His purchase price is 120 per share and he wants to know how charts are faring for the next 3 odd months. So Vaishali, I'll come to you on this one. Canara Bank is the counter. What's the chart indicating?
Well, right now it's going in for consolidation phase, and if 3 months is the time period that you're observing, keep 105 as stop loss, and once the stock gets above 120, this is ready for a target of 140, 150.
40, 150 is the view. Okay. Our next caller, Shankar, is calling us from Chennai. Shankar, very good morning to you. How can we help you today?
Oh, very good morning, sir. I am purchasing 2,200 shares of Hindustan Construction Company. I want to know the long-term outlook.
Okay. And I see that you bought at levels. Got it. Our technical outlook is what you're looking at. So when you say long-term, how long is long-term?
No, 2 years, 3 years, 4 years, no problem.
Okay. Okay, but any reason why you're looking at the technicals for that long?
I am regularly watching this stock. So it's the correct time to buy. So only I bought last week only.
Okay. So am I understanding correctly to say that you're watching the technicals to see when you can buy more?
Yes, definitely. I want to more buy. I'm ready to buy more.
Okay. So Vaishali, then on the charts, what is the accumulation zone? He's bought at levels of 30 or thereabouts, very close to the current market price.
Well, let me explain this stock to you. Right from the recent high of 55, this had occurred sometime in August 24. And from there on, we've seen a one-way slide, but we have seen a good support base happening at 25 levels. Currently, it's at 29. So as long as 25, 24 support is held on, this stock can do well. So right now, I would say in technical parameters, this is in a higher bottom formation. Near-term support comes at 28. So once you see the stock moving above 35, 38 levels and sustaining above, then you will see a target of 45, 50 levels and so on. So this is how step by step follow the levels, and let's have a relook once it goes higher towards 55.
Okay, so that's with regards to where the counter stands. The next caller, Prasad, is calling in from Kolkata. Prasad, hi, a very good morning to you. I believe you have a question on Time Technoplast.
Good, madam, I was planning to buy either Time Technoplast or Marine Electricals.
Okay.
So I wanted to know which would be a better stock to buy and at what level.
Okay, and what's the kind of time horizon that you're looking at?
Long term, up say another 2 years.
Okay, got your question, Prasad. I'll take this up with Nirav quickly. Nirav, your view, Time Technoplast or Marine Electricals, which one would you pick?
I think Time Technoplast has better potential to move up. We've seen a decent run up, but I think the prospects still seem attractive from the current levels also.
Okay, so that's the answer. On Titan, which incidentally dropped quite dramatically after its quarterly update. It's just about flat in trade today. But we've got Suman who's writing in from Kolkata and asking about the long-term prospects on the technicals. And here, Vaishali, he's talking about 5 to 10 years. I don't know if you can look that far, but what would you suggest in the near term at least?
Titan, are we talking about?
Yes.
Yeah, so post its numbers, I think it saw a good drop yesterday. And I would say, well, still there is not much of a damage to the trend. So if long-term is a horizon, I would say keep 3,000 should act as a stop loss. And well, we will wait for the stock to go about 3,800, 3,900 levels. And if that is what happens, then I think the next target that we would look at is 400, 4,500. So keep 3,000 as stop loss and run through the stock.
Okay, so that's with regards to where Titan stands. The next question is from Yatish, who's writing from Mumbai, and he has got 1,000 odd shares of Bajaj Hindustan Sugar bought at 26 rupees a piece and wants to know if he can hold for the next 2 to 3 odd years. What he's saying is correct. His observation is that the company is seeing a turnaround. The losses are constantly decreasing. I mean, there was a point in time when it had losses of around 268 odd crores, which has come down to 25 odd crores. Nirav, do you think that this is the right counter to play the sugar theme and continue to stay invested?
Well, he's done all the hard work, and I think with the turnaround in sight, I think he should continue to stay invested in Bajaj Hindustan.
Okay, stay invested in Bajaj Hindustan. It is time now for the rapid fire round. Both of you know what this means. We'll toss in many questions at you over the course of the next 2 minutes. The first one coming through is on Union Bank of India, which on the back of its quarterly update, Nirav has lost quite a significant amount of ground. We've got Snehit from Hyderabad who bought at levels of 138 and losing now. Should he hold?
I think he should hold.
Okay, the next question is from Sumesh, who's writing from Kerala, wants to know the current level. If the current level is right to enter into something like a Titagarh railway. Vaishali, your view on the charts?
Overall, we are positive on the railway sector as the railway can be bought at support 920. Look for a near-term target of 1,000.
920 is where you can see the support for the stock. Hold is the view. Suzlon is the name of the counter. Mithun is writing from Hampi. Long-term view is being sought. Nirav, would you buy at this level for the long term?
Buy.
Okay, Venkat from Chennai is asking about Markson's Pharma. 100 shares is what he has. His buying price is 330. He's happy to hold for the next 2 odd years. Nirav, your view on Markson's Pharma?
Hold.
Tourism Finance Corporation. Rakesh from Chandigarh wants to know the long-term view. Any view on this one, Nirav?
Yes, add.
Okay, the next question is on Kitex Garments. Vishwa from Coimbatore is holding the counter at 295 levels. Wants to know if she can hold from a longer-term perspective. Any view on this, Nirav?
No.
Okay. IFL Finance at 422 rupees per share. Ramesh from Coimbatore wants to know when it can hit, if at all, 650 to 700 levels. Vaishali?
The near-term resistance comes at 520. Once it crosses, you can look for the next target of 580 and 600.
Okay, the next question is on IRCTC. Prasenjit from Kolkata wants a long-term view on this counter. Nirav, your view?
No, avoid.
Triveni Engineering, Vineet from Kerala is holding at 374 rupees per share. Short to medium term outlook is being sought. Vaishali?
So, Triveni Engineering currently at 368. I would say keep a stop loss. It's in a downward trend and keep a stop loss of 350.
Okay, so despite having breaking news in the last 1 hour, we have still managed, Vaishali and Nirav, to answer close to 30 questions, 29 to be exact. Thank you so much for joining in today. As always a pleasure having you.
Thank you.
All right, well, that brings us to the end of this edition of Ask Profit. Up next is a show that you know and love. Know your company. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Do you like companies with deep moats? Do you like unique businesses? This one, which we are going to analyze today, Mahima and myself, will be one of those. Welcome to KYC. Thanks for tuning in. We're going to today deep dive into BLS International. We've been itching to do this actually for a while. Mahima's bias has stopped me from doing it, but nonetheless, we've managed to pull them together today. So let's quickly start off with what I want to know. I'm going to first try and understand what the volume growth is going to be like, because volume growth in FY25 was extremely strong. Can that sustain? Also, while I've not written it here, pricing, how is that evolving? Because again, we've seen very strong pricing growth in FY25. Mind you, BLS International is in the business of visas. It's very similar to the business that VFS does. If you've been to a VFS visa center, you'll know exactly what they do. So a clear competitor to a VFS. So you'll understand what I mean by a volume growth and by a pricing growth. More people coming in for visas will mean volume growth, and whether they have the appetite to increase the price that they charge to each person walking in will be value growth. So both of those will determine how the top line growth for this company evolves. Now, the second piece is new centers. How have they contributed? There are two levers here. One is you have existing centers which are getting self-operated by a BLS International. There are cost savings which are accruing and which is enabling them to do better EBITDA. And the second is they're opening up new centers, which is allowing them to have more customer walk-ins, and the volume growth that we just spoke about is being driven by that. The third piece is there's $1 billion of tenders which is up for grabs. It's a 2,000 crore top line company. So $1 billion can move and shake pretty much everything. Now, all of those should actually come up for renewal over the next 12 to 18 months. These are opportunities for BLS International, either to renew or bring in new clients. What's the success rate like is what I would want to understand on these renewals. Now, chunky customer concentration. This is a risk. The Spain visa that they actually have rights to is a chunky customer. If it were to go away, that is a key risk. What are they doing to hedge for that risk is what I want to understand. Efficiencies emanating from acquisitions. They've acquired a Turkish company called iData, which allows them access to nearly 20 countries. And that is a positive. It's a big positive. But what does this do? And how quickly do the efficiencies start to drive through? This has contributed to around 20% of the absolute EBITDA growth of FY25. I'm trying to understand whether this acquisition has still more efficiencies left to squeeze out and which will drive EBITDA going forward as well. What are the global opportunities that they are looking at in other businesses? Mind you, BLS International has also ventured into some other businesses. Logistics, for example, caters to banks, goes and helps banks out with regard to where senior citizens are concerned, providing banking services at home. So some of those, and they're looking at global opportunities in similar businesses as well. I'm not sure if banking is the one they're targeting, but nonetheless, they are looking to diversify. So what are those opportunities coming in from abroad? And this is the big one, competition from VFS. VFS has a name, has a brand, has scale, has technology, all of that, which is much better than a BLS International. It's also unlisted, mind you, and it is Blackstone backed. So when you have that kind of a competitor, can you continue to sustain the kind of numbers that you have? Last off, usage of cash and the return ratios. There's plenty I want to know about this company. So probably we'll do a longer chat with the management, but how are they going to use the cash? What are the return ratio goals going to look like? They are guiding for a 30% ROC. Can they continue to clock that is really the question. But I'm going to toss it over to Mahima because she's going to explain exactly what BLS International does for you guys.
Right. So basically, as Harsh rightly mentioned, the two kind of services that the company provides is first visa and consular services, and the second one is the digital services. To talk about the visa and consular services, basically it's one of the largest player globally, providing the government to citizen services, and has built trusted partnership with embassies as well as governments worldwide. Plus, it's a 19+ industry experience that they have, and they've built a broad network spanning across 70+ countries already. Plus, it has global offices working for government and diplomatic missions. The core services include outsourcing of visa processing, document verification, attestation, biometrics, e-visa, etc. And providing citizenship services also include your passport renewal, your document authentication, legalization, citizenship renewation, as well as citizenship renunciation and notary as well. So these are the kind of services that the visa and consular services bracket includes. But in terms of the digital services, basically that is providing digital as well as physical again, government to citizen, B2C, B2B services at grassroots levels in India, and this includes your services. Of course, this is one of the leading players in the services like business correspondence services, as well as it includes your e-governance services and assisted e-services as well. So that's the digital part of the business. Now, in terms of how they operate, overall they enter into long-term contracts. So your most of their contracts are exclusive and are long-term in nature. So that includes your 5 to 10 year contracts. So that is an important one. In terms of their overall network as well, as I mentioned in the start of the show, that it has a 70+ countries network that it is operating in. There is 46+ government clients across the globe. There is 19+ years of global experience, plus 44,800 business correspondents across India. There is 142,000+ touch points for their e-services and 1,000+ store spread across India. So that's the overall network that they have in India and across the globe. In terms of their subsidiaries as well, they've got BLS International, where there's 100% holding, which is your visa and consular services, and there's BLS e-services that takes care of the business, the digital part of the business. So that's everything that one needs to know about the counter as to what it does and what it actually is into providing services like.
Now, I want to just add a little bit here. So, of course, there are 45 countries that BLS International operates with. But what's the scope like?
Correct.
How large is the opportunity? So, VFS does 140 countries. Correct. So, that's how large the opportunity is. But, of course, VFS is a very strong competitor in those terms. So, so just want to kind of cover that as well. But, let's not delay this. Let's quickly look at the metrics that we'll cover this morning for you. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, street cred, street coverage, as well as valuations and guidance. We'll try and cover all of that. With street coverage, we'll also cover guidance. I'd like to keep valuation as point number 8 if we can. Street coverage and guidance will be point number 7. And there are reasons for that. You'll get to it. And we'll thereafter speak with Shikhar Agarwal, who's the Joint Managing Director at BLS International, to talk to us about numbers. Mahima, I want to start off with the income statement. Right, so
income statement definitely is a thumbs up for this particular counter. I mean, if we take the trajectory in terms of the revenue, it's grown from 850 crores to almost over 2,100 crores in 2025. From 2022 to 2025, it's seen a 3-year CAGR of 37% in terms of the revenue growth. The EBITDA growth has also been significant, a 3-year CAGR of 80% from 107 in FY22 to almost 629 crores in FY25. In terms of margins, significant amount of improvement there as well, constantly increasing from FY22 at 12.6% to 28.7% in FY25. The net profit trajectory has also been, has seen a good growth, a 3-year CAGR of 69% from 111 to almost 539 crores in FY25. In terms of the revenue breakup, just to give viewers a perspective, the two businesses that I talked about, the visa and consular services is 75% and your digital services is about 25%. And the volumes that Harsh was talking about is also significant in terms of the visa volumes. It's seen a growth of almost 31% in FY25 itself. In terms of new applications also, net new applications also, that also saw a growth of almost 35 odd percent. So, overall, a very good picture when it comes to their overall income statement. So, a thumbs up there.
Yeah, and you know, we will tilt more towards the more material parts of the business, which is visa and consular, because that's where a bulk of the revenue comes from. That's also a more insulated business compared to others. So, and less competitive. Of course, there's VFS, but less competitive in relative terms. Let's look at the balance sheet very, very quickly. Again, looking very healthy from a balance sheet standpoint. I want to cull out 2-3 points here. The borrowing number is at around 180 crore. It's a 15,000 crore market cap company. So really no concern where the borrowing is concerned. There's a small spike in the short-term borrowings to 25 crore rupees. That's likely a payables number which is reflecting, which is also in fact impacting the cash flow positively, of course, given that it's a short-term liability which reflects. In terms of the cash balances, it's at 740 crore. So on a 15,000 crore base, it has 740 crore of cash. 5% of its market cap is sitting in cash on the balance sheet, and it does this regularly. It generally has anything between 450 to 750 crore of cash on its balance sheet. At least that's the trend in the last 3 years. So something again to keep your eye out on. But it looks like a healthy balance sheet, no concern. Where they invest cash is something Mahima will likely cover.
Right, and I think, you know, as you rightly mentioned, the cash is enough to cover their debt. So I think that's not at all a problem there.
Correct.
But yeah, talking about cash flow, well, it's a thumbs up here as well, because overall cash flow from operation has seen a significant amount of jump in the past 3 odd years, from a 261 crore to almost 829 crores. So that's a good number there, a healthy number there. And cash flow from operations to PAT also, that's a good ratio overall if we see. In terms of net cash flow, FY25 was negative because they've invested a big chunk of amount in buying that iData part, and overall also they've done some investments in fixed asset purchase as well. So that's why it's a negative number. Otherwise, it's not a concerning part. Overall, a healthy cash flow statement. So thumbs up there as well.
And they generally use these cash balances to acquire companies.
Internal accruals,
It's a general part of the way they do business. So you'll continue to expect that to happen. So if you don't like that part of the business, something you should know, that they invest in acquisitions all the time. The question, of course, you should be asking is what do they do, or rather what do these acquisitions yield in terms of return ratios? And let's quickly point that out to you. Let's try and understand what the return ratios look like. There you go. Very healthy, right? Of course, it's fallen from the 28% high of FY24, but a 20% plus ROC on a consistent basis over the last 4 years just kind of brushes off any concern in terms of capital allocation that the company is making. Can we have the ROE ratios as well? And I will try to pull them out as well. There you go. So that's the ROE. So ROE, in fact, just increasing sizably as the years have rolled by. We're now at 30% plus. Question will be, is this sustainable? But shareholding, Mahima?
It's been on the constant rise, so it should ideally be sustainable, and that's something, of course, we'll ask the management as well. But in terms of shareholding, it's a well-held company. Promoters have slightly reduced their stake from that 74% mark to a 70% mark, but you know, it's a well-held company overall by promoters. A 70% holding is more than decent. In terms of FI holding, slightly gone up in the past 3 years from a 7.5% to almost a 10% mark there. In terms of DI holdings, not much of DIs are holding this particular counter. The March 25 number indicates a 2% odd holding by DIs, and public holding has remained you know, constant from 17% to it went to around 19.6% in by March 24, but that's again come down to around 17 odd percent. But overall, promoters have faith in the company, and that's been shown because it's a well-held company overall, because they hold around 70 odd percent. So a thumbs up there as well.
Yeah, the spike in the number of shareholders surely might raise a few eyebrows. But, you know, a couple of things which we missed speaking about, Mahima, before this show. 16th Street has bought, has been increasing stake in this company, which is a positive. LIC is one of the DIs which have added a 1% stake in the quarter ended March 2025. So that's the other thing. Two things that you should look out for, because, again, two interesting investors have bought in, and that kind of indicates or gives you some kind of direction as an investor. Let's also quickly look at how the street cred is and what has the stock done. Of course, in the short term, there's been some pain, 1 month down 2%, and even over the last year or so, as the graphics roll, you'll see. But over the year or so period, there has been pressure on the stock. But when you're looking at the 5-year picture, there's been a very strong rally in the stock. So 5-year performance has been outstanding. We've given this a neutral, of course, given that the longer term performance is strong and the shorter term performance has been difficult. But street coverage.
Right. So in terms, So in terms of street coverage, there's not a lot of analysts that cover this counter, and that's one of the reasons as to why we are staying a little cautious in giving it a neutral rating. There's just one buy with an upside potential of 68% as per what Bloomberg suggests. So that's with regards to where the street coverage stands. But guidance, of course, a strong guidance. The management is confident of sustaining the 30% plus margins in the visa and consular business segment. But we'll have to go ahead and ask the management with regards to the blended margin for both the visa as well as the digital business. They've said that they're at least targeting growth anywhere between 15 to 20% and the one interesting part that I saw in their con call was that they are saying that they'll continue to evaluate acquisition targets because they are seeing some potential counters which they can go ahead and acquire. So we'll also ask them as to which of these counters are in which area are they going to go ahead and expand in. So this is with regards to where the guidance stands, Harsh.
Right. Now let's pull out valuations, probably one of the most important metrics. When you're looking at valuations, it's currently trading at 31 times trailing 12 months. FY26 is roughly 24 times. So 1 year forward, they've guided for around 15 to 20% growth for some time in the future. And therefore, we've kind of just extrapolated that valuation. But it's also basis the average Bloomberg analyst, which is just one analyst covering the stock. So the 5-year average in terms of price to earnings is 30 times. Doesn't look particularly expensive. But at the same time, you want to be cautious because there are no competitors and there is VFS, which is a big unlisted competitor of this business. Now, I want to also quickly cover analyst recommendations. Just one buy call on this one. Potential return means 68%. Again, we'll give this a neutral. We'll be cautious about this because there's only one analyst covering it. So we've given this a neutral. The total rating, let's quickly stack it up and let's give you a summary of all of the metrics we've spoken about. That's of course the street coverage, but income statement, balance sheet, cash flow, all of those were a thumbs up. Even return ratios a thumbs up. Very impressive across the board with regard to that. Shareholding is a thumbs up, 70% held. Street credit, street coverage, valuations all are neutral. Comes to 6.5 on 8 with no thumbs down with regard to where this company is concerned. Let's quickly go across. We have Shikhar Agarwal joining us, Joint Managing Director, BLS International. So I want to first understand from you. Firstly, welcome, good morning. We're in a rush because we're crunched for time. I want to quickly first understand from you, what's the tender pipeline looking like? What's the win rate that you have? How many of your clients currently are up for renewal in the next 12 to 18 months? Is there a concern on that count? Give us that perspective.
So I think I can start that off with telling you the 5-year trajectory. If you see last year, our revenue has grown by 30% and our profit after tax, which is what we actually see, is grown by 66%. So we have delivered 540 crores of profit last year, which was a 66% increase compared to the year before. If you see the volumes, there has been a steady growth in volumes over the last 5 years. We have delivered 4 million visa applications last year. Now we are proud to say we work with more than 40 client governments across 70 odd countries, around the world. As you see, in the last 1 year itself, we have won more than 10 new contracts with different client governments. Over the next few years, we've been telling, there are multiple client governments, coming out with new tenders from the existing market. There is upwards of $2 billion tenders that are coming up, wherein our competitors are the incumbent. Regarding our revenue, we have already renewed most of our contracts. So we have a clear visibility for 5 to 7 years at least. Some of the contracts that we have won are for 10 years. So we have a clear visibility on the potential of revenue that we have. And on top of that, the growth in the market, if you see, we have just captured 17% of the market. And if you see the growth in the market, there's at least 14% growth that is happening every year. And this industry by 2029 is poised to become a $3.5 billion industry. So that is why we see a major growth for us coming in.
So, sir, $1 billion of potential opportunity over the next 12 to 18 months. How much of your clients are up for renewal? How many rather? Apologize for that. But in terms of contract size, and what is the potential for you? How much are you expecting to win out of this $1 billion?
See, 90% of our contracts we have already renewed in the last 1-2 years. So we have a clear visibility on our existing revenue. All the contracts that are coming up for renewal are newer contracts. Some of which our competitors are incumbent. Some new governments are going to come out with tender which they have not outsourced till now. So we expect now governments are taking note. They want to divide the world into multiple players. So we feel that we are a well-established company now to take this market share.
Okay, Mr. Agarwal, hi, Mahima also joining in. Always a pleasure speaking with you. You just mentioned that you already did a 30% growth in terms of FY25. Your guidance is the growth between 15 to 20 odd percent. Do you think that you'll be able to cross that 20% mark, and if yes, by how much?
See, if you see the past of the company, we have delivered 70% CAGR growth. Obviously, the base of the company has now become bigger, but if you see the global market share that we have, which is 17 odd percent, there is, we were at 5 to 7% 10 years back. We have grown to 17% now. So I think there's a big scope for growth in terms of market share. Even the market, as I said, is growing by more than 14% every year. On top of that, new governments are outsourcing newer things. Our prices are increasing. So definitely we feel, with the increased base also, that we can deliver at least 20 to 25% growth over the next 5 years. On top of that, as you see, we are still 900 crore plus net cash company. We are looking at, we acquired 2 companies. We did 1200 crore plus acquisitions last year. When we acquired iData and Citizenship Invest, we continue to look at different acquisitions, which can be synergized within our company. So definitely we feel that, the guidance that we want to give is quite reasonable, that you want to do 20 to 25% growth over the next 5 years. But definitely, on top of that, newer contracts, acquisition, etc., we will be striving for more.
And what area would those acquisitions be in?
See, normally we are looking at government business. We understand the user pay model. So citizenship services across the world, there is multiple services that are yet to be outsourced by developed governments. So definitely in the government to services space, we are looking at visa outsourcing and allied services.
How is competition, Mr. Agarwal, in this space?
See, competition around the world, there are limited companies which are qualified for these tenders. Before we came into the picture, there was a big monopoly. Over the years, we have been able to increase our market share, but governments need trusted players. So we feel that we are delivering work across the world now, and governments need more players. So we definitely feel we have a big upper hand right now in growing our market share.
Okay. Mr. Agarwal, your margins have constantly been increasing. FY25, the blended margin stood at 28.7%. You've said visa and consular services is where you'll maintain 30% plus margins. But overall, I want to know, 2 years down the line, considering that your digital business will also scale up, where do you think your blended margins will go to?
See, if you see the margins in our visa business, they have gone from 21% to 28% and 34% now. And our blended margins are around 28%. Definitely in the digital business, since it's a volume driven business, we are generating good amount of profits, but the margin per application is a little less. We also acquired a business in our digital business, which has a big revenue, but less margin. So I feel the margin in the visa business, our immediate target is to maintain even at an increased base. Our blended margins might come down a little bit because of digital business in the near future, but in our visa business, our margins are going to sustain.
Do you believe ROEs ratios can sustain above 30%, sir?
I think definitely, we are striving to sustain all the growth that we have achieved, all the, ROE ratio also. We are definitely targeting to sustain all of that.
Interesting. Okay. Mr. Agarwal, just want to get a sense, will this mix change, the mix between visa and consular and the digital business? Right now it's 75-25, but going ahead, how do you expect that to change, or will it remain the same?
See, in the visa business, as I said, the opportunity size is huge. There are multiple tenders that are coming out, newer governments that are outsourcing, newer services being outsourced. So definitely, I feel there's a major growth expected in the visa business. On the same time, in the digital business as well, there is a different trajectory of growth. We have doubled our profit from last year, in the digital business as well. And there's a big growth expected. So I feel, in the long term, the ratio to remain the same because we expect growth coming in both the companies.
Okay, thank you so much, sir, for joining us, giving us that perspective. It's been Very interesting understanding the business as well as the nuances from you. Thanks for coming and speaking with us. But viewers, frankly, completely out of time on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope you found it helpful. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our
Recover to near day's high, but trade absolutely flat. Nifty above 25,500. Consumption and auto lead gains. And inflows into mutual funds normalize in June after a bit of a roadblock in May due to geopolitical uncertainty. Equity mutual fund inflows jumped 24% to 23,587 crore rupees. Gold exchange traded funds recorded the highest inflows in 5 months in June. And US President Donald Trump announced 50% tariff on copper imports, boon for Indian copper producers, but a bane for copper consuming industries. Separately, he also announces 200% tariffs on pharma companies. And Kazakh lists with 15% of gains on BSE and NSE. The 860 crore rupee IPO was subscribed over 63 times. It was entirely an offer for sale. Hi there, you're watching Markets at 12 with me, Shreyanshi Singh. Let's take a look at what the markets are doing at this point in time. Of course, we'll get to a check on what different sectors are doing. But first things first, let's take a look at the markets. And when you take a look at the markets, range-bound seems to be the name of the game. And that's the word of the week when you look at the markets as well, at least at this hour. Because you do have Nifty that's not doing all that much at this point in time. Same can be said for Sensex. Nifty just hovering above that 25,500 level as we speak. When you take a look at some of the sectors, you have FMCG, defense, rural, as well as auto, exactly in this order leading the gains. On the flip side, there's realty that's not doing all that well. Metal, IT, PSU Bank, oil and gas as well. Those are some of the packs that are not doing all that well. But let's also take a look at some of the gainers from within the Nifty 50 pack. So it's a Shriram Finance, a Geo Financial Services that makes it to this list, up anywhere between 1.5% thereabout. To about 1.6%. So HUL as well, that's holding on to a 1.4% gain. Bajaj Finance, Maruti Suzuki, Asian Paints, those are some of your top gainers from within the Nifty 50 pack. On the flip side, when you take a look at the losers, Tata Steel, Hindalco, HCL Tech, Dr. Reddy's, L&T as well as Wipro, those are some of your losers from this entire pack. But tell you what, let's take a look at some key commentary coming in. Let's get you some market opinion. On that note, we spoke to S. Narain, ED and CIO at ICICI Prudential AMC about SEBI's role in the investigation of the Jane Street scandal. He says that the broader impact, saying that Jane Street rub-off is in fact limited strictly to weekly derivatives traders. Let's go across and listen in.
For a regulator to pass an order of this nature onto a global firm which is trading in Indian equities or Indian derivatives and making this money, do you think this can dampen the mood of global firms which are looking at trading into Indian markets or not really?
I don't think so. If you look at India, I think so many Indian foreign investors and the most storied investors have made money in the last 30 years by being investors, not by doing weekly derivative options. If you look at the amount of money they have in India, it is $800–900 billion. And they made money by investing for the long term, not by doing weekly derivative options. So I think it has no impact on all those long-term investors. I don't think the long-term FIIs are going to be affected by what happens in weekly derivative options. I think weekly derivative options is something a few investors have focused on. Most of the investors who've been there in India from 1994 till 2025 are very different type of investors. They have taken long-term bets on many companies, and they are big shareholders in most of the prominent companies in India. They are not weekly derivative exposures.
All right, and there you go. That's the word coming in from S. Narain when it comes to Jane Street. But let's move on. Let's move on to the top story of the hour. In fact, we'll be getting you some more insights a little bit later. But US President Donald Trump announced a 50% tariff on copper imports during a cabinet meeting, signaling a major trade shift. In fact, he's also proposed a 200% tariff on pharmaceutical products, offering also a year-and-a-half grace period and also hinting at upcoming tariffs on chips and other sectors. But for now, let's go across and listen into what he had to say about copper.
And we'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%. We'll give them a certain period of time to get their act together. But they were all here, now they all left. They went to other places because we allowed, people that sat in this room allowed it to happen. And I don't allow it to happen. The people in this room don't allow it to happen. So we're going to be announcing pharmaceuticals, chips, and various couple of other things, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Why don't you announce copper?
And we did cars. And now today we're doing copper.
What would that tariff be on?
I believe the tariff on copper, we're going to make it 50%.
50%.
All right, then that right there is the word coming in from US President Donald Trump when it comes to some of these tariffs that he's gone ahead and slapped when it comes to copper as well as pharma. But let's take a look at copper prices, because while the Nifty is largely range bound at this point in time, it's copper prices that are skyrocketing to a record high post this announcement. What is the outlook now when it comes to all of these, the prices as well for copper futures? Let's go across to Vansh for now, because we'll be speaking to Kunal Shah of Nirmal Bang about that in just a bit. But first, let's get a sense of the context that we have as far as copper is concerned. Vansh?
Yeah, right. So the copper prices are up 1% in the last 1 month, and they are up 8.21% since Feb 2025. Let's understand the entire scenario. There have been higher premiums in the US physical market, and there has been a substantial premium for the immediate delivery of copper to US. So what is being basically done is that for the arising arbitrage opportunity, the traders are buying copper elsewhere and shipping it to US. And 4 lakh tons of copper has been shipped, physical copper has been shipped to US this year, and the copper stockpiles in US are at the highest level since July 2018. Let's also understand the outlook and what the analysts are indicating for this. There is a strong demand growth for copper coming in from China, and there is a shortage of inventory of copper in China and other parts of the world, as majority of the inventory has already moved into the US. And the rise in copper prices, the analysts also anticipate that the rise is just a rush, and the inventory will be still lying down in the US. And the inventory US and the rise in the inventory in US have commanded significant premiums, and analysts anticipate the copper prices will settle down below $10,000. And also this would be a slightly negative for the copper consuming companies, as they may face headwinds in the near term.
Right then, so near-term headwinds is something that we're looking at. Thanks, Punch, for getting us that entire roundup. But tell you what, let's take the conversation forward as promised. Let's get in Kunal Shah, who's the head of commodities research at Nirmal Bang, to join us this afternoon. Kunal, hi, thank you so much for taking time out and joining us this afternoon. I wanted to get a sense of what you think about the numbers as well, because 50% tariffs, it's a very big number. What's the near-term impact that you're penciling in at this point?
Yeah, so it's really very interesting. It's not as simple as, so generally the first thought which comes in mind that 50% tariffs, so copper is going to be expensive and hence we should buy. That's not the right way to look at it. So if you see what's been happening, the copper yesterday on LME moved up by hardly not even 1%. LME was off yesterday. COMEX copper moved up by 12% yesterday after this announcement, and LME copper today edged down to 2%. LME copper was down by 2% after this news. COMEX copper was up by 10% and LME copper is down. Now what is happening is US has been importing a lot of copper from last 4 months. Earlier they used to import around 80,000 tons of copper, which their numbers have shot up to almost 2 lakh tons. I'm talking about the monthly imports. So this kind of move was preempted, and US have been stocking copper aggressively from last 3 to 4 months. And now you see this announcement coming by Mr. Trump, that 50% tariff. So now what is going to happen? all the copper producing countries or the copper producing companies are going to dump this copper to Asia. So China, India, Philippines, Vietnam, Indonesia, these are the countries, where they are going to dump. Africa. So the excess copper is going to flow into Asia. And that's the reason, the Asia is not reacting positively to this news. Copper stocks in Asia are down because the glut will be formed in Asia. Whatever US, because of this 50% tariff, the US is going to, in US, we are going to see a drop in imports going forward. So we are not going to see US aggressively importing copper going forward because they've already stocked it. They've already created good inventory. Now it's the turn of Asia. Okay. And Asia is going to witness in the shorter term the glut happening in the market. So the long-term fundamental of copper because of EV, green energy transition is very positive. But in short term, there are headwinds because of the tariff. It's creating glut elsewhere, and hence it is creating a downside in copper prices on LME and in India also.
Well, absolutely. Thank you so much for bringing that up because, that sort of trajectory that you've seen for LME as well as copper futures, the difference is quite stark. And that is something that's quite interesting that stood out to me as well. But I also wanted to get your sense on what you think about the supply picture going forward. We'll come to the longer term picture. Of course, you've talked about it, but we'll come to the longer term picture in a bit. First, I wanted to talk about the backwardation that seems to be there, the tight supply that we're looking at. What is your outlook when it comes to the supply picture at this point in time?
See, if you look at the overall supply scenario, the copper concentrate market, is having shortfall because the quality of ores from the Latin American countries have been depleting. The top copper mines of the world, Codelco and everything, they are witnessing the quality of ore is not up to the mark, and hence the concentrate supply is pretty tight. But what has happened on the other side, which is the finished product, the refined copper, China has come up with huge amount of smelting capacity over the last 3-4 years. And the kind of smelters which exist in China, right now, the smelting margins are almost close to zero. So there is a glut in the refined copper market in China because of excess smelting capacity. So once there is a curtailment in the smelting capacity to take place, you will see the balancing out of copper will take place because the concentrate is tight and the refined copper market is having a glut. So in next few months, a lot of copper smelters in China will be forced to close their operations, and that will lead to a good and healthy bull run in copper. So in a shorter term, we see some headwinds because of the excess smelting capacity, because of the US tariff, and in the longer run, because of the tighter supply in the concentrate market, we will see a bullish trend.
All right, then I also wanted to, since you've mentioned China, I also wanted to zoom in a little bit when it comes to the picture for China, right? Because there's China's economic recovery as well. Start of the year, that was something that we were penciling in to be quite the important factor when it comes to copper. So what do you make of that as well? Is there still some sort of bullishness when it comes to this entire economic recovery picture? And how do you see that also playing into copper prices?
Okay, it's a very good question. So I don't see the demand growth for the industrial metals will not be even 1% in China, because we are seeing the crisis in the Chinese real estate sector. Partly we've seen the solar revolution taking place in China and green energy that has led to good growth in demand of copper. But right now, 1% demand growth also in copper will be difficult. But on the contrary, the demand growth in other parts of the world, in Asia, in India, in Indonesia, Vietnam, Philippines, all these places, Africa, the demand growth over there is going to move up. So for example, in India, you see the projection, the copper consumption is going to rise from 2 million tons to 3.5 million tons in next 4-5 years. So here we are seeing almost double-digit growth rate in terms of copper demand, but the demand growth in China will moderate. So look for the other buyers rather than just depending on the China. We've been dependent on China for quite a bit of time, but now we are going to see very muted and tepid demand growth from China. and elsewhere the demand. It's a multipolar world, like Mr. Jaishankar said, and India is the biggest beneficiary of that.
Well, absolutely, Mr. Shah, multipolar world, and India is set to be the biggest beneficiary. But tell you what, in the multipolar world, it's President Trump who's in fact deciding what happens to copper futures like we've seen this morning. But I wanted to understand what your picture is when it comes to his environmental policies as well, because even they're quite important when it comes to deciding the trajectory of copper prices. So what do you make of the environmental policy side of it?
If you see in mining side, what I have been studying, no major growth in the supply side is coming from on the concentrate side in any of the metals because of the environmental concerns, which is one of the major issues. And all the big miners are finding very difficult, to meet the domestic, the country's policy and to meet the environmental concern criteria. So it's a very tricky scenario. On one hand, the green energy demand wants more and more of industrial metals, including copper. But on the other hand, the miners are not able to come up with this kind of massive supply growth. So it's a very tricky part. And anywhere where there is an excess capacity, like I explained to you, China is having excess capacity in the smelting side. So because of this multipolar world, the place where there are excess capacity, they will get shut, and the place where there is a shortage, they will build their new capacities, and this all process is going to be very time consuming. So the entire market, the commodity market is witnessing I have never seen, I'm in this market from the last 20 years, and I've never seen this kind of movement where the COMEX copper price moves up by 10% and LME copper prices goes down by 2% and India copper prices are flat. So this kind of movement doesn't take place. So these are rare phenomenon, but we have to live in this kind of world.
Rare phenomenon indeed, and driven by the headlines that we've seen this morning for us. But tell you what, I'm going to be a bit greedy and try and get a sense of what you think about other metals as well. But before I do that, tell us about your forecast when it comes to copper, if you have anything in mind in terms of prices there, and even for gold and silver, what are the kind of price levels that you're looking at? What do you expect there?
So I'm bullish on copper from the longer term perspective. All these headwinds are going to be very short term and short lived. There are two macro trends from here. One is the sharp depreciation in the value of US dollar. That is one narrative. And second, because of the concentrate supply, the prices will shoot up. So these are the two reasons why I remain optimistic from the longer term perspective on copper and other metals. So in other metals, I'm bullish on two metals. One is copper and other is silver. These are the two metals where I have seen that shortages have been developing. So if you look at the demand and supply scenario, silver and copper are the two industrial plus. Yes, silver is also considered as a precious metal, but these are the two metals where the supply side is witnessing major issues, and that is not being able to meet up with the demand side. So the quality of ores in top mines of the world of copper is depleting, and in silver, secondary mines, which is zinc and lead, most of the silver comes from the zinc and lead mines.
Mr. Shah, I just quickly wanted to help us with a number here when it comes to copper prices, silver as well as gold. Before we let you go, I just wanted to get a number.
Okay, so copper, my targets by the end of the year, it will be again somewhere at $10,500 on LME. Silver, I'm very bullish, $38 to $40 by the end of this year. And in India, that should translate to 1,20,000 to 25,000. And gold, I'm not very bullish. $3,500 seems to be the top. Gold has discounted all the bullish news well in advance. When the rate cut comes aggressively in US, gold will move up.
Absolutely. Thank you so much for taking the time out and joining us this afternoon, Mr. Shah. Thank you so much for that outlook as well. But let's move on. Let's take a look at what will be the corporate impact of this development. In fact, we caught up with Sri Gopal Kabra, who's the MD at RR Kabul, about this. And let's take a look at some of the commentary that has come in from this interaction. No formal notification beyond the initial statement. Implementation and timeline, in fact, remain unclear. That's also something that they've highlighted. And the tariff on copper, in fact, appears to be primarily focused on raw and refined forms. So that's also some key commentary coming out from this interaction. And clarity is still yet to emerge on whether value-added copper products, the likes of cables, transformers, wires, tubes, as well as copper alloys are going to be included. And cathodes from countries the likes of Japan are going to be finding their way to US warehouses in the near term. So that's also something on the outlook when it comes to copper. But let's move on then from copper. Let's shift focus to the other big news then. The Association of Mutual Funds in India, or AMFI, has released mutual fund data for the month of June. SIP inflows rose to 27,269 crore rupees, an all-time high. And my colleague, in fact, Alex, joins in with more details on the June AMFI data.
So the big headline, of course, is that SIP inflows and gross SIP inflows are at an all-time high. They've stood at 27,269 crore rupees in the month of June, and that has eclipsed the previous high, which was in the month of May, of 26,688 crore rupees. And that has contributed to a certain extent to an improvement in the net inflows into actively managed equity mutual fund schemes, which in the month of June stood at 23,587 crore rupees, and that compares with a net inflow of about 19,000 crore rupees. Now, this is particularly important because in the previous month, there were also new fund offers that generated about 4,000 crore rupees worth of inflows, and this month there were inflows of only about 1,400 crore rupees or thereabouts, and even less in the way of inflows into actively managed funds through new fund offers. So all told, you have flexi cap funds, you have small cap, mid cap, large and mid cap, as well as multi cap funds that have gotten pretty decent inflows. What is interesting is that the sectoral and thematic category, which is a investor favorite, has actually seen outflows if you remove the NFO that was launched in the month. In fact, along with that NFO, there were inflows, net inflows of 475.6 crore rupees in the month of June. So seemingly people are being a little cautious. They may be pulling money off the table if they've made considerable gains in indices like, for example, the defense index or actively managed defense funds. Apart from that, you have a reasonable inflow into hybrid schemes, most of which in the form of arbitrage funds, about 15,580 crore rupees out of total inflows in that category of 23,222 crore rupees. A lot of people have shifted from short-term debt funds or liquid funds into arbitrage funds, and that is visible in the outflows from the fixed income category as well. Of course, at the end of the quarter, you generally see outflows from liquid funds, and that was evident as well. But you've seen inflows of 10,270 crore rupees in the way of short duration funds as well. And this is an interesting development. Usually that does not take place towards the end of the quarter. All told, to sum it all up, it is a positive month for the mutual fund industry, with investors coming back into the fold after the uncertainty that they experienced in the month of May.
Well, absolutely, Alex. Positive indeed. And the SIP inflows, in fact, have hit an all-time high yet again. But let's move on to stock-specific news then. Take a look at Union Bank. That is down about 4%. It reported a disappointing start to the fiscal year with its business update for the first quarter showing a sequential degrowth in key metrics. We have Harsh who's joining in with the earnings fine print.
Degrowth, both with regard to deposits and advances, not looking very impressive, right? And it's not like the base was too high either. When you're looking at the YOY numbers as well, we're seeing roughly a growth of 4% on the deposit side YOY and less than 7% growth on the advances side. So a degrowth QOQ, a growth which is maybe mid-single digit on a YOY basis. Neither of those looking too impressive. When you're looking at the CASA as well, 5% degrowth on the CASA on the CASA absolute number on a QOQ basis. Again, not looking very impressive, even from a current savings account growth perspective. So none of those numbers really looking impressive, and therefore that reaction that you're seeing on your screen.
All right, and thanks, Harsh, for that roundup coming in. So that's Union Bank that we're talking about. Stock taking it on the chin, down about 4% as we speak. But let's take a look at Adani Green as well as Adani Energies, because there's a Jefferies note where they're maintaining a buy on both of these counters. Let's take a look at what they had to say then. Varsha.
Yeah, thank you for that. So yes, Jefferies has maintained buy on both of the counters. Starting with Adani Green, what they say is the buy that they've given is because of the accelerating capacity addition and a significant discount to which Adani Green is trading at. So if you see, the valuations are at 60% discount to their Jan 2023 peak. This creates room for upside on execution. They have a journey to raise capacity 3.5x from 14 gigawatt to 50 gigawatt by 2030 with improving net debt as well. Over 80% of companies, if you see, installed capacity is secured by 25-year long-term power purchase agreements, ensuring stable cash flow visibility and supporting balance sheet as well. When it comes to Adani Energy, let's see what Jefferies is saying over there. So they see Adani Energy as locked in for double-digit medium-term growth, and the company has 61,600 crores of transmission projects in hand, which is up almost 3.5x. The Mumbai distribution business is actually showing good steady growth for the company, with losses reduced to 4.7% from 5% earlier, and the Mundra facility has been offering upside potential. And lastly, if you see, the company's valuation currently stands at 79% discount to its January 2023 peak, suggesting significant upside potential driven by EBITDA delivery as well.
Alright, then that's the take coming in as far as some of those counters are concerned. But do know that NDTV is a subsidiary of AMG Media Networks Limited, that is an Adani Group companies. So do remember that, keep that in mind. But let's move on, take a look at some other buzzing stocks as well, because Dixon Tech, EPAC Durable, as well as Bajaj projects, those are the three counters that we're looking at. Jasmeet is standing by with an update on all three of them.
Well, right. Firstly on my list is BLS project. While this company announces an addition of 170 additional crore at Rangoon facility, while this is an capacity addition given that the company has increased demand from domestic as well international market. The company plans on increasing the capacity to 110,000 MTPA from the current 40,000 MTPA. That's almost more than double. While the new capacity addition to be done by end of FY26, that's from Q4 FY26 up until Q4 FY27, and the existing capacity has been realized up to 98%, while the financing for this particular project will be done on internal basis. Talking about the recent updates about the company recently received a mega order from Power Grid. The mega order generally ranges from 300 to 400 crore of value, while the order is for construction of transmission lines up to 99 kilometers, and it is to be executed in next 18 months. While next one on the list is Dixon Technologies. Company has incorporated a 50-50 joint venture with Signify Innovations. The joint venture is called Light Technology Private Limited, while this one is to carry on and make original equipment manufacturing. This will increase company's footprint in lighting space, as the JV is in the lighting space. The cost of acquisition of the complete JV is at 2.5 crore. While the last one on my list is EPAC Durable. Company begins manufacturing of washing machines at its Andhra Pradesh plant. While this will boost company's presence in white goods, this will also support company in the long-term revenue. So these are the stocks to watch out in my radar for the day.
Well, absolutely. Thanks, Jasmeet, for getting us a roundup of all of those counters. So it's largely Dixon Tech that is up about 5%, EPAC Durables as well as Bajaj projects as well, up about 2% at this point in time. But tell you what, that's all the time that we have on this edition of Markets at 12. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these?
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Datia. You're watching Profit Buzzers. With me is Varsha Chandani. Varsha, good afternoon. Interesting day of trade. Clearly, if you see in terms of Nifty as well as Bank Nifty, last couple of trading sessions, you're seeing a lot of consolidation that is happening. Currently as well, if you pull up Nifty 50 on the screens as well as a Bank Nifty, you have gained some ground from where we opened up. In fact, you're nearly at the day's highest levels. You're trading above that 25,500 mark, which is absolutely interesting because the key message from analysts is that on a weekly basis, if you see a closing above that 25,600 base level, that will be a positive sign for the markets. Bank Nifty, let's pull up that one on the screens and see what Bank Nifty is doing in trade. It is still trading in the negative, but at the day's highest level, so recovery coming in on that front as well. The PSU banking space and the private banking space are also very interesting in the last couple of trading sessions with the kind of divergent trends that we should be watching out for. 0.5% downtick there, and there you go. Private bank is performing better than the PSU banking space. In fact, Union Bank of India is one such stock which has been trading under pressure on the back of the business update that it has come up with. Let's look at the sectoral heat map and see what the sectors are telling you at the moment and which are the sectors that are leading Nifty to that uptick. FMCG, smart moves on that front. 0.9% higher. Consumer durables trading in the positive. Auto seeing a good recovery. Defense has come back in the limelight today as well. Apart from that, Pharma, interesting moves, 0.2% higher there. What's losing out is metals, 1.8% downtick, but that's mainly being contributed by names like Tata Steel, JSW Steel, Vedanta, real estate trading under pressure as well. IT, you have TCS numbers that will trickle in tomorrow. Ahead of that, 0.8% lower. So there is some bit of nervousness with regards to where IT majors are concerned. And you have oil and gas, which is also down in trade. Let's quickly look at Nifty 50 heat map to understand individual stocks specific impact. HUL and Asian Paints were interesting movers in terms of when the markets opened up. Shriram Finance has joined the bandwagon right now. Jio Financial Services, Bajaj Finance, M&M is also pretty interesting in trade. What's losing out? Tata Steel, Hindalco, HCL Tech, Wipro, HDFC Life, Apollo Hospitals, you have L&T, Dr. Reddy's and Tech Mahindra. These are few of the ones which are losing out, Varsha. Broader markets also pretty interesting.
Yes, actually a lot of actions happening when it comes to small cap 250 though, but we'll speak in a bit. Let's see what mid cap 150 is doing. If you see, is up almost 0.06%, not that much, but you have Global Health, you have Mankind Pharma, you have Imami, MRF and Coromandel which are buzzing when it comes to mid cap 150. On the loser side though, you have Phoenix Mill, you have Max Health, you have IGI, SAIL, Sona, BLW, which are losers when it comes to Nifty mid cap 150. But a lot of actions happening on small cap 250 though. It's up almost 0.63%. You have PCBL and Himadri Specialty which are gaining. This is on the back of Orion, which is a global carbon black player. They cease to they're gonna stop production of their 3 to 5 carbon black lines. You have Sterling Wilson, you have Garden Reach, you have Metropolis also, which are gaining when it comes to small cap 250. Even Sirma SJS, if you see, the stock is up. Now this is on the back of JP Morgan report on EMS as a sector that they've come through. On the loser side though, you have Hind Copper. Now this is all because of that, as Trump has threatened 50% tariff on copper. Then you have Brigade Enterprises, Ratnamani and Nalco, which are on the losing trend when it comes to small cap 250. So a lot of actions here happening when it comes to small cap index, I would say.
Absolutely. I mean, it's your stock specific action that is on the front run. But tariffs will move up to 20% on an average. That's the word coming in from Jahangir Aziz of JP Morgan as investors made tariff moves. You have Trump, who's come out and said that you are looking at copper, you're looking at 200% tariffs that could be coming in terms of pharma as well in the next 1.5 years. So lots of chatter around this, but let's quickly listen in what is Jahangir Aziz's view as well.
Our sense is that tariffs, which is effectively about 14.5% in the US right now, this is the average effective tariff rate, will eventually move towards 20%. It'll be made up of tariffs, these countrywide tariffs that you have right now, moving somewhere between 10%, which is their bare minimum that they have said, and the reciprocal tariffs that were announced, and tariffs on sectors such as copper, semiconductors, and pharmaceuticals, along with what we already have on steel, aluminum, and autos. Now, obviously, there are exemptions in all of these things. Our sense is that those exemptions will stay or will get diluted in part of those trade deals. But ultimately, the effective tariff rate has, in our view, another 5 percentage points on average to move up.
Okay, so that's the word coming in from Jahangir Aziz. But moving on, what is interesting right now is what's happening to pharma. We spoke about it, I think. Varsha, I mean, a 200% in the next 1.5 years is what you're talking about. How significant could this be if you have to look at the sector? Because the timeline is huge. Whether an impact or not is what is important.
So, Hiral, if you see, so people were expecting pharma to, have under pressure, but that is not happening. Why? Because now we have a relief for at least 12 to 18 months that there won't be any tariff. And the next thing is what analysts are saying. So they are saying that to have a facility in US, you need 4 to 5 years. So that means there won't be any tariffs. They're not expecting any kind of tariffs to come, post 12 to 18 months. So this is, that was one of the reasons why US pharma stocks were up yesterday. And we are seeing Indian pharma sector, or rather index, is up today on the basis of, relief that they've got at least for, 12 to 18 months.
Correct,
as
an
of
interim
now.
relief in the making right now. In fact, we spoke to Aditya Khemka as well. Let's quickly listen in to what he has to say, because he's clearly indicating that the pharma sector in India is insulated to Trump.
The sector is definitely not, vaccinated when it comes to tariffs, but it is definitely now seems immunized to what Trump is saying. I think pharma has now become a part of the taco trade. Trump always chickens out trade. So I don't think investors are now going to react to any more threats. Once you have heard a threat too many times, you stop reacting. I think that's where we are today in pharma.
That's where we are in pharma. Let's get in Gaurang Shah as well. Gaurang, good afternoon and welcome to the show. Always a pleasure to speak to you. You've been hearing all this chatter with regards to what Trump is coming out and saying. How would you look at playing the pharma space, and what would your top picks then be?
Thank you so much, Hiral, for having me on the show. Good afternoon to you and all the viewers of NDTV Profit. So before I give out any recommendations, I think it's prudent to give a disclosure. All long-term fundamental recommendations are a part of our research team's views. Our company, Georgia or I, do not have any personal investments or any other kind of financial conflict of interest or any other kind of conflict of interest, but we give regular recommendations to our clients. They might have investments in these recommendations that I'm going to share. So firstly, I think this Trump saga needs to end here. 2nd of April, we are in mid of July, and now we are talking about August. And between that, there has been a lot of flip-flop by the intelligent president of America, Mr. Donald Trump. You and Varsha were just discussing about how long it will take, 4 years. My counter question is that after 3.5 years, will Trump be a president of America? And what happens to the policies that he has signed as of executive orders? So the reality needs to hit him on his face that India was, India is, and India will always remain a pharmaceutical of the world. And eventually, my other question to all of you all is, who is going to pay the price for this when the tariffs come into effect? It is going to be the common citizen in America whose healthcare related bills are going to go up, because the landed cost of a particular insulin or an injection or an API or biosimilar is going to be higher if and when these tariffs come into place. So I don't think the pharma sector is much disturbed by what Mr. Trump is saying. What are the pecking orders? So I have always maintained, Hiral, that along with pharma, you need to have healthcare hospitals on your radar, and along with that, you need to have diagnostic related companies also on your radar. That forms the entire universe called pharma. We have frontline mid-cap coverage in the pharmaceutical pack. We are excited about APIs, generics, CDMO, biosimilars, and along with that, healthcare like Apollo Hospital or Fortis Healthcare. Diagnostics, we like a stock like Dr. Lal Path Labs. In the pharma, top 4 names would be Cipla, Sun Pharma, Dr. Reddy's, and Divi's Laboratories.
Thank you, Gaurang, for that view. And clearly, hospitals and diagnostics are tariff agnostic. So one should clearly have a view on that. But, moving on, copper hits fresh high. But will this rally sustain? Rakesh Arora of GoIndiaStocks.com believes that the price will soon settle down below $10,000 mark. Listen in as he explains why.
The street was expecting around 25% tariff on copper import by US. So 50% has come as a surprise. That's why you see a 10% jump in copper prices. If I look at overall copper consumption in 2025, China has been building solar power like there's no tomorrow. And just to give you some numbers, in the first 5 months, China has added 105 gigawatt. Now that is equal to India's total solar capacity. So that gives you, a lot of color. US added around 10 odd gigawatt in the first quarter. And this was down like 7%. China was up 150%. So what is happening is that, we have strong demand growth coming in China for copper. which is growing at around 13%. And because of the tariff, the inventory is all moving towards US. So rest of the world is left with much lower inventory. When you club the inventory of US and rest of the world, it is probably higher than what it was in 2024. But since everything is rushing to US, the rest of the world is seeing much lower inventory, and that's why the prices are moving up. This phenomena will last for some time because US demand is not there enough to support that kind of inflow. So you will see bump up in copper prices in the near term. We're already seeing that, and probably in 1 or 2 quarters as things settle down, copper will start to come back to below $10,000 level.
Well, sticking to that, KA Industries adjusts selling price in line with copper price fluctuations, says the company CMD Anil Gupta. He also talks about the impact of significant copper price hike on the company. Do listen in.
So far as our business is concerned, but whenever the copper prices are rising, we are immediately passing it on to the users. And if it is dropping, we are also reducing our selling prices of our cables. So I think so far as we are concerned, it will have no impact. But any significant rise in copper price may impact the demand temporarily, because ultimately the user industry normally does wait and watch policy for some time if the prices goes up significantly.
Right, Gaurang, if you see, this 50% tariff on copper, which has been threatened by Trump. Now, if you see India impact, this is positive for Hindustan Copper, Hindalco and Vedanta. But yes, negative for, power sector, consumer electronics and automobiles. So, any view on that and any picks that you would like to say?
So, Varsha, I think it's going to be a temporary phenomenon. Like the influx of copper into US might have its own limited lifetime. And then there's going to be a question of more than required copper getting, it's finding its way to the US. So short term, medium term, very difficult to take a call. I'm not capable of taking a short to medium term call, but yeah, from a long term point of view, if you ask me, well, metal is driven primarily by, in the immediate time frame, what news flows come from US with respect to tariff, and then it is also driven by what news flows comes out from China. Having said that, Hindalco and Vedanta, these are the two stocks on which our research team has a positive coverage on the fundamental side.
That's what is with regards to the tariffs in terms of copper. But moving on, let's just look at the other side of the story in terms of EMS companies. All of them buzzing in trade. JP Morgan is bullish on the sector, in fact, calling it a sunrise sector. Puneet has all the details. Puneet, which are the companies that they are really positive on? And there are a few where they have a neutral rating. If you could highlight what's the differential.
Well, thank you for that. So they've initiated coverage on 6 companies and maintaining the positive view on 3 of them. They have an overweight rating on something like a Syrma SGS, Dixon Tech, as well as Keynes Tech, and the target price is on your screen right now, while they maintained a neutral rating on something like an Amber Enterprises and Sign DLM, and an underweight rating on something like an Avalon Tech, which is still a smaller player in the EMS space. Now, they are mentioning, as you rightly said, that India's EMS space is a sunrise sector. They've gone on to say that they are believing that the growth story will continue with even stronger growth going forward. They're seeing a 32% revenue CAGR over the next 5 years until FY30. For Syrma specifically, they've seen that the growth acceleration as well as margin expansion story is likely to continue, something that's been a key problem for Syrma, and hence they have it as an overweight rating. For Dixon, the mobile-led growth will continue in FY27, while the non-mobile revenue, which includes laptops amongst other segments, will drive the growth for the company. For Keynes specifically, they've mentioned that this will be the fastest growing EMS player, 46% revenue CAGR over the next 5 years. They're also seeing that they are targeting a revenue of $1 billion by FY28. And they've also done a QIP recently for the next billion is what they've spoken to NDTV Profit for. So definitely a positive. Finally, they see that Syrma, Cyient and Avalon, the export push could be big for them. While for these companies, a 3x rally in 3 years will be one of the key aspects to watch out for.
Thank you so Much for that, Puneet. Gaurang, and Puneet, stay with us. But before I come back to you, Gaurang, how are you looking at the EMS space and taking the valuations into consideration? Do you think the sector is indeed a sunrise sector and a good opportunity to enter right now?
Cyril, I think we waited far too long for to see a made in India chip or a semiconductor or PCBs, as a matter of fact. And we were hit very badly when that supply side issue erupted in China with respect to chips, semiconductors and PCBs. And that's one of the reasons why government in principle decided to give support and change and implement policies which will enable make in India chips, semiconductor and PCBs. So I think one company, if I'm not mistaken, that Puneet left out was PG Electroplast. This company is into consumer durables and EMS. Our research team likes the sector, and we have an accumulated stance on PG Electroplast Limited from a long-term point of view.
Thank you, Gaurang, for that view. Well, moving on, the curious case of SML Isuzu's now stock rally continues to puzzle the street since Mahindra & Mahindra announced its acquisition of the company in April. The stock, if you see, has surged 79%. Now, despite a lack of any major fundamental triggers. Let's see, Puneet, still with us, Puneet, give us more details on that.
Well, thank you for that. So definitely there are three key price points that you need to know, and that's where the key aspect is, because for SML, when the deal was announced, SML Isuzu's price was roughly about 1,590 rupees per share, and subsequently the offer for sale, or essentially the open offer, was announced at 1,554 rupees per share. M&M acquired the company from its promoters at 650 rupees per share, and the company's current price is over 3,000 rupees. And that's where the key aspect is, that the differential, it's almost 1.8 to 2 times now of the open offer price, and almost 4.5 times of the acquisition price that M&M had announced. Now, that is one of the key aspects and the key reason we're looking at it. What's led to this share price move? It's almost up 85% now because of this, but there's nothing that's warranted this particular rally apart from the company's quarterly results, which doesn't justify the over 80% move. They reported a 13% growth. Margin profile was also strong, 190 basis point gain to 12%, but that's largely about it, because M&M got the CCI approval in middle of June, and since then we've seen almost a 70% uptake from somewhere around June 24th till 9th of July on something like an SML Isuzu. But there are 3 to 4 key questions that we want to answer now. What is the M&M's plan with SML Isuzu? The first one is that M&M largely sells trucks between the 2 to 3.5 ton range, and this is the weight of the truck. The higher the growth, or the higher the weight, essentially gives the kind of growth for the fleet operators. In terms of SML, they largely operate in the 6.5 to 9 ton range. So it's a new segment for M&M and will give them growth prospect as well. They're also looking at increasing the market share to 6% with this acquisition, planning it to double in the next few years, somewhere around FY31, and by FY36, planning to capture 1/5 of the market with this particular acquisition. So that's the one key aspect. The key question though, will M&M revise its open offer price now? There's no compulsion as per the rules of SEBI and the takeover regulations to revise the open offer price. The key aspect is, if the current market price continues, M&M would, but the tenders, essentially the retail investors wouldn't tender their shares, and M&M will actually acquire the company at a much lesser price, or the number of sum that they had put in. It was expected that if the open offer price was to go through, 1100 crores is what they would have spent. It would save them a lot of cost and still have the company in its midst as well. The other aspect is public shareholders of SML Isuzu. It has Sachin Bansal, who is the co-founder of Flipkart earlier. He has a 19.4% stake, but it has no mutual funds, no insurance companies, or FIIs or DIA holdings in its midst as of now. Final question though, what is next for SML Isuzu shareholders? Now, the open offer dates are still pending. We mentioned that the CCI approval came on June 17th. So that will be one of the key aspects to watch out for once that happens. On a valuation basis, 12 months forward, it's at 49 times price to earnings versus 31 times the last 2-year average. And that's largely become differential because of the valuation metrics. the retail investors and the minority investors do need to stay cautious, because we've seen a huge up move in a very short amount of time, despite the parentage of M&M. That will be one of the key things to watch out for.
Thank you, Puneet, for all of this. Gaurang, this is a pretty interesting story. Do you think this is a masterstroke by Mahindra? Because it's one of the best bargain buys in corporate history, I would say, because if you talk about the current market price, it's double the open offer price. So there is a possibility that no one would tender. M&M will probably go ahead and save that much cash as well. So the question of revising the open offer price does not really arise. There is no counterbid or no regulatory pressure on this front as well. How would you look at this entire scenario, number one? And two, what would you advise a SML Isuzu investor to do in such a scenario? Do you think this is the best time to then exit, or would you see further upside?
I think it's a tricky one here, to be very honest, to answer. But let me say this, in Feb end and March this year, the stock price was at about 1,050, Hiral. Before that, somewhere last year in September, the company gave out a dividend of 16 rupees. Then suddenly we saw a rise in April. It was stagnating between 1,500 and 2,000. And from third week of June, the stock has seen a spiral upside move to the levels where it is trading right now. As Puneet was mentioning, and as even I don't recollect having heard or read any such news flows which can trigger this kind of a move. So again, for the shareholders of SML Isuzu, I would leave it to their own wisdom, given the kind of spike up without any fundamental reason. One needs to possibly introspect and act accordingly. As far as M&M is concerned, let me give a disclosure, Hiral. We've been maintaining a buy on M&M for a pretty long period of time. And currently, as we discuss about this stock, we are maintaining a positive view on M&M. For SML Isuzu, I would also mention, I would also like to advise a word of cautious, though I won't be specific since we don't have coverage on SML.
Okay. So that's an interesting take coming in on that front as well. But SML Isuzu at the day's highest levels, nearly 8.5% up move coming in there. In fact, another stock that is buzzing in from the auto space or the ancillary space is Belroyce Industries, expected to grow in the four-wheeler segment. The company promoter says the stock has also been surging in trade for the past few trading sessions on the back of the Jefferies positive note. Let's quickly listen into that bite as we slip into a short break.
Two-wheeler buyers are now moving towards four-wheelers. And from that perspective, we believe there's a large opportunity to grow in that space. We've just completed an acquisition of this company called H1, which is owned by a Japanese parent called H1 Japan. And we've expanded our foray in the four-wheeler industry, and we believe there's a large opportunity to grow there.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost.
Trading flat, Nifty above the 25,500 mark. You have consumption and auto which are leading the gains.
On to AMFI data, inflows into mutual funds normalized in June after a bit of roadblock in May due to geopolitical uncertainty. Equity mutual fund inflows jumped 24% to Rs 23,587 crore. Gold exchange traded funds recorded the highest inflows in 5 months in June.
US President Donald Trump announced 50% tariff on copper imports. Boon for Indian copper producers, but a bane for copper consuming industries. Separately, he also announces 200% tariffs on pharma companies after 1.5 years is what he thinks about.
And Chrysler lists with 15% of gains on BSE and NSE. The 860 crore IPO was subscribed over 63 times. It was entirely an offer for sale.
Welcome back. You're watching Profit Buzzers on NDTV Profit. But let's quickly take a look at a few of the buzzers in trade. Union Bank of India, that's one stock you should be looking at, and this is on the basis of the business update that they have come back with. The stock has been trading under pressure with cuts of around 3.5–4%. To quickly look at what's gone wrong, overall the deposits have degrown on a sequential basis. You have advances also which have degrown, and your CASA has remained absolutely flat. In fact, we also have Gaurav Sharma, from Globe Capital joining in along with Gaurang. Gaurang, let me first come to you in terms of Union Bank. How are you looking at the business update, and what is it that has put this kind of pressure on the stock?
Hiral, this is a classic example, not only for the first time, but some of the public sector smaller banks have got very volatile earnings reporting structure. I'm not only limiting my comments to Union Bank. You take, for example, Central Bank, you take, for example, Bank of Maharashtra, and some of the other small banks. 1 or 2 quarters, you will get great numbers. The other quarters, there'll be disaster in terms of numbers reported. And that's one of the reasons why we always recommend that don't look at the price of a public sector bank. Look at the work and the numbers reported. I think that is very, very important in terms of financial sector investment. So we like public sector banks. State Bank of India, Bank of Baroda, Bank of India, PNB, Indian Bank, Canara Bank. These are some of the public sector banks on which our fundamental team has a coverage. And I would definitely advise a word of caution as far as smaller public sector banks are concerned.
Right. Moving on, metal giants including Tata Steel and JSW Steel have also come up with their Q1 business update. Vansh joins in with more details.
Right, so both of the companies have come up with their business updates. Let me start off with the first one, JSW Steel. Now, the company has reported its Indian operations, a downtick in the Indian operations by 5% sequentially, and a flattish of operations in JSW Steel for USA. And consolidated level, the production volumes have remained saw a decline of 5%. So the key highlights from the same were that the planned maintenance shutdowns of the blast furnaces had impacted the sequential production for the company, and the capacity utilization for the Indian operations stood at 87%. Second, it's the Tata Steel. Now that company has reported a production volume degrowth of 3% in the Indian operations, and a 6% uptick is seen in the Netherlands, and 3% uptick in the Thailand operations. Also, let's look at the delivery volumes for the company. There has been a downtick in the India, Netherlands and UK operations with 15%, 14% and 5% respectively, with Thailand operations seeing a marginal uptick with 3% rise in the delivery volumes. So what has impacted the same is the maintenance related shutdowns in Jamshedpur and Nilashchat plant has significantly led to the downtick in the delivery and the production volumes for Tata Steel.
Right. Thank you, Vansh, for all the details. Well, Gaurav, let me first come to you. How are charts looking when it comes to JSW Steel and Tata Steel?
Overall, both the stocks are well placed, but when we have to compare, Tata Steel is a tad better, simply because the stock is trading, very close to its longer-term moving averages, which will act as a support somewhat around 150 odd levels. Currently, the stock is trading at 158, so that becomes more logical to taking a short-term position in this stock rather than going with JSW Steel, which is nearing its resistance mark.
Right, got that view. And Gaurang, so when it comes to JSW and Tata Steel both, so the numbers have been impacted because of the planned shutdown. Now, just wanted to have a longer term view when both of these stocks are concerned.
So Varsha, I think shutdowns. Yes, so Varsha, the shutdowns are a regular part of maintenance of a plant, especially when it comes to the metal sector. So it's no surprise every year you have shutdowns because of maintenance issues, upgradation, etc., etc. On the fundamental side, well, Tata Steel has been on our research team's buy coverage for a pretty long period of time, and even as a matter of fact, for JSW Steel, that's been on the buy side for a pretty long period of time. My only request to your viewers is that if you eventually understand and decide to invest in the metal pack, please have a 1.5, 2 year plus kind of time horizon, because the headwinds in terms of US and China are a concern in the short to medium term, but long term, domestic consumption looks extremely robust and there is a possibility of price revision upwards as well.
Okay, so that's with regards to where metal names are concerned. But overall, apart from these names, you have two other counters which are buzzing. And that's on the back of the boost that we are seeing for carbon black players. I think, Varsha, you have more details in terms of what has happened and why that boost.
So two stocks which you were speaking about is, PCBL and Himadri Specialties. Now, Orion decides to shut down their 3 to 4 carbon lines. Now, if you see, Orion is a global supplier of carbon black, and the discontinuation of carbon black lies with America and EMEA. And this news is actually positive when it comes to Indian carbon black companies, and hence you are seeing PCBL and Himadri Specialties which are up in trade today. Now, if you see, talking about the PCBL, let's see what is their capacity when it comes to carbon black. They have India's largest carbon black capacity, and the total carbon black production capacity is at 7,90,000 metric tons per annum. This includes both rubber black and specialty black products. Now, they aim to reach 8,80,000 metric tons per annum by FY26. So, huge expansion plans when it comes to PCBL. Talking about Himadri Specialty, if you see, the total capacity stands at around 1,80,000 metric tons per annum, and the capacity for specialty carbon black, which is a higher margin product, stands at around 60,000 metric tons per annum. So overall, because we are global player is shutting down 3 to 4 lines of carbon black, Indian manufacturers will get benefited from this. Gaurang, what's your view when it comes to PCBL and Himadri Specialty, because both of the companies are doing a good expansion plans when it comes to carbon black and of course specialty carbon black as well?
No specific comments since we don't have coverage on either of them, but yeah, I think the industry is likely to do well, and the amounts that they are spending in terms of capex should augur well, keeping in mind the futuristic demand.
Okay, got that view, Gaurang. Well, Gaurav, how are charts looking for PCBL and Himadri? Should investors chip in or they should exit?
Both the stocks are well placed as well as their charts are concerned. PCBL looks pretty impressive today, is moved up slightly over 5% in trade. It is also consolidating in a range. The charts are suggesting a breakout coming in real soon. So I advise the viewers, if they are having a position, they must just hold on tight and sit firmly. The stock is likely to test 500 levels soon.
Okay, so that's with regards to two stocks that see an impact on the back of carbon black. But marginal projects, I beg your pardon, is in focus because the company is planning a capacity addition of nearly 170 odd crores at Ranjangaon facility. Anushi joins us with the details. Anushi, the stock is locked in upper circuit, and last couple of trading sessions have been absolutely interesting for this counter.
Hi, afternoon, Hiral. As you just spoke about Bajaj projects, an interesting set of developments that have been happening not just today, but some of the recent order wins also, which have been in focus for the company. Now, currently what has happened, they've planned a capacity addition of 170 crore, as you pointed out, at their Ranjangaon facility. And this capacity addition is in line to meet their captive demand and sales in both the domestic and the international markets that we are looking at. So with this, the company is planning to increase its capacity of galvanization to 1.1 lakh MTPA, that's a million ton per annum, from 40,500 capacity is what we are seeing. And this would be in phases, which would go on from Q4 of FY26. It will begin from there and will continue till Q4 of FY27. So it's this 1 year period that these additions will take place. So if you look at the existing capacity level, that stood at 98%. So interesting would be to question on where the new capacity additions utilization levels would stand in this 1 year period as well. If you are talking about the financing of this 170 crore of addition that we are seeing, that would be done via the internal accruals as well. Now, in terms of the recent updates, the company had also received a mega order which is in the size of 300 to 400 crore from Power Grid, and this was for construction of a 400 kilowatt of a new transmission line as well. Order book of the company also remains on the healthier side, almost almost a 4 times of a book-to-bill ratio that we are looking at, with the order book stacking up at 2,984 crore. This is as of the March figure that we are looking at. In terms of the FY25 performance, the company did see a revenue growth of 122%, while margins were at 2.3% as compared to almost 1% of level last year, and net profit saw about a 260% of a growth. You just pointed out in terms of stock performance also, if you see this 1 month period has been stronger for the business, 13% of an upside. However, in the 6 months to 1 year, it has not done that well compared to other peers which are there in the similar space. In fact, 6 months it was about 1% up, so flat sort of a stock return that we're looking at. In 1 year, it's seen about a 17% of a downtick. So this is the overall picture that we are seeing for Bajaj Projects, and why it doesn't focus into it today.
Okay, thank you so much, Anushi, for the details. Gaurang, how are you looking at a Bajaj Projects? A recent listing, overall strong moves. Do you think this warrants a good look from a valuation perspective as well?
Well, here I will give it a pass because I have no insight on this.
Okay.
Sorry about this.
Okay, I don't think so. I should take a question with Gaurav as well on this one, because I don't know if he would have that kind of history. But another stock that is in focus from here on is a Vedanta. Let's quickly pull up that one on the screens. In fact, shares of Vedanta have hit a downtick of around 5% in intraday trade, recovered, and now trading lower to the tune of around 3.5%. And this is on the back of a bearish report that has come in from Viceroy Research. Let me quickly take you through what they are actually saying. Now, if you see in terms of where Viceroy Research goes, they've put out in their report that they're short on Vedanta Resources, which is a majority owner of Vedanta, and it highlights financial risks from here on. They've called Vedanta Resources a parasite holding company and claims it relies solely on cash from dying host Vedanta. They've uncovered major qualitative and discrepancies and quantitative discrepancies in the group financials. The key takeaways they've put out is that the entire group is financially unstable, operationally compromised, and the company's resources pose a severe unappreciated risk to creditors. Vedanta Resources holding company has no significant operations of its own and is propped up entirely by cash extracts from Vedanta. Overall, it is forcing Vedanta to take on even increasing leverage and deplete cash reserves. This act is eroding the fundamental value of Vedanta. In terms of the major discrepancies as well, what they've highlighted is there is, bait and switch funding model. You're talking about irreconcilable interest expenses, inflated asset values, off balance sheet items, and governance failure. In conclusion, what they are saying is that to cure these conducts, Vedanta Resources has proposed a demerger of the entities. It has diverted from its decade-long acquisition strategy. Very quickly, let's quickly understand what Viceroy Research is also, because we need to understand both sides of the story. This is what the report says and about Viceroy. It's an investigative financial research group. They are registered in Delaware, USA. Their recent reports, they've covered around 29 companies and released around 182 reports in the past. And majorly, their recent reports were on Truecaller, Adler Group, Wirecard, Mimedex, Ebix, and AMD. I think the last report that I'm seeing with regards to Truecaller was in October 2022. And after that, this is on Vedanta Resources that they've come up with. We will await more clarity from Vedanta and from Viceroy to understand what the concerns are and what Vedanta has to respond to as well on the back of this. But Gaurang, any comments?
Little, I don't know why so much of poison has been put into groups like Vedanta. Even earlier, just a reference, Heidenberg, what happened to it? The firm Heidenberg is now, winded up, it's closed its shutters down, and there is nobody to possibly answer queries. I don't have much insight about this particular company and on the Vedanta Resources Limited, but to give you a disclosure, since we are discussing about Vedanta, our research team has a whole recommendation on Vedanta Limited. Yes, the diversified demerger has been in news since last year. I guess it should possibly take some shape this financial year end, and possibly there'll be a lot of clarity. But no specific comments about this particular research entity or Vedanta Resources.
Absolutely, Gaurang. Well made point as well, because, and this is the reason why we are doing this coverage as well right now, to understand, how the markets should be viewing things like that, because you need to understand both sides of the story. And if Viceroy is a US short seller who's targeting Vedanta also wrongly, I think clarifications from both ends would be warranted. So that's with regards to Vedanta. But Gaurav, very quickly, what are charts indicating for a Vedanta?
Yeah, so if I negate today's movement, the Vedanta is very stable, pretty well placed, reasonably consolidating in a 400 to 460, 470 range. Charts are not at all bad. The steep decline seen in today's trade post that news you have already discussed. A decent amount of recovery has also been witnessed in both the stocks, Vedanta as well as Hindustan Zinc. So I still continue to maintain my stance of holding on to the stock till the point it is trading above 400 odd levels.
So that's with regards to the metal space. But moving on, let's quickly pull up a Prestige Estate. A record high sales of 12,126 crores in Q1, not enthusing the stock at all. Sales are up 300%. Collections have gone up around 55%. Average realizations is at around 13,300 rupees per square feet. That's with regards to Prestige. A mild blip, I mean, from the day's low, it has recovered slightly, but still trading in the positive. So that's with regards to Prestige, Varsha.
Yeah, and sticking to the real estate, Nomura has actually initiated reduce to two stocks. One is Phoenix Mills and Godrej Properties. Let's see what they're saying when it comes to Phoenix Mills. So they've reduced their, initiated reduce the target price of rupees 1400. What they say is that slow consumption growth in mature malls and ramp up is expected from FY28, and the consol EBITDA CAGR they're expecting at 13 to 14% by FY27 and FY30. But one of the reasons is why they have given this reduced rating is because the valuations according to them appear stretched. Same if you see for Godrej Properties, one of the reasons why they've initiated reduce is valuations look stretched, and even they say that they expect pre-sales momentum to be weaker than expectations, and volume-driven strategy poses risk of further equity dilution. That's what Nomura is saying when it comes to Phoenix Mill and Godrej Properties. Well, Gaurang, three stocks, one which Hiral mentioned, Prestige Estates. We saw the Q1 update. You have Phoenix Mills and Godrej Properties. So considering all three stocks, where you see the valuation stands up, because Nomura is saying valuation stretched currently for Phoenix Mills and Godrej Properties. Your view on three of the stocks?
So Varsha, the beauty lies in the eyes of the beholder, isn't it? For some it may be expensive, for some it may be reasonable valued, for some it may be valuation might be very, very attractive from a long-term point of view. Now, if I look at very recent, news flows, 11,000 crore worth of project by DLF was sold out in 10 days' time. Before that, higher ticket size projects were sold out within a week's time. We like the sector, Varsha, that's a disclosure. Though I would also like to mention that despite of a lot of regulation and discipline coming in, the sector in form of RERA and other policy changes, it is still high beta. In a good market, you will have outperformance from real estate sector. In a bad market, it would lead the market from the front to take it down. Coverage, we are positive on DLF, Godrej Properties, Prestige Estate, Shobha Limited, Phoenix Mills, Oberoi Realty. These are some of the stronger names in the entire real estate universe. Their debt on the balance sheet is virtually negligible or zero, and the completion run rate for the project is much better than the industry standard. There may be a time of profit booking or consolidation given the kind of run-up that we've seen in the recent past in the real estate names that I've mentioned.
Okay, so that's with regards to real estate, but let's quickly look at brokerage reports from here on. You have a delivery which has been in focus on the back of Motilal Oswal initiating a buy call on the counter, the stock at the day's highest levels. My colleague Jasmeet joins us with all the details. Jasmeet, what is making Motilal Oswal absolutely positive on a delivery?
Well, yes, rightly said. Motilal Oswal initiates the coverage for delivery, and they have initiated a buy with a target price of 480 rupees. Let's quickly understand what the brokerage report says. While they firstly mention the company is well positioned to capitalize the express opportunity, they also expect company to strengthen its domains and achieve 14% growth CAGR in comes to revenue terms. While they also find that company would be able to fund its own capex going forward, given that company has lower debt. While company also found out that the company's focus on acquisition and providing integral solution will be a key point for the company to strengthen in the growth. While the express logistics in which the company functions is targeted to grow at 14% for FY23 to 28. So that's a good sign for the company. So here's what the brokerage note says for delivery. It'll be interesting to watch out how the stock's quarterly results turns out going forward.
Right, thank you for that. So that's going to be one stock we should be watching out for. Consumer staples are also in focus, and that is on the back of a Jefferies note. They are liking HUL, Asian Paints and Varun Beverages as the top contrarian picks. In fact, if you talk about the target price is also pretty much strong. 2,830 is what they have on Asian Paints. On Varun Beverages, they have a target price of 560, and on an HUL, it's 2950. Gaurang, very quickly, out of the three contrarian picks, anything that you would put your bets on?
Well, we have coverage on all three as a matter of fact, but Hiral, Asian Paints is on a reduced side. I think there are still headwinds in terms of earning visibility given the kind of competition. Varun Beverages and HUL, we have a positive coverage.
Gaurav, very quickly, anywhere you're seeing further strength out of these three names?
From a short-term standpoint, Asian Paints look attractive to me. I see somewhat around 8 to 10% move coming in this stock. Off late, we have seen good amount of buying happening in this stock, and I see the recent move extending to 2650 odd levels. Other than that, we like Hindustan Unilever very much at the current levels. Inverted head and shoulder clear cut formation is there, which will likely push the stock upwards towards 2600 2650 range.
So that's with regards to where HUL goes in terms of where charts go. We wanted to address a few volume buzzers, but completely out of time. Thank you, Gaurang. Thank you, Gaurav, so much for joining us on the show. It's a wrap on this edition of Profit Buzzers from Varsha, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. Well, Mahima, if you look at the markets, the benchmark is not doing anything, but the small cap index is up around 0.7%, and overall the markets have been led by FMCG and the auto stocks.
Yeah, absolutely. I mean, even the mid-cap 150 is more over flat, up by about 0.04%. But the total market, if you look at, and if we can try to pull up the stocks in the entire BSE space, let's pull up that, the top 500 stocks, and you'll see the kind of action that's happening is only in the broader end of spectrum. There's Sterling Wilson, which is up 6.8%, Global Health up 6%, PCBL up 5%, VIP doing well in trade today, up 5%. Metropolis is another counter which is doing well. Imami doing well, 4.3% up, and that's probably the reason why the FMCG counter is doing well. Hindustan Copper down 3%, UBL down 3%, GAIL down 3%, Vedanta down 3% as well. There's Max Health not doing well, Phoenix Mill as well as Pfizer not doing very well in trade today. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. Let's pull up that heat map. There you go. That's Nifty Metal highly under pressure, down by about 1.5%. Nifty Realty down by about 1.17%. Nifty IT also down by about 0.8%. Tomorrow will be the first IT earning that we'll be seeing. So some pressure there. Nifty FMCG, however, doing well in trade today. Nifty Bank largely flat as we speak. Let's also quickly pull up the Nifty heat map and see what counters are buzzing there. There you go. Pressure seen in Tata Steel, HCL Tech, Hindalco as well as Tech Mahindra and Apollo Hospitals. But Shriram Finance doing well, up by about 1.9%. HUL up 1.6% on the back of the Jefferies note. Bajaj Finance up 1.3%. Jio Finance up 1% as well. Let's also try to pull up the counters on the Nifty FMCG and see what are the counters that are actually doing well in trade today apart from HUL and Imami. There you go. There's Dabur India also up 1.8%. Varun Beverages up 1.8%. There's Godrej Consumer also doing well. Radico Khaitan. So all counters in green except for UBL, which is down by about 1.03%. But that's with regards to where the markets stand. The Nifty Defense also up 0.4%. So that's another counter that's doing well. But with that, today's small cap company that we're focusing on is Kitex Garments. It's an interesting company. It exports cotton and organic cotton garments, especially to US and European markets, and especially in that infant range, 0 to 24 odd months. To take this conversation ahead, in the light of how tariffs are being imposed on exporting countries, textile exporting companies like countries like Bangladesh, Vietnam, as well as Indonesia, we're joined by Sabu M. Jacob, Chairman and MD of Kitex Garment, joining us now. Mr. Jacob, hi. Good afternoon to you, and thank you so much for joining NDTV Profit. My first question before I talk specifics about the company, just wanted to get a sense because in your presentation also when I was going through, you had mentioned how earlier tariff differential was benefiting India as a textile and garments exporter. Right now also, if we see, there is almost 35% tariff on Bangladesh, 32% on Indonesia, which is beneficial for India for sure, because right now we are at that threshold of 26%. Of course, we'll have to wait and watch out for as to how the tariff rate is imposed on India. But as of now, it seems that we'll be at a better position than these countries. How are you reading that for the entire sector?
See, basically, the India competition is from China, number one. Number two is Vietnam. And number three is Bangladesh and Cambodia. Now, China is already fixed 55%. And Cambodia is 36% and Bangladesh is 35%. And Vietnam is the lowest 20%. So now, as on today in Vietnam, it's not a real competition because it's already reached the maximum level of capacity. Even Cambodia is the same position. So I think once, the India, tariff is fixed, definitely I think this is a gold time for textile industry because we expect around either 0 or maximum 10% tariff. So that means, even if you compare with Vietnam, is going to be 10% difference if we take 10% tariff. So I think the coming days are very strong for especially the textile market, textile business in India.
Mr. Jacob, just want to get a sense in terms of number as well. How much of exports do you think will flow into India? From what I was reading, India is planning to, aim at $100 US billion by 2030 in terms of its textiles and garment exports, and we are at 34 odd billion US billion right now. How much do you think, this tariff differential will benefit in India? Any kind of ballpark figure that you can give us?
See, it's not only US tariff, I think now recently, the India signed the trade agreement with the UK. That will add, boost the business. And also, the European Union also signing the agreement very shortly. And I think that also going to be the same type of agreement with the UK, that is 0%. And I think the problem now, the India has already reached, the maximum level of capacity versus, the deliveries. So I don't know how far, India can get the advantage because unless, the people invest drastically, it is difficult, to to take that advantage now, because US, a lot of buyers are going to move to India and Europe definitely, and also from UK, a lot of buyers are going to move. And another thing is, the Bangladesh political uncertainty. Now, if you see that, the Bangladesh business, 80% is from European market. And just because of, they have the agreement, zero duty. So that advantage, I mean, most of the European companies are placing orders. But after the, the Bangladesh issues, now a lot of European buyers also moving to India last 6 months. We can see that especially H&M, Marks and Spencers, all those big people are moving to India in a last week. So I think generally we have to wait and see what Trump decide on the tariff for India. And once that comes, clarity comes, we'll get a clear picture, where we are and what business we can get it.
As you were mentioning that a lot of big brands are looking for India as an option, but you were also saying that India needs to invest more to increase capacity. So two things here I wanted to understand. Firstly, how much more investment do you think needs to be done to increase the capacity? And secondly, because of this new brands that are moving towards India, what is the kind of revenue growth that you are expecting for Kitex going forward?
See, I think now the investment, if you look at, I think sky is the limit. I think India is, future is the India, I mean, there's no any other place to grow. So, I mean, we have the labor, we have everything. So whoever invest now, I think, within short time, they can make a lot of money. So now, as far as Kitex is concerned, I think what our investment now, in two places, we are investing almost 3,600 crores. That can generate almost like, $600 million FOB business. So that means, we are on the right time. What we invested, we never anticipated that, UK trade agreement or, the tariff from US. But now it's all coming in favor of India. So that means, I think whatever we invested, 3,600 crores, going to get a very good results.
Mr. Jacob, just want to understand, correct me if I'm wrong here. This is something that I've gathered from your investor presentation. FY25, you ended with a revenue of more than 980 odd crores, but you've said that your revenue will go to that 7,500 crore mark once you're operational fully in terms of your capacity. First, is that reading correct? And if yes, how much time do you think will it take for you to grow from that 980 crore to that 7,500 crore mark?
See, I think now in the Cochin facility, whatever the capacity we have utilized. So that's why we reached the record turnover. The total revenue is 1,019 crores. And now the merger also happening. So the combined entity, the turnover is almost, 1,450 crores. So whereas, we are looking for, 7,000 crores, the year, 27, 28. And now after the tariff comes, we are very aggressively moving. Maybe it can be a little earlier also. So definitely, by 27, 28, we will touch 7,000 plus crores.
What about the margins? Because you're merging your Kitex, the children part of business with your Kitex Garments entity. So just want to get a sense, you've already seen an increasing trend in terms of your margins, stands at 20% operating margins as of FY25. Post the merger, what will be the blended margins be at? Because I believe in the infant business, the margins are better.
It's almost same, there won't be any much difference because we are doing the same business. So the margin will be the same. Merger, will not increase much, but, maybe small, 0.5 or something, small difference we expect.
You also mentioned that there could be a potential fundraise, but given the fact that you have already done with your capital expenditure, what will be this fundraise used for?
Pardon?
Your presentation also mentioned that there's a potential fundraise that could happen in FY26. But given the fact that you're already done with your capital expenditure, what would be this used for?
Now, because, the 3,600 crores, 70% by the bank debt and 30% by the company surplus. So what we are thinking, because, till last year, we are a zero debt company. So again, we don't want, to keep the debt for a long time. So that's why, we are looking for some fundraising and, close it, whatever, that 70%.
Okay.
Right. And before we let you go, sir, if you could share some growth targets that the company has decided internally for the next couple of years.
See, I told you, I mean, by 27, 28, now the two places we are investing in Warangal in Telangana and Hyderabad in Telangana. So both the places are almost like, 1.1 million pieces production per day capacity. So combined, the Telangana production will be like 2.2 million pieces per day production. And now in Cochin facility, we are doing almost like, 800,000. So that means, the altogether by 27, 28, our capacity is going to increase to 2.9 million pieces per day. So that means, from 1,450 crores revenue is going to touch 7,000 to 7,500 crores within 3 years' time.
Okay, Mr. Jacob, thank you so much for taking out the time and giving us all those insights about the company, and all the best for the future.
Thank you.
All right, with that, let's also welcome in our guest for the day, Vineet Bolinchkar, Head of Research, Ventura Securities, joining us now. Vineet, hi, very good afternoon to you. Before I move on to Varsha for her link, just want to get a sense on Kitex. We were speaking to the management and they're very confident about the growth, sitting on around 2,000 crores right now, considering the merged entity as well. We'll go to almost 7,000 crore plus by FY27 or 28 is the target. What's the sense like if you've got a chance to study the company? Vineet, I think you're on mute.
I'm sure that the growth will be very strong given the way they've grown in the recent past. The global infant market is about growing at 4.7% CAGR, over the next 7-8 years. And Kitex is the world's second largest infant wear manufacturer. They have 1% share, and they're also getting into adult wear and polyester garments. So these are the upsides for the company. But they have their net worth is being eroded because of the continuous losses of its international US-based company. So until we don't get clarity on why that company is making losses while this company out here is making robust strides, we need to get this angle sorted out before we can get bullish on this company. But undoubtedly, the operational metrics and the growth prospects are very, very good. Their investments are also much on the horizon. They have got a higher TTM multiple of about 43 times. But, we need to see we need to get a more clarity on why the US business is making losses. Otherwise, this company, it can be a very interesting play.
Right. The next stock that remains in focus is Nectar Life Science. It has been declining sharply for the last couple of trading sessions, and this was after the company announced a major restructuring. The company plans to divest its core API and formulation business, triggering uncertainty about its future direction. Varsha is joining us with more details on the same.
Yeah, thank you for that. So yes, the news is that company is going to sell their core business, that is API, active pharma ingredient and formulation business, for 1,290 crore, and they've also signed an agreement to sell their methanol business at 20 crore. Now they view this as a comprehensive restructuring move aligned to its future strategy, and the sale proceeds will be used to repay existing debt, and funds will also be used to invest in the new ventures. Now the key question arises, why this stock is under pressure, because if you see the market cap for this company stands at around 400 odd crore. This company is getting 1,200 crore by selling its business. Why investors are not liking this? One is that investors in market, if you see, they don't like companies divesting their core business, their main business, and it is one of the reason why the stock is under pressure. Second, also, if you see, the company did not specify the future business plans. What are they going into, and the what next business will be. This is the other key the concern when it comes to investors. And the sudden sale of its core business mere months after providing growth guidance is what is confusing, because if you see in Jan 25 the company outlined guidance and growth drivers, and now suddenly selling the entire business, though at a higher valuation, but it it raises concerns over management creditability. So these are the few reasons, why the stock is under pressure despite, getting a good valuation for their divesting business.
Right, Vinit, did you get a chance to look at this counter, Nectar Life? Any views on this divestment that the company is doing and the outlook going forward for you?
No, what are 100% shares are pledged, and I'm sure they're looking to exit this debt-laden, their situation that is there. Also, they have not really told us what is going to be the new ventures that they're going to invest in. So, considering all these facts, I think it's better to avoid this stock. And if you're holding any shares, might as well exit, because there's no clarity on future growth. If you sell out your, silverware, if you're selling your silverware, and just to pay off your debt and redeem your 100% pledge, then I don't think that much money will be left in the company, because the promoters will reward themselves, get that money for their share, right? And so it seems to be like a very bad situation to be in.
Right.
All right, so that's with regards to where Nectar stands. The next counter that we're focusing on is Salsa Technology. Now, this is seeing strong traction in markets today, with the stock rising over 11%, touching the high of 11%, now trading at around 4%. And the past 5 days, volumes have also been surging. Now, this is backed by a robust order book and growing infrastructure footprint as well. The company is emerging as a key player across sector, and Jasmeet is joining us with more details on the company. Jasmeet, what are you picking up?
Well, thank you for that. Yes, the stock is up 6% in trade today, while it's up 11% in last 5 days. Let's understand more about what the company does. Company was incorporated back in 2006, and it's into tower manufacturing. It has two segments basically. The first one is steel structure manufacturing. The second one is EPC infrastructure. Company provides service across power, telecom, energy, and railway sector. Now, talking about the operational information about the company has supplied over 50,000 telecom towers so far, and it's present in over 25 countries. It exports in 25 plus countries. While the company has completed 920 odd kilometers of power transmission line, and it has also completed 743 kilometers of railway track. The capacity utilization currently with the company is at 55%. When it comes to financial performance, company's revenue for FY25 saw an uptick by 18% at 1400 odd crores, while the margins were at 8%. The total order book as of 31st December stands at 2000 odd crores, while the latest revenue breakup stands at the major revenue comes from the steel structures, roughly 61%, and then the EPC railway supplies roughly 35% of the revenue, while the EPC transmissions at 4%. So this is all about the company. It'll be interesting to watch out how does the Q1 turns out for the company going forward.
Okay, thank you so much for bringing us those details, Jasmeet. Vinit, I'll come to you on this one. What's the view like when it comes to Salsa Technology?
We had initiated on this company sometime back with a fully valued thing at $17, and it has since then come down to below 10. But if you look at it, the company has done really reasonably well. Their revenue were up 25% last year, and 3-year sales has been CAGR has been 26%. They've also got the good things in place. They've done a preferential. Their order book is up. Their order book is almost 2,200 crores. And I think from these levels, there's very little downside risk, and one can definitely go and buy into this stock. They currently have the largest galvanizing plant in Asia at 96,000 metric tons with a capacity use of only 55%. So they can do very well. And all the segments that they cater to, telecom, railway, electrification, renewables, they're all huge trillion-dollar infrastructure push by the government. And so should do well in my mind. So definitely very interesting stock to buy into at current levels. Should do well going ahead.
Right. Another stock that remains in focus is Monolithish. Now, this stock has gained nearly 88% in the last 20 trading sessions, that is since its listing on June 19th. What does the company do and what's the outlook here? Let's get in Vansh with more details on the same.
Right. So the stock is up 88% in the last 20 days. So the company got recently listed in 19th of June 2025, and the stock is up 88% since listing. Now let's quickly understand what the company is engaged in. The company is in trading, manufacturing and supply of ramming mass. Now it is used as a heat insulation in furnaces, and it is a special heat proof lining for large iron and steel furnaces. Now basically this protects the equipment and ensure proper melting of steel. And let's also look at the financial performance of the company. The 3-year revenue CAGR for the company has been at 33%, while the 3-year PAT CAGR had been at 26%. Also the margins for the company stood at 22% for FY25. Let's also look at the operational highlights of the company. The company has an existing capacity of 132,000 million tons, and the trading accounts only for 5% of the company's revenue for FY25, and the customers include local steel and iron manufacturers located in eastern parts of India. And if we look at the geographical split, the West Bengal accounts for major of their revenues by 66% of revenues coming from West Bengal in FY25, while 16% coming from Jharkhand and Orissa. So this is what the update looks like for Monolithish.
Right. Just to clarify to our viewers, Monolithish is an SME company that's listed on both the stock exchanges, and its market cap at this point of time on the National Stock Exchange stands at around 965 odd crore rupees. Vinith, have you tracked this counter? Any views on Monolithish? Why this kind of a move that we are seeing 88% in the last 20 trading sessions?
So, they're putting up a new manufacturing plant to increase their ramming capacity to about 132,000 TPA. So, ramming mass is supplied typically to the steel reinforcement industry. And, here their clientele has grown very handsomely from about 43 in 23 to about 61 last year. And if this product is done through, and with the steel cycle doing very well, we expect that, the pickup will do well. Top 10 customers contribute about 60% of the turnover, and 90% of its capacity is generated from West Bengal, Odisha, Jharkhand, which is the steel belt. So I think what we have seen is that a good robust performance on the stock market following a 70% rise in PAT, from 8.5 crores to about 14.5. And looking to grow from here, given the fact that, their capacity utilization is, will be beefed up, capacity available will be beefed up by the new plant. So, but I think the valuations are more or less there in the price and should be a hold.
Thank you, Vinith. Thank you for joining us and giving us your views on the stocks that we discussed. With that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, and let's look at where the Nifty is. Absolutely flat, as flat as it can get, but we're holding 25,500. That's the positive. It's again another day, yet another day, if I can call it, of consolidation. Third straight day this week, and maybe for 6, 7, 8 days the Nifty has been largely flat to very range bound. Let's look at it intraday. Today the Nifty banked to absolutely mirroring the index. So there's no underperformance there whatsoever, but there you go. Look at the range again today. 472, 548, just about 80 points is a very tight range that the Nifty has traded in. Saw a bit of a spike yesterday, but today again very range bound, right? Let's look at the heat map and try and identify pockets which are buzzing or moving. You have some NBFCs, Shriram, Bajaj Finance, which are leading, including a Jio Finance as well, which are leading the pack, and then thereafter there is FMCG names, and HUL is one of them, a hero within that consumer basket, also doing decently well for itself. For Reliance, a heavyweight is up 0.8% on a day like this. That's probably helping the index in whatever form. But look at the losers, it's largely metals. You look at Hindalco there, Tata Steel there. You also throw in some IT. HCL Tech is there. Infi also down around 0.5% odd. Wipro down around 0.9 odd percent. So that's the flavor and the texture with regard to how the Nifty is shaping up. Let's look at contributors as well. And within contributors, You'll see an HDFC Bank, Reliance among the top two. But again, no big movers except an ICICI, which is contributing around negative 16 odd points. But again, no major moves on or no big moves with regard to contributors either. Now, I want to quickly switch focus to sectors. And within sectors, metals is one of the big laggards. Realty is the other one. IT, no surprise there, given that a bunch of IT stocks are in the red, at least on the index itself. PSU banking index is down 1/3%, and Union Bank likely will be the biggest laggard there because of the numbers that have come out. The Nifty Bank otherwise absolutely flat. In terms of the gainers, FMCG again top gainer, 0.8%, second time this week. Nifty Auto is up around 0.5% as well. Nifty Pharma sitting in the green, critical on a day like this, given that US tariffs have been announced. But broader markets, Neeraj.
Well, firstly, the advanced decline should come up on your screen simply because it's well and truly in the green, and it's converged a little bit or converging a little bit because mid-cap indices are in the red marginally, but small caps are doing very well. So the key takeaways of trade, I think two key takeaways. That one, that it's a quiet day of trade and which continues, right? 6th, 7th, 8th day, whatever you call it, it's been this way. And today, IT is cracking on a day when the small caps are actually displaying strength. So which is actually one other factor to watch out for. And then there are individual pockets of strength and weakness. Firstly, the overall BSE 500 winners and losers list. And you see on the gaining side, Global Health, it's been now the top gainer for a while, followed closely by Sterling Wilson Solar, PCBL, and I'll get to the reasons why this one is up. Metropolis, Swan, continue their uptick. Surprise mover, VIP. On the losing side, there is GAIL and there are some tariff related questions there, internal tariffs by the way. Hindustan Copper, because I presume because of the copper thing, and Vedanta because of presumably a short seller report in addition to the copper prices as well. But yep, the short seller node impact clearly showing on Vedanta, and we'll talk about this as well as Vedanta's response on this a bit later on in the show. Metropolis and IEX continued strength into both of these. Nearing into 2000 is Metropolis, so that's important. Then continued downtick continues for these stocks. Nectar Life, another 9.5% today after the 20% downtick yesterday. Dreamfolks continues to sulk, and Hindustan Copper too sulking in trade today. Lastly, look at the carbon black players, which is PCBL and Himadri Chemicals, and both of these have very strong moves today because Orion, which is a large global player, is looking to shut its carbon black manufacturing facilities, 2 or 3 of them, by end of 2025, and that is probably the reason why this is happening. One last piece, Harsh, something that caught my eye, and so much of chatter around whether this China Plus One story is for real, etc., and stuff like that. Delta Electronics is a company, it's a global company, which has said, we follow the customer, and if the customer asks us to move out of China, we move out of China. Now, the context to this is this, that it is setting up its newest factory in Tamil Nadu due to robust infrastructure and incentives, as per what Delta has said in a comment, right? And Bloomberg did this story. And Delta, not only that, they've paid 65 crores for naming rights for a railway station as well. So they are going all out in making their presence felt in South India. And this is remarkable because they are saying that customers are asking Delta to source products from its plants in India and away from China, and then of course they don't want to diversify, etc., from China dependent supply chains, and then and that whole comment, right, which is that we are moving to India, we are moving out of China because customers are asking us to move out of China. So that was the really interesting piece put in by Delta. Just thought should bring it up.
No, absolutely. So it's an interesting piece that's coming out, but everything ex Delta we've spoken about is what we'll cover on the show today. So stay with us. But let's bring in Kush Bora. Kush, how are you viewing the moves in the market? Apologies for that.
Hi Harsh, hi Neeraj. Anyone planning a midweek spontaneous holiday?
A good time to take it, right? Because
absolutely. Neeraj, for the last 4 or 5 sessions, the markets have not gone anywhere. If you shut shop and then you started after a week or so, you'd still find the index at the same level, right? But yes, I mean, this is also a phase. This is also a phase that the market participants have to go through. So yesterday we saw some signs of life in the market, but mind you, that was coinciding with the Sensex weekly expiry. I think the same thing could happen for Nifty. Tomorrow's the weekly expiry for Nifty. You could see some sort of a spike, some sort of an action. as of now, the data suggests further consolidation, PCR near 0.9. The pivot level, as we can see, is 25,500 because the call and the put congestion is very heavily at that strike price. So yes, I think consolidation par for the course. Some volatility could be could be seen perhaps tomorrow. But I think one thing that deserves a very special mention is actually the VIX. So if you'll recall on Monday, I did mention that VIX could slip to about 11.5 levels. We are nearly there. This is, mind you, if we close around these levels, this will be the 14-month low for VIX, at least on a closing basis. And we've seen VIX rebound from these levels. So maybe a VIX spike is around the corner because we've hit significantly lower levels on the VIX. So a VIX spike is around the corner. But I think we did also mention on Monday that not necessarily that every time VIX spikes, markets have to crash. They could go higher in tandem as well. So just something to put out there. For now, consolidation part for the core stock specific action, as you guys mentioned, a plenty. So focus should be on that.
Okay, Kush, before we get to your ideas though, kudos on, a couple of ideas or a couple of things that you spoke about and which have worked well. So would want an update thereof. I believe you spoke about Loris either yesterday or today, and that stock has done well. And I remember at about 640 odd rupees, you spoke about Marathon Next Gen. And that one too has rallied quite significantly. It may be flat today, but is above 700 now. So call on or updates on both of these, Kush.
First of all, thanks a ton, Neeraj, for remembering these and highlighting these. So yes, my positive view on Marathon, very much continues. It has seen excellent accumulation over the last 3 weeks, and the momentum indicators, despite the kind of run that it has seen in the last 4 to 5 weeks, are still very heavy. Some indicators suggesting further upside as well. So if I had a position, I would very much continue to hold a Marathon for levels of 750, 785 and higher levels. Now, if you did take into consideration, the discussions that we had and took a position in Marathon, I would recommend, a trailing stop loss near the 690, 685 zone. That will be the support zone for Marathon. Loris was something on our radar, didn't really convert as a call, but yesterday, yes, right, like you rightly said, it did stand out in the, in the pharma pack, primarily because of the volume action. I focus more on that. Even yesterday, when the stock was consolidating, the volume wasn't really as high. So even the negative bias was with a lower volume. Today, we are seeing a further breakout. Now, I think is a time to book profits in Loris for 2 reasons. One, the 800 resistance will act up. You already see, call congestion near the 800, 820 zone. And the stock has been trading in overheated territories for the last 4 to 5 sessions. So yes, if you did have a position, even if you had, if you took a position considering yesterday's discussion, not a bad idea to take money off the table. Any decline towards the 755, 760 zone should be considered a re-entry.
Okay. Kush, picks for this afternoon?
Sure, Harsh. 2 of them, both on the long side. Let's start with Cummins. Very, very good, volume action on this one. Last 3 days, the accumulation has been above average. It did give a breakout yesterday above the 3450 mark, the rounding bottom formation breakout. Today, you're seeing a continuation of that. I think, higher levels are very much in line for Cummins. In fact, some of the other peers also. So 3560, 3640 are your targets. 3400 is where you place that stop loss. Cement pack also, after a brief period of consolidation, in some cases profit booking, is starting to show signs of an uptick. Ramco Cement stands out for me. From a near-term perspective, 1130, 1160 are your targets. 1070 is where you place that stop loss.
Okay. Kush, I wonder if you have a view with regard to a couple of auto counters. One is an SML Isuzu and one is a Force Motors. Give us your thoughts, because the moves over there are very strong, at least maybe over the last month or so.
So Harsh, this is one train that even I missed, was on my radar for some time, but the moves on SML Isuzu in particular have been so sharp that they never really gave a chance to initiate a call. Now the stocks actually hit overheated territories. It's still going higher. So how you typically play a momentum trade is, you either book partial profits and hold the rest, or you put trailing stop losses and continue to hold. So no fresh trade recommendations for SML Isuzu weekly, daily setups, both if you see the stocks run up quite sharply. Despite it still gaining volume and price action, the risk reward ratio for a fresh trade will not be favorable. So you could continue to hold and ride this momentum wave. 2850 is where you place that stop loss. Force motors, on the other hand, very interesting. I think this is a time to accumulate force motors that you've missed out on the last few occasions. If you see from April onwards, every time the stock has dipped towards the 20-day moving average, it's rebounded and quite smartly. Even now, if you see 3 sessions ago, the stock almost tested the 20-day moving average and has rebounded. Today, the volumes have spiked up quite a bit. So yes, force motors is one trade that you can consider. On the higher side, I'm looking at 17,250 and 17,800 as the next targets. And the support zone for this one is 16,200, 250, which was the earlier resistance level. So force motors, despite the kind of move that it's showing today, looks on a good footing.
Okay, Kush, stick with us. We'll go and we'll take views from market expert Nischal Maheshwari joining us at 2:10 today. Nischal, plenty happening with regard to global macros. One is, of course, tariffs, and tariffs impacting two sectors, at least in trade today. You have a pharma sector, which is surprisingly in the green, despite those tariffs, and maybe it's because of the push of implementation, at least over a year and a half or so. And the other one is commodities. Just talk to us a little bit about how you're viewing it. And do you view pharma as a potential buying opportunity at this point?
So, thanks for having me here. Good afternoon to you and your
viewers. Good afternoon, Nischal.
So I think pharma, as you had said, basically the implementation is over next 1.5 years. Here, as far as tariffs are concerned, people are not aware for the next 24 hours. So what is the point on talking about 1.5 years the implementation is going to happen? Nobody really knows which way the pharma or what kind of tariffs is going to happen. And that's why I think the market is not given much credence to this thing. So I'm saying you will find one new tweet from the US president every day. So it's difficult to actually react on that unless it gets implemented. So I don't really bother about that part. It's 1.5 years or a year away. The other thing, as far as should we look at pharma from this point of view, I think individual stocks still continue to look good. I like the cramped space out there within the pharma sector. And that space, that China plus one story is really playing out. We have been in touch and spoken to several of these companies, and they are saying the inquiries have been disproportional now in the last 2 quarters than it was earlier. So I think definitely there is a very, very strong momentum for the cramp space as far as pharma is concerned.
Okay, so cramps within pharma, healthcare at all, and more domestic facing, but healthcare at all on your radar as well, Nischal. There has been some centers of the market which seem to suggest that healthcare has run up and probably run up disproportionately. What side of the camp do you sit on?
Yeah, I do agree with them basically that healthcare is right now basically on the higher side of the valuation matrix. So one should wait for it. But having said that, I think healthcare is an industry basically like pharma, which is going to continue to grow at around 10 to 12% CAGR for the next several years. Because India is a hugely underpenetrated market, and definitely healthcare is one place basically one should be invested in. But wait for a better pricing basically to get into it.
And how would you play healthcare once that pricing arrives?
So I would like to play through the hospitals, maybe to an extent diagnostic chains, but largely through hospitals basically.
Interesting. Nischal, the other piece is, and good afternoon, of course, great talking to you. The other piece is in a difficult or a fast changing, let me requalify, fast changing and a fast developing news heavy period that we are in right now, as you rightly said, a tweet a day. You probably try and look for themes which have some certainty. And when I think about it, the spends on defense or the targets set for energy transition and renewable energy seem to be ones which have got a slightly longer lasting piece to themselves, right? So let me choose energy transition and try and understand from you. How convinced or not convinced are you about the growth versus the valuation argument in the energy transition space? Solar, wind, equipment, what have you?
Afternoon, Neeraj. Thanks for having me on the show. Yes, energy transition is a big one basically. Now the question remains to be how and what you play out there. Because if you really look at, let's consider first solar. And solar, I think the equipment side, basically, I think it's been overplayed already. There is huge capacity, or rather an overcapacity already in the system, basically for the modules. Slowly, the cell manufacturing capacity is also catching up. I think, if I'm not wrong, by 2027, even the cell manufacturing capacity is going to get there fully, or it will be over the demand. So both the sides, as far as the equipment is concerned, basically, I don't think so. There is much play left. Yes, the growth will still be there. There is no doubt about that. But the valuations have just run much ahead of any growth matrix. And you have yet to see basically the two large players coming into the Indian market. So Reliance has started selling its modules from the last quarter. And you will continue to see Reliance, by the way, is going to have the largest capacity, both modules and then the cell manufacturing. And it goes back towards basically even the chip also basically to be manufactured here. So I think Reliance is going to be the most integrated player, the largest player, and that has entered the market. So I believe basically as far as the equipment is concerned, more or less it is all played out, and the valuations are quite aggressive out there. So that is one part of the solar. The second thing is wind still continues to remain very interesting, because the wind capacity, yes, the growth may not be the same as solar, because you have constraint about where you are able to put up the wind turbines, but then you have only 2 or 3 manufacturers of the equipment. And as and when, if you really look at it in case of all these manufacturers, the bigger part slowly the big part is becoming basically the servicing revenues. And that is quite substantial, and the margins are quite high on that. So I would actually like to, at this point of time, look to add maybe on the wind side rather than on the solar side.
But so are the equipment players trading at decent valuations, Nischal? I mean, in the sense, Suzlon is no longer at 85, Inox Wind is no longer at whatever 230 or whatever, but not cheap, right? Or are they okay?
So they are not cheap, but then they are sort of a duopoly kind of a situation. So whatever happens, and they are giving a tough competition to the Chinese imports. And given that the complexity of the equipment, you definitely require somebody who's there on the ground. So that's why these two guys have been winning over the Chinese equipment, the German equipment and all, because the servicing part, the availability of repairs and all, I think these two definitely have an edge.
Nischal, do you find better value within the power play of sorts, but would you find better value in other spaces within power? Transmission equipment, energy exchanges and IEX and the like? Would power financiers be an option? Would those pockets be a better way to participate in power? And just rank them for us so that we get a better perspective or a better lens into how you think of it.
So my top pick basically, even before the equipment, is the transmission and distribution space. That remains to be my top pick basically in that. And I think given that there are, at least for the next 3 to 4 years, Power Grid has actually gone out and said that they are going to be spending close to around 40,000 crores a year in the capex. I think there is a huge runway for all the T&D players, especially the EPC guys. So that space remains to be very good, and especially the evacuation of the solar that requires new lines to be laid up. And the third part remains to be that the upscale of the transmission infrastructure itself. India largely has 220 or 440 kV lines. That is now getting upgraded to 750 and 830 kV. So you will see that kind of infrastructure upgrade also happening. The second part is basically the transformer manufacturers. And there, the only thing remains to be that there is a global shortage. And that's why that sector still continues to do well. But otherwise, it doesn't have a very great moat. But I would actually prefer the T&D as a first space, transformers for the moment, and then the equipment suppliers of the wind. That's the way basically I would look at.
Okay, great. And if I were to just completely shift tack towards FMCG, because that's one of the big buzzers this week, and there's plenty of buzz that we will see recovery within some of these names. We have the likes of an Asian Paints and HUL. There's a Jefferies note today which says that some of these have corrected 25-30%. Great opportunity to buy. How do you see it?
It's a difficult call, basically. Okay. Yes, you have a trading opportunity out here. But if you are really asking me, basically, would I own one of these stocks basically in my portfolio for long term as an investment bet? I don't think so. Each of these guys, we really look at it, I don't see they are doing more than 10-12% kind of even 10-12 would be an aggressive this thing. For multiple years, I don't see them growing in volume terms, basically 5-6-7%, and value terms, maybe total top line growth of around 10-12%. So for that kind of a growth, basically you are paying, and they are not cheap. All of them are 40-45 times still. So and that is the conundrum basically which I have.
Right. So where, Nishal, sorry for interrupting. Where within the value chain in FMCG do you see value therefore? Both growth as well as a decent multiple?
So growth, I would still say basically there are pockets, but multiples, I think within FMCG as well as if I would include even the distribution side, which is the DMarts and trends of this world, basically valuation is not a comfort at all. But there at least the growth is there. So that is the only way I would look at it. But FMCG to me is like more of a trading play.
Okay, all right. So that's the way Nishal thinks of quite a few things within the market. We discussed 3 sectors. Thanks so much for those views, Nishal, for coming in and speaking with us. Always a pleasure. So Pharma, Power and FMCG. Those were the 3 plays we spoke to him about. But what we'll do is we'll slip into a very, very short break. On the other side, we'll have Heard on the Street, of course, and we'll start talking about a couple of specific stocks. Stock of the day is what we'll get you on the other side of Heard on the Street as well. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the expert.
All right, back with India market close and a few stocks which are moving well. We've been talking about Belrise all these days. Aegis Vopak Terminals, which came at the IPO at almost the same time, today, after a long time, is showing some spark. It's up about 4%. So keep that stock on your radar as well. On a day when the indices are absolutely flat, you want to look at specific movers and what they are doing. Kush, very quickly though, the capital market plays and BSC, MCX, Angel One, today 361 is down. Any thoughts there? And if not there, Metropolis, which is surging and is now the top gainer on the Nifty 500, nearing 2,000. Thoughts on that one?
Neeraj, I think some of these names, will rebound. I think, the markets are just waiting for the matter to get settled, the capital markets play, I think. Once that settles, I think the upswing will anyway begin. But just to put things in context, if you look at the moves that BSE had made, somewhere late March, early April, and despite the correction that it's had in the recent days, also it's not even corrected. Like the full 38%, which is a key key level in the Fibonacci series. So there is still some support that's already kicking in for for BSE. So I remain very constructive on BSE. Yesterday, I did mention that if you want to pick, then CDSL is something that you can start, investing in with the kind of profit booking and sideways consolidation that you've already seen. BSE just at, today's perhaps the first day in 2-3 sessions where, starting to see support. So if the selling is over, then you could start looking at BSE. So just give it a couple more days for matter to settle. CDSL, some of the other names looking attractive, not too keen on broking firms like Angel. As far as Metropolis goes, it's had a good run. It's seen a vertical rise. Now it's into overheated territories, so it's time to book profit. So if you did have a position, not a bad idea to take money off the table from Metropolis.
Okay, all right. So that's the view coming in on some of those names. But let's bring in, that time on the show, 2:30, we bring in Somit Sarkar, who joins us with all of the chatter that he's picking up from dealing room in the segment Heard on the Street. Somit, what are you picking up?
Well, multiple stocks, in fact, today in focus that are there. Firstly, this stock in focus is Adani Power. Now, dealers are indicating that there are buy flows on the large HNI desk on anticipation of some positive corporate action that could come in the stock. Second on the list is a couple of stocks, Engineers India and ICICI Pru Life. Dealers are indicating that there are buy flows on DI desk in both the counters in trade today. So keep an eye out for ICICI Pru and Engineers India. For Sambhav Steel, there are buy flows on HNI desk on anticipation of strong earnings that the company is expected to report. And related to earnings, on the downside, it's Persistent System and Tata Elxsi. There are sell flows on expectation of weak earnings that could come in from both these IT companies. For Medi Assist, dealers are indicating a large long-only foreign fund has started accumulating this counter. So keep an eye out for Medi Assist. Obviously, it's a long-only fund. It could be for long-term. So this stock could react in a positive manner going forward. And lastly, it's BHEL. There are strong buy flows on the large HNI desk. Dealers are anticipating that there could be some order win announcement and some positive news that could come in for BHEL going forward. So keep an eye out for BHEL as well.
Wow, that's a lot of stocks. And interestingly, BHEL won, yes, but also the fact that, or the possibility of weak earnings from Persistent as well as Tata Elxsi.
Right. Also, we had pointed out this stock, Orient Pro Solution, on Monday, that there could be a potential order win announcement, and that has come in today. They have got a digital banking order from Africa. So that is one more thing.
Yes, saw that today as part of the news that was trickling through. What is Oran? Okay, so 0.5% higher on the back of that order win.
But this is interesting. Soumit, thanks for that. And Kush, come in, do the charts indicate any weakness for a Persistent or a Tata Elxsi?
They do, in fact. There has been a steady downtick in a lot of IT names, the large caps for sure, but even something like Persistent has come in, a bear clutch and, seeing profit booking. Right now, it's the 200-day moving average around the 5,700 mark, which is just giving it support. If that is broken, then you could see further downtick, close to 55-50 levels also. The two stocks that stand out in this space, Coforge and BSoft, for slightly different reasons. Coforge has had a good run, is seeing marginal profit booking, and this uptrend could continue. BSoft is actually on the way to recovery, and perhaps could have a catch-up trade coming in. So these are the two names that stand out. But other than that, most of the large caps and now even Persistent seeing a bit of a downturn for some days, and no letting off, apparent, at least on the charts right now.
Okay. Mr. G. Chokalingam also joining us, founder and MD at Economics Research. Mr. Chokalingam, welcome. Good afternoon. Just trying to get a grip of things from you, how you're looking at the markets at this point. We're in a sort of consolidation band of sorts. What are you liking in this market at this point?
Yeah. So I think the market is waiting for US-India deal. That's why it's consolidating. Point two, I am very bullish even in the short term. Unless something goes wrong with the trade deal between India and US, I think within 3 to 4-5 months, we will create another record high level of Sensex and Nifty. That is my strong view, because growth story is there. Monsoon is too good. There are many more. I don't want to take much of your time. And what do I like? I continue to like PSU banking stocks. Yes, industry credit growth has come down. There is a pressure on the margin. Stocks also corrected, but I remain very bullish. I am sure with the reversal of interest rate cycle, the lending would pick up. With a good monsoon, even the agri credit would pick up, and PSU banks would do well. And I am very bullish on small and mid cap segment as a whole. However, I would suggest the investors not to lose the valuation comfort, because we have already recovered 3/4 of the losses we saw in February 2025. We had lost about 100 lakh crore from September 2024 peak. From there, we have recovered 3/4, and a lot of stocks are running up, rallying. And yes, this is very optimistic outlook, but one has to be cautious on individual stock valuation.
Okay. Well, Mr. Chokalingam, just one very quick view. Could there be weak results do you anticipate with a Persistent, a Tata Elxsi, or some of these non-Nifty IT companies? If you had them in your portfolio, would you sell them or would you hold on?
I would not hold them. I would sell. I've been saying that the industry is growing only at 2 to 4% in dollar term, and most of the names except Coforge, all other names you mentioned, they are stagnating. They are showing stagnation in the profit or even degrowth. So they don't deserve 40 to 50 PE when the profits are stagnating or degrowing. But of course, Persistence is an exception. It's been doing quite well. So except stocks like Persistent and Cyient, I would sell most of the IT stocks.
Okay, so that's with regard to IT. Mr. Chokalingam, clearly not bullish with regard to IT. But It's time to talk about the stock of the day, and that one is PCBL, Philip Carbon Black. The counter is buzzing on the back of anticipated supply disruption of carbon black as the leading supplier plans to cease production in several plants. Varsha here to contextualize it. Varsha, 5% higher on PCBL, warranted?
Yes, so thank you for that. So as you rightly said, the global specialty carbon manufacturer, that is Orion, has plans to stop its production at 3 to 5 carbon lines. Another discontinuation is planned in in 2025. Orion, if you see, total has 15 facilities, 11 of them is in America. Now, Indian carbon black players are in focus. You take PCBL plus Himadri Specialty also. They are also into carbon black, but talking about PCBL, so they are India's largest carbon black producer. Now carbon black is nothing but a fine black powder which gives color and is also used as a reinforcing and agent. So it's crucial in tires and rubber products and also in plastics. Now why PCBL is in focus? Because if the global player is shutting down few of the facilities, of course Indian manufacturers will benefit out of that. So if I want to talk about the capacity details when it comes to PCBL, the total carbon black production capacity stands at around 7,90,000 metric tons per annum, and they aim to reach 8,80,000 metric tons per annum by FY26 and 1 lakh metric tons per annum capacity by FY28. That's the target that they have. Also, please remember that PCBL is one such stock which is gonna gain in margin perspective also because of the higher sale of specialty carbon black as well. That is a value derivative products that we make on. Lastly, on the margin guidance, if I were to talk about the current carbon black EBITDA per ton, if you see metric per ton is almost 17,665 in Q4. The long-term guidance that they have given is 25,000 per metric ton. That's the EBITDA that they are targeting. So huge growth when it comes to EBITDA. Now this is also, as I said, that because they're moving towards the value-added products which gains higher EBITDA per ton, and also because of the specialty and superconductive grades will also aid to margin expansion, and also the few of acquisition that the company has made will also help when it comes to growth for the company. So overall, yes, positive news for PCBL as such.
Okay, so positive news. Kush, thank you so much, Varsha. Kush, what's your take with regard to PCBL on charts?
Fairly positive. The stock was in a downturn for the last 7 odd sessions, and today it's given a breakout on the back of this news, on the back of very good volumes. It's right now above the 200-day moving average, which comes close to the 419, 421 mark. A closing above this will actually start a fresh uptrend for the stock, where 445 and about 465 will become your next targets, and the support zone for this one comes at 410. If you had a position, continue to hold. If not, a closing above, the 200-day moving average could, as I said, start a new trend. So you could consider a long trade even now if you didn't have a position. So all in all, fairly positive on PCBL.
Okay, so that's on PCBL. Mr. Chokalingam, do you have a view with regard to the sector as well as the stock?
Yeah, definitely we used to cover it. Carbon black has perennially very robust demand because the main user industry is the tire industry, and replacement market accounts for almost 2/3 of the total tire demand. So therefore, the demand outlook for tire industry remains robust, and hence the demand for carbon black also remains very robust. So this is almost a leader or top 2 player in carbon black, and with a lot of expansion in the place. It's a good stock for long term, but in the short term, I would have a little apprehension because on FY25 it is trading at around 38 PE. So I wonder whether one can pay that kind of PE for a commodity business, though they are getting into value-added carbon black, but still it is not a high-tech chemical product. So therefore, I would be comfortable to hold it for long term, and in case it corrects below 400, then I would find it relatively quite attractive.
So wait till 400, cautious with regard to PCBL on fundamentals, but we're speaking about commodities. Copper is the other one in focus. Let's pull up a Hindustan Copper. Let's also pull up a Hindalco. The LME prices have hit a high following Donald Trump's 50% tariff announcement. That may be a boon for domestic copper players, but a bane to copper consuming industries like cables. Despite that, you're seeing a bit of pressure across the board where both sides of the value chain are concerned. Listen in, we spoke to KEI Industries earlier today about this. Listen in to a slice of that.
So far as our business is concerned, but whenever the copper prices are rising, we are immediately passing it on to the user. And if it is dropping, we are also reducing our selling prices of our cables. So I think so far as we are concerned, it will have no impact. But any significant rise in copper price may impact the demand temporarily, because ultimately the user industry normally does wait and watch policy for some time if the prices goes up significantly.
Okay, all right. So that's of course with regard to KEI. We also in fact had a statement coming in from RR Kabel. We have Sri Gopal Kabra, and he's the managing director at RR Kabel, who suggested that there's no formal notification beyond the initial statement. Implementation and timeline remain unclear. Tariff on copper appears to be primarily focused on raw and refined forms. Clarity is still emerging with regard to whether value-added copper products like cables, transformers, wires, tubes, copper alloys will be included. Cathodes from countries like Japan will continue to find its way to the US warehouses in the near term as a result. And therefore, all of that stockpiling that's happening in the US will likely continue to happen till there is a definitive date from when this tariff will be applicable. Until that point, you might continue to see price pressure. That's what Rakesh Arora told us this morning with regard to where copper is concerned. But thereafter, you might well see pricing come off, which might trigger some bit of pessimism in some of these companies.
At least that's what that general focus seems to be, right? And you had done some work on this as well. But Rakesh's view was that this is a short-term impact either side, which will normalize in a period of 1-2 months once the tariffs actually come into place.
Yeah, and in fact, what we're going to try to do is pull out that piece by Rakesh Arora. Here are his views. Listen in.
The street was expecting around 25% tariff on copper import by US. So 50% has come as a surprise. That's why you see a 10% jump in copper prices. If I look at overall copper consumption in 2025, China has been building solar power like there's no tomorrow. And just to give you some numbers, in the first 5 months, China has added 105 gigawatt. Now that is equal to India's total solar capacity. So that gives you, a lot of color. US added around 10 odd gigawatt in the first quarter. And this was down like 7%. China was up 150%. So what is happening is that, we have strong demand growth coming in China for copper, which is growing at around 13%. And because of the tariff, the inventory is all moving towards US. So rest of the world is left with much lower inventory. When you club the inventory of US and rest of the world, it is probably higher than what it was in 2024. But since everything is rushing to US, the rest of the world is seeing much lower inventory, and that's why the prices are moving up. This phenomena will last for some time because US demand is not there enough to support that kind of inflow. So you will see bump up in copper prices in the near term. We're already seeing that. And probably, in 1 or 2 quarters, as things settle down, copper will start to come back to below $10,000 level.
Okay, well, Kush, so if I try to piece this together, fundamentally, we've gotten a couple of views. Technically, what do the charts say for a Hind Copper, for a KEI Industries or a Polycab? Any thoughts?
Sure. So Neeraj, Hind Copper was, our call about 10-15 odd sessions ago had done well. And, metal names are no stranger to volatility, especially, on account of global news flow. And this is also something very similar playing out. So for me, Hind Copper remains a buy on declines. It's just that, it's taken the support at the 255-260 zone, which is a rising trendline support for Hind Copper. Give it a day. If it holds about, if it holds around these levels, then I will actually look for a buying opportunity in something like a Hind Copper. Anyway, the 200-day moving average support at 255, a strong one, and that comes in. So yes, I remain constructive on Hind Copper. In fact, even Hindalco for that matter. But I prefer Hind Copper over Hindalco. Among the wire names, most of them don't have a very encouraging setup. I was looking at Phenolics, KEIRR, Kabil. They've anyway been consolidating for the last 8-10 odd sessions without really going anywhere, perhaps with a mild negative bias. The only one that stands out in this space is Polycab. Had a good run, few days of consolidation. Today also, if you see, despite the kind of news and the kind of dip that the stock is witnessing, it's still holding up above yesterday's low price. So for me, Polycab is a buy. 6,900, 7,100 on the upside, remain the key levels to watch for, and 6,500 as a stop. So Polycab in the wire space and Hind Copper in the metal space still look good. Hind Copper, I'd give it a day or two more just to see if it settles around these levels.
That's the take coming in with regard to some of those commodity names. But let's take a look at some of the other stocks which are in focus. My colleague Jasmeet joins us with the details with regard to 3 of those. Jasmeet, 3 stocks, take it away.
Well, right. The first one is Tata Steel. The company has come up with the business update. So here's all the information required. While in terms of production volume, if we see, the Indian production volume has seen a degrowth of minus 3.3%. While on the other hand, the Netherlands production have seen a positive 6.3% growth, and the Thailand has seen a positive 3.3% in terms of production. While when we look at the delivery side of the business, we see Tata Steel has seen a degrowth of 15% for Q1 FY26, while the Netherlands has seen a 14% degrowth. On the other hand, Thailand has seen a muted 3% growth, you may say. While the reason behind this degrowth is maintenance related shutdown in Jamshedpur and Neelachal Nigam Limited. The second stock in my watch list is Bejal Projects. While the company has planned and capacity addition for around 170 crore at Rajnol facility, the capacity is used in demand given that company has increased the demand from Indian and domestic markets. While company to increase its capitalization by almost double to 1.1 lakh MTPA from currently 40,500 MTPA. While the new capacity addition will be between Q4 of FY26 up until Q4 of FY27. The current existing capacity stands at 98%, while the financing for this particular project is to be done by internal accruals. Company's recent updates also include company winning a mega order from Power Grid. The mega order basically ranges between 300 to 400 crore, and the order was for construction of transmission lines of up to 99 kilometers. While company's order book as of March 25 stands at 2,900 odd crores, while book-to-bill ratio stands at 3.7x as of March 25. The last one on my list is ELGI Equipment. The stock is buzzing and is up 4% in trade today, as the stock had a bulk deal yesterday, while the 30-day volume average of the stock is at 6 times today. The bulk deal was done by SBI Mutual Fund, where they bought in roughly 18 lakh shares at 532 rupees a piece. This roughly forms up to 0.5% of total equity. So these are the stocks to watch and keep on your radar. It'll also be interesting to watch out how does the Q1 turns out for all these companies.
Interesting to watch out. Q1 is what we will have our focus on. But Mr. Chokalingam, do you have a view with regard to Tata Steel, both from a valuation perspective? We've seen a bit of a run up from those lows of 140 or even lower rather, but in the near term it's been a 140 low. We've seen a good bounce. How do you view it? And how do you view the production numbers, the debt reduction plans, all of that? Give us perspective.
Yeah. More than production, the actual delivery volume would matter as far as financial numbers are concerned, Q1. So, which is going to be impacted, as your colleague has put out, that the majority of the cases, the delivery volume is in negative zone. And secondly, ultimately, there is going to be net increase in the tariff by the US, and which is going to impact a lot of countries. The degree may vary, but the fact is that most major economies are going to be affected because of this US tariff. Therefore, the global growth will come down. Chinese growth also will come down. So, which is going to be negative for steel and other metals. So, therefore, in this kind of economic environment, I would avoid Tata Steel.
Okay, so that's the rationale behind Tata Steel. Very, very fair rationale. Kush, any of these counters on your radar? Tata Steel, Bajaj, I believe the third one was an LG. All three of them buzzing. Any of them on your radar?
And LG stands out near to a month and a half's high level 200-day moving average resistance also being taken out, assuming that it closes around this level. So a new uptrend could very well start on an LG equipment. take a positional bet on this one because seems to be starting a fresh leg of up move. So your targets on the higher side for this one will be 580 and about 610. And on the downside, you're looking at supports near the 520, 525 mark. So that should act as your stop loss. So yes, a good move on this one, volume backed and taking out key resistance levels. So LG equipment, could be considered for a positional trade.
Okay, so LG is something that Kush seems to like. Let's though switch focus. SML Isuzu. This is a stock where the rally just doesn't seem to get done, and it's a bit of a puzzle, if I can say so. But we have Puneet here to break it down. Puneet, what's contributing to the kind of move that the stock has seen? Just look at that 82% move in the last 3 months. Break this down for us.
Well, thank you for that. It's definitely M&M's acquisition of the company being one of the clear cases of the bull run on SML, but it's definitely a curious case, and that's because we want to look at 3 key numbers. When the company was acquired, it was around 1500. The open offer price is 1554 rupees per share. M&M has actually acquired the company at 650 rupees a share on 28th of April, and the current market price of 3000 rupees. So it's a differential. From the acquisition price of M&M, it's almost up 4.4 to 4.5 times in just the last 3 months. And from the open offer price, it's almost doubled in the similar time frame. So that's one of the key aspects that made us look more deeper into what's happening actually with the company as well. So we want to look at 3 key aspects. The first one's what actually has changed in the last 3 months, and the straight answer is nothing in terms of that warrants almost an 80% rally on the stock. The key aspect within these time frames, there has been a few updates. The quarter 4 results were decent performance, 12 to 13% revenue growth by the company. Margins also grew by 190 basis points to come in at almost 12 to 13%. Those were positives. Sales as well, on the other hand, has been decent, or a 12 to 13% growth in quarter 1 is what the company reported. But does this warrant an 80% jump? Well, not so much, and that's why it's a curious case, as we highlighted. The second aspect, what is actually M&M's plan with SML Isuzu and what made them acquire the company? M&M largely operates in the 2 to 3.5 ton space, which is the weightage of the truck, and the higher the weightage and the higher the tonnage, the more weight it can carry for goods transportation. So it's largely niche in the 2 to 3.5 ton space. On the other hand, someone like an SML operates in the 6.5 to 9.5 ton range. So it's a brand new category that M&M gets. And with that, they've now doubled their market share to 6%. The company is now planning to double it again by FY31 and almost 20%, effectively catering to 1/5 of the market by FY36. That's the second key aspect of what is M&M's plan. And finally, in terms of who are the public shareholders, now the key aspect also, before I go to the shareholders, actually is important of, will M&M actually revise its open offer price? Now, according to the rules, there's actually no compulsion for M&M to do that. I mentioned it's almost double than the open offer price. From a high, this may actually deter some of the public shareholders to actually sell out in a lower price of 1554 rupees per share. So it might actually help M&M reduce the cost of the acquisition. But yes, they will not get the kind of stake they would have envisaged. But currently, they've spent 555 crores in acquiring the promoter stake. The total acquisition cost was expected to be 1100 crores. So it'll be much lower than that aspect. Finally, in terms of shareholders, we know that Sachin Bansal is a co-founder of Flipkart. 19.4% stake is what he holds, but there's no mutual fund, no insurance, no FIS, no DIS in the holdings for SML Isuzu. So it's largely retail public that holds the stake as well. What's next for SML Isuzu shareholders? Open offer dates are still pending. We're still awaiting those details. The CCI approval came on 17 June, so we might expect it to come sometime in the near future, very closely in the short term. But the 12-month forward PE has now inched to 49 times price to earning versus the last 2-year average of 31. So that's largely because of the rally we've seen, but it's it's a cautionary tale for retail and minority investors. They should stay cautious and look to have all their research before entering the stock at this point of time. But it's very cautionary to enter at such high valuations for the company for a 4,000 crore market cap as well. So that's the curious case of SML Isuzu. Definitely a long-term positive for M&M as well as SML in going forward as well.
Thanks a lot for that, Puneet and Kush Bohra. We'll take in Mr. Chokalingam's view on this one after the break. But Kush, before we thank you, do the charts suggest more upside here?
Well, given how the volumes have perked up today as well, despite the kind of good run that it had until yesterday as well or this morning, I wouldn't rule out a further upside. 32.50, the high that it touched today could be retested if that is taken out, 33.50 as well. But yes, I mean, I agree to what Puneet is saying that, you have to be very, very mindful of whether you want to take a position at this juncture or not. My clear advice is no, because the risk reward ratio is just not favorable. It's had a good run. Momentum could take it higher, but you don't want to enter at these elevated levels and then, perhaps see much lower levels. So wait for a dip if at all you want to get in. And if you do have a position, it's not a bad idea to book 50% now and maybe hold the rest.
Okay, we'll take a break. Kush Bohra, we'll leave it at that. Thanks much for taking the time out and joining us. Mr. Chokalingam, stay on. We'll be right back.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
back with India Market Close right here on NDTV Profit, in conversation with G. Chokalingam, and joining us is Shivangi Sarda as well. But just before we go to Shivangi, Mr. Chokalingam, like I said before the break, wanted to tie off this loose end with you. SML Isuzu, what a meteoric rise for the stock. Have you looked at the valuations and the fundamentals? And if you had it in your portfolio, would you keep it? Why or why not?
Yeah, so definitely I have studied it. And before that, I thank your anchor. He has covered very nicely in the interest of the retail investors. Deeply appreciate. You asked me if I hold it, what I would do. I would offload everything today if I am holding it. In fact, if I am Mr. Anand Mahindra and the rules allows me to do this, I would sell whatever I bought from this Japanese player in the market, and I would allow retail investors to manage the company at this valuation. Coming to the specific valuation, now it is trading at around 37 PE, whereas M&M trades at around 33 PE on FY25 numbers. So it's costlier than the company which is acquiring it, and I don't find any fundamental comfort at all. This is a good sell at this price. That's my view.
Very interesting. What about Force Motors? If I can also throw in that question, Mr. Chokalingam, that's also had a very stellar rise.
Yeah, honestly, I have not studied numbers.
Sure.
So, yeah.
Sure. Puneet, do you have a view with regard to Force Motors?
I think it's largely become a very big re-rating candidate, Harsh, and that's one of the key aspects about it. We'll get to the bull and bear in just a bit, but for Force Motors is because the last year was a slow year in terms of sales, and now that over the last 3 to 4 months, the outlook for FY26 and 27 became so pertinent with the new Urbania amongst others. I think that's why it became a re-rating trigger, and I think market got ahead of a little bit before even the results came in. So the last 3 months, I think the chart also would show a very stellar growth for the company, but likely and largely a re-rating trigger, and putting in that kind of valuation on what should have been because of the strong product profile developed over the last few months. So you're seeing that almost 100% rise in the last 3 months, even before the Q1 results have come in, Harsh, and that's largely because of the outlook that's expected for FY26.
Okay, so that's with regard to Force Motors. Shivangi, can I pursue you for a view with regard to Force Motors?
Yes, Harsh. So looking at the chart structure of this one, you've seen that although technically speaking, there is a price volume surge today, but this one has, shown that, after the breakout, it does take a little bit of a pause and consolidation in the past. So we'll wait for some consolidation at these levels, and then, we can go for fresh buying. But it needs to hold above 16,500 odd levels for this strength to continue.
Shivangi, are you taking a trade on the index at all? And if not, what are the stock ideas for the afternoon?
Neeraj, the index has been very volatile in a very consolidative band. So within a tight range, we've seen whipsaws and tug of war between the bulls and bears. Even though there is a strong, buying at the support levels from the bulls, somewhere or the other, it's facing resistance near about 25,550 marks, which, even yesterday it could not surpass. So this level would be important to watch out for tomorrow's expiry. But of course, buy on decline to continue over here. We've seen that the time TK was a lot faster today in terms of the option premiums, probably because, of course, that India VIX has sunk below 12. So overall, there will be some, whipsaws in the option premium as well. But structure remains positive. We are still holding on to higher top, higher bottom on the daily basis, and buy on decline to continue for 25,800 marks for Nifty, with a support of 25,350 levels. And talking about stock-specific ideas, first up on my radar is Laurus Labs. We've seen a lot of momentum and buying in the pharma and diagnostic space stocks, and Laurus Labs has come out of its consolidation on the daily frame. And this one has particularly, given a good follow-up after the monthly breakout that it showed in the month of June. And we've seen consistent returns here. From the last 3 years, the stock has poised to be a very good one. So I remember, recommending Laurus Labs even the last time I was in a show with you. So those targets have been achieved. We are trailing these targets and stop losses ahead. The next levels that we're looking at is 825 with a stop loss of 777. The second one on my radar is ITC Hotels. We've seen that this one has given a price volume surge today, but more importantly, since inception, we've seen that this stock has been making higher top, higher bottom on the monthly basis. And even on the daily frame, it's been holding on to its 50 DEMA very well as a support zones. And in fact, ITC hotel chains have clocked around 73% occupancy on an average in FY25. And its recent asset-light expansion drive is also looking good for a scalable growth without, over-leveraging itself. So overall, quite well placed, and all these positive momentums are coupled with the price movements that we've seen. So recommending a buy here. The next targets that we're looking at is 235 with a stop loss of 222.
Those are topics coming in from Shivangi at this hour, but bull versus bear as well in this segment. Sirma SGS is the one in the spotlight. Puneet has been here. We've asked him various questions, but he's here for bull versus bear finally. Puneet.
Well, thank you for that. So the key trigger on these EMS stocks was, the report from JP Morgan initiating coverage on a bunch of stocks. 6 stocks is what they've initiated coverage on. They have an overweight rating on Sirma, and we've picked that one today. It was one of the biggest gainers in today's trading session. We've seen some cool off from that level, but the interesting part of what the brokers said is that they look at Sirma as one of the dark horses essentially, and seeing a 31% revenue CAGR over FY25 to 28. They do see higher revenue growth for the other players, and we'll get to that in just a bit. But putting Sirma as one of the top 3 instead of something like an Amber, which is a consensus choice, was one of the most interesting aspects of this particular report as well. Now, on the other hand, we are seeing some, bearish views coming in from likes of Morgan Stanley post Q4. They mentioned that the turnaround initiatives for Sirma, while positive, might take a little longer to fructify, and hence maintaining the bearish view. They have a target price of just about 435 rupees per share, almost 50% below the current market price. But that's one of the divergences in views of these two brokerages. When you look at the second bull and bear case, it's of course one of the key aspects of exports. Now, amongst the EMS players, Sirma has one of the highest export revenue percentage of 30%. For FY25, and the bull case estimate is that JP Morgan also believes, amongst others, that it's still not built into the current consensus estimates, and hence they feel it's something that's not yet put in the numbers, and it could see earnings upgrade because of the strong export push for the company. On the other hand, the 30 to 35% guidance, while strong, is still lower than the other EMS players. For Kaynes Technologies, it's 60% revenue growth is what they are seeing, while for Dixon, brokerages are anticipating a 70% revenue growth in FY26. So it's still lower than the other players, and that's the second bear case. The third one is margin boost. Now, they are reducing the share of the consumer business to 30% from 40% currently, and that is expected to boost margins. Currently, it hovers between 7.5% to 8%, and that's expected to inch up to 9% for something like a Sirma SGS. But of the current order book of 5,300 odd crores, the consumer business still forms almost 1/3 of that number. So it might take some more time. The company's actually already started to go back to these set customers, renegotiate terms on margins, or adding more value to these products. So that could take some time, and goes back to our previous point that these measures, while positive, might take a little longer to fructify as well. And finally, on valuations, it's trading at 35 times FY27 price to earnings. It's one of the cheapest amongst the EMS players, but again, the growth is where the key aspect is. For Kaynes, it's 60%. That's almost double than that of something like a Sirma. So that begs the question of how much could you pay? How much do you want to pay as an investor for Sirma as of today, when the growth for the other players are higher? But it could be one of those candidates that's right now not valued at that valuation, but could be, because of the turnaround measures, one of the most interesting plays in the EMS sector going forward over the next couple of years.
Okay. Thanks for that, Puneet. And Mr. Chokalingam, anything in this EMS space, most of the things are expensive, they're not cheap. Would you buy the growth, or would you stay away from the pack?
No, I missed them. I regret, but I don't want to chase them at current valuations.
You wouldn't. Okay, fair call. Now, Shivangi, this morning when we were talking to Chandan, he spoke about delivery as one of the ideas. It's done very well intraday today. My question to you is his targets were about 425 odd, if I'm not wrong. So at the current levels, would you take some money off the table if you had done an intraday long or a positional long, or would you stay long? Conversely, the other question is, would you initiate a fresh long at the current levels on delivery?
We've of course seen a very good surge today, and even in the last hour, the stock has kind of jumped by more than 3.5%, which has been quite remarkable. So overall, we've seen that this one has a very strong support-based buying with follow-up even stronger. RSI is also showing signs of positiveness here. But of course, our first targets have nearly been met. I would recommend to trail stop loss over here. Fresh buying could actually wait for some more dips because the risk reward might not be as favorable. But we're looking at trailing these stop losses ahead. Maybe 415 would be an important support to watch out now for the next levels of 430.
Okay. Watching out for that as well. Some of the logistic companies, we've had some pretty strong moves. I remember in a Zinca Logistics before it did its QIP as well. So some of these logistic related buckets have looked interesting off late. Motilal Oswal has initiated coverage on delivery, by the way, with the target price I think of 480. So keep that in mind. Currently about 423. Do you like any of these names, Mr. Chokalingam, the logistics and the delivery pack?
I am not comfortable in paying close to 100 P for delivery. I would rather buy Blue Dot.
100 P. Okay. Fair call. So I mean, essentially an expensive stock. I think if I'm not wrong, I would love to just pull that out for a minute so that I can mention it. Yeah. So I think what Motilal Oswal seems to believe is that revenue will grow about 14% annually over the next 3 years. And they are valuing it at EV EBITDA of 36 times on FY28 expected multiples, as a result of which they are taking it, giving it a target price of 480. Actually, so it'll reach 36 times EV EBITDA on FY28 basis at the target price of 480. So bear that in mind. Okay, what else is moving? Let's try and figure out if there are stocks which are showing some moves. GIC Housing has had a bit of an uptick in the last few minutes of trade. Fino Payment, sharp up move in the last few minutes of trade. IEX, very sharp volume jump and a price jump as well. In fact, IEX should come up. It's still up about 3.5-4%, but more importantly, volumes are substantially higher than the 30-day average volumes. Shivangi, any thoughts on IEX? And if you don't track IEX, then give us a thought on MCX or BSE.
Yes, all the exchange-rated counters have grabbed attention and they're doing well. If you look at, MCX for that matter, we've seen that on a week-on-week basis, it's done quite well. It's a little bit of a pause right now. But the other names are looking, more attractive at this moment. Like CDSL is one stock which is looking quite good, which is getting ready for a fresh up move after the long consolidation of the last 8 trading sessions. Even BSE is showing signs of relief here because it's now negating its lower bottom formation, and risk reward is quite favorable at these levels for this one. So BSE and CDSL are to be watched out for.
Okay, so BSE and CDSL are a couple of capital market plays that one can look for. But Jefferies has come out with a note on consumer staples, backing the likes of an HUL, Asian Paints and a Varun Beverages. Arguably one of the notes, or rather the best notes in terms of stock price reaction today. Let's go across to Mahima for that one. Mahima.
Right, so Harsh, as you rightly mentioned, the note talks about 3 FMCG stocks which Jefferies is finding attractive in the entire consumer space right now. What they're saying is that FMCG as a sector as a whole has been grappling with subdued demand. The kind of price hikes that they've taken are not able to match the inflation, and in return, what they're seeing is that because of that, the premium products are not getting sold. It's the lower end of spectrum, the lower end of products that are seeing higher sales, because of which volumes are also getting impacted. Plus, they've also said that overall margins have been under pressure because of rising inflation. Plus, there's rise in competition, which is also impacting sales of something like an Asian Paints. Now, because of all of these reasons combined together, a lot of these stocks have underperformed and have sharply fallen over 25 to 30% from its peak. And because of that, Jeffrey thinks that there are 3 names that are offering reasonable, attractive risk to reward with a limited downside. Now, these 3 names include the first one being Varun Beverages. According to them, it is at an attractive valuation, and the target price that they've given is 560, which is around a 21% upside from its current market price. Then there is Asian Paints. They're saying that the competition that Birla Opus has already given was the initial competition and was easier to get that kind of market share, but now it will become difficult for Birla Opus to eat further market share. So they're saying that FY26 they'll see earning growth going forward. They've double upgraded the counter with a target price of 2830, and the last one is HUL with a target price of 2950. What they're liking is the kind of recent change in the management commentary that says that they will prefer growth over margin growth. That is something that Jefferies is liking about HUL. So these are the 3 counters that Jefferies is bullish on in the consumer space.
Mr. Chokalingam, thank you so much, Mahima, for that. Mr. Chokalingam, do you like consumer? If so, how would you play it? Do you believe that some of these counters warrant a turnaround?
I am negative. I mean, a couple of days back, the FMCG veteran also said, I forgot the name, the media interview.
Sir, sorry, but even Varun Beverages, you would be negative on that as well, because that's at least a place where there is some amount of growth. Just trying to understand. And what's the fear there? Give us your perspective.
No, Varun Beverage is relatively better, no doubt about it. I'm talking about a traditional FMCG player. In fact, we have a coverage on ITC, but I have a regret for that also. I would prefer if, something like a Jyoti Lab. Again, it is not going to show any double-digit growth in profit in the current year, but the enterprise value to branded sales is around 4 times for Jyoti Lab, whereas all other branded consumer players are trading up to 6 to 9 times. And also the stock is beaten down close to 52-week low. So tactically one can look at a Jyoti Lab. Yes, Varun Beverage also one can hold if there is any decline buy, but otherwise I would stay away from most of the FMCG companies.
Okay, so would banks be a pocket you're liking at this point? And I'll pull out a couple of big buzzers today. Let's pull up a Fino Payment. Stock is up nearly 9%. And RBL Bank, where the stock is up 4%. Do you like a couple of those banking names or lenders? Fino is not technically a bank, but payment bank. Yes.
I have a bias for PSU banks. So I've been, apart from HDFC Bank, I've been focusing heavily on PSU banks. Like a Central Bank of India, Bank of Maharashtra, Canara Bank. Personally, we do not own, but we are more bullish on these banks.
Where growth is concerned, within the PSU banking pocket, there's Union Bank, which came out with numbers, not impressive. Yes, there have been a couple of banks which have been okay in terms of their growth. How do you view growth? Because you would start to now believe that the recovery cycle is starting to possibly fade for many of them, which will mean that there'll be a cap with regard to an ROA re-rating. So therefore, wouldn't growth come to the fore? But that's not happening clearly. So where's the concern and why are you bullish?
Yeah, certainly. It's a good question. You are absolutely right. One or 2 quarters, they may have a problem as a category. But I have selected Bank of Maharashtra, which has already published the business numbers, which is far above the industry growth for Q1. And Central Bank has given a guidance recently that is again far above the industry growth. And they are all trading at attractive valuation. The single most reason, my perspective for 6 months to 1 year or beyond that, the single most reason to recommend this kind of a PSU bank is that they have got a very solid CASA deposit ratio, and because of the extensive branch network, the Bank of Maharashtra and the Central Bank of India able to maintain very high level of CASA deposit, which will help them to, post above average NIM for the entire PSU bank category. So that is why these two names specifically I like most.
Okay, all right. So that's with regard to the lenders. But BTST, STBT, 320. Shivangi, do you have a view?
So for BTST, my preferred pick would be, with Loris Labs, which has seen a very good price surge in today's session. And we're seeing follow-up is quite strong on this one. So, reiterating this idea for BTST with a target of 825 and a stop of 777.
Serious momentum behind this. The only, Shivangi is of course looking at it from a charts and a derivative perspective, and the stock has given a tremendous rally. But I'm just trying to understand, and I think I know Mr. Chokalingam's answer. He doesn't like expensive stocks, and Loris is anything but cheap. But Mr. Chokalingam, I'm still tempted to ask you, right? CDMO is looking strong. They are doing some very interesting things. By any chance, are you constructive or bullish on Loris at these valuations?
Valuation comfort is not there, but I would give a hold rating because the way...
Not bad, Mr. Chokalingam. It's the first time that I'm seeing you give a hold rating on a stock which is expensive. They must be doing something right.
Yeah. So, I've been tracking all these media news related to Loris Lab. Yes, I have not recommended a buy. I would suggest to hold. See, you are absolutely right. I don't like expensive, but then if I continue to, remain very firm and don't compromise even at margin for a good management company, I would be out of the market. So there is also self-interest. I have to be in the market forever. So, and therefore, I like this company because though expensive, the kind of order they are getting for their business from various countries, that gives me a lot of confidence for medium to long term.
Okay. Well, that's interesting. To an extent, Harsh, Mr. Chokalingam is not wrong. If you are very stuck upon valuation comfort, in the current markets, you'll be out of the markets. There isn't almost anything which is cheap. Everything, including bonds, including gold, silver, everything is expensive.
Correct. So, Mr. Chokalingam, what do you do apart from the fact that you probably compromise a little bit, but the margin of safety is extremely low. So, what should you buy at this point, therefore?
No, I will give one answer based on what I learned. When I compromise, the risk is only the time frame. Loris may not help you, but if you wait for 2-3 years, you are sure to get back your money or even make more profit. But if I buy Vola at 153, I knew for sure on the same channel I gave many times sell call, I would destroy my wealth. So that is the distinction I make. When I compromise, I ensure that I take a time element as a big risk rather than the absolute price point at which I am buying the stock. So from that perspective, find some comfort.
No, sure. So duly noted, sir. Duly noted. But, we'll switch focus. Nomura has also initiated coverage on a Phoenix Mills. That's the other big buzzer. They've issued a reduced call on the counter, citing slow consumption growth in mature malls. Anushi is here to give us all of the details with that note.
Right. So, as you mentioned, Harsh, that Nomura has initiated coverage on Phoenix Mills, and this is with the target price of 1,400 that we are seeing. And this is with the reduced rating that we are looking at. Just yesterday, the company came out with its business update as well, wherein they reported about 12% of a growth, which was in line with what the expectations were concerned. And it was on the stronger side of the event that we are looking at. But this is in contrast to what Nomura had to say. Now, they are saying that the slow consumption growth in mature malls will lead to the kind of degradation in terms of where the revenue growth is concerned. This is, but the ramp up would be then seen from FY28 onwards. In fact, if you look at the consolidated EBITDA CAGR of 13% to 14%, which is expected by FY27 to FY30, is below the consensus target of where 20% growth is lying. There have been a couple of additions in terms of Phoenix Mills, in terms of the new malls which are there. They're not currently operational yet, but the ramp up is expected to drive the growth, but it still remains below the overall sentiment which was seen before. Even in the previous quarters, we'd seen about 20% of a growth, which has now subsided. 12% was the growth this quarter. Last year it was 7%. So while the retail consumption growth remains on the healthier side, it is expected to moderate in the coming quarters going forward. even the valuations, if we look, appear stretched on that front, because of which they have given this reduced rating for the stock and hence the target price of 1,400.
Okay, thank you for that, Anushi, for that perspective with regard to Phoenix Mills. Shivangi, do you have a view with regard to charts on this one?
So talking about Phoenix Mills, this one has been in a lot of action and momentum of lately, but overall we've seen that the stock has actually dampened quite a bit. It has been highly volatile and a very high beta stock for that matter, and I would suggest we could stay away from this one.
Stay away from this one. Okay, Shivangi, just one last question. The capital market stocks, forget the exchanges, but some of the others have been under a bit of stress. So let's leave Motilal Oswal out, obviously, but some of the others, do you have a trading view on any of them?
Neeraj, of course, the entire capital market related and exchange related stocks are looking quite good. But I'm afraid, of course, I would not be able to comment on particular stocks because of the disclosures and disclaimers applied.
I'll ask you one more thing very, very quickly, Shivangi. There is a call that is coming in from some brokerage houses on IREDA. Are the charts showing anything at all for IREDA?
Talking about IREDA, this has been in consolidation from the last 4 months. It's traded in a very muted manner. In fact, it's not been able to surpass 185 levels and hold above it. And on the lower side, we're seeing 140 is the base. So it has been oscillating in between these two levels, and it needs to cross either of them decisively for the next fresh leg of rally.
Okay, Mr. Chokalingam, quick 20 seconds. Do you like IREDA?
At current price, one can buy it after the massive correction.
Interesting. Okay. Thank you so much. Yes.
Keep that in mind.
Okay, thank you, Mr. Chokalingam, as well as Shivangi, for joining us this afternoon, for giving us all of those views. Let's quickly look at the Nifty. Some moves, obviously, over the last hour or so of trade. Just like yesterday, but a bit of a reversal that we've seen today versus what we saw yesterday. 0.25% lower on the Nifty 50. The Nifty Bank, though, holding fort and not contributing to that fall, or rather not contributing much to that fall, if I can call it. Let's look at the intraday chart on both the Nifty and the Bank Nifty. We did see a bit of a fall. While this is just 0.25%, that just goes on to also reflect that for a predominant part of the day, we've been extremely range bound. And thereafter, of course, we've seen around 0.25% or maybe 0.5% drop, and we've seen a bit of a recovery as well. So around a 50-point recovery from that day's low. But now we're suddenly trading in a band of around 130 odd points. So slightly wider in terms of that band, but we've dropped very, very briefly. Let's look at the breadth and see whether that has changed at all, because it was even Steven where the Nifty 50 breadth is concerned. Right, so we've reversed with regard to the NSE advanced decline, and it was tapering in any case when we started this show at around 2 o'clock, but we've reversed and we've largely closed 1:1. But I want to really look at the Nifty 50 breadth, the heat map if we can. Let's pull that up, and there you go. Not much of a move with regard to at least the breadth on the index, but the gainers still staying steady and strong right at the top. The losers too. Some IT names in that losing pocket, but along with it, you have an Apollo Hospitals, a Hindalco as well. No surprise there, and a Tata Steel. So some metal names and IT names under pressure. Let's look at sectors as well, and we likely see the same texture there. In terms of the losers, the realty index and the metal index lead the pack in terms of losers. IT index not too far behind either, around 0.8% lower in trade today. FMCG is the top gainer once again, second time this week, around 0.7 odd percent higher. Auto is the other one which has outperformed. Pharma closes very close to flat, just 0.1% higher, at least at close today. Let's pull up the Pharma index. Let's see how it's played out through the day, because that was one of the sectors which was in focus, and that's what I want to see. The Nifty India Defense is the other one. Well, it's been largely range bound in trade today after that bit of a blip at the start. But let's pull up the Nifty India Defense Index as well, and there you go. So we've seen a bit of a fall from the day's high, 8918, and we've fallen nearly 100 points on this one, so which is nearly 1%. Now let me also try and get you perspective on the mid cap and small cap indices. Let's see how those have closed. Absolutely flat on the Nifty mid cap, a very similar fall and a bit of a bounce back. On the small cap also we saw the same kind of move, but 0.5% higher on the Nifty small cap. That's where it's standing out. We've actually outperformed where the Nifty small cap is concerned. Hiral's call this morning seems to have come true. So a big thumbs up for her, as well as up for the Nifty small cap index. So this is where some of the gainers are coming from, where the breadth is concerned. Let's quickly look at the BSE 500 top gainers, top losers as well. And those are some names which we've spoken about. Some names ought to be on your radar for various newsy reasons. Hindustan Copper being one, PCBL being the other. Yes, that's how we'll close it. Let's quickly look at what to look out for tomorrow. And the cues that we need to look out for. There'll be the FOMC minutes, which will help us judge which direction the FOMC is really taking. And those are some dividend announcements for you on your screen. Last off, there's going to be Indo-Farm Equipment, where 52% of the shares are going to exit lock-in. And we have earnings. Tata Elxsi, TCS, Anand Rathi and Ireda. 4 of those to come out with numbers tomorrow. So all of that and more. That of course will keep us packed for tomorrow. We're back to earnings season. But with that, at least for today, from Neeraj, myself, everyone who puts the show together, thanks so much for watching India Market Close. Stay with us, because what we're going to do is we're going to try and bring you all of the updates crunched into the next hour or so. Stay with us, Market Express, to take all the action forward.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to
welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Nifty ends the day below 25,500 levels while the Sensex was over 150 points. Howard closed to 83,500 levels. Realty, metal and oil and gas ended the day in the red. On the flip side, autos were in the fast lane. FMCG defense also managed to stay resilient. PCBL Chemical, India's largest carbon black producer, stands to gain as Orion SA plans to shut down 3 to 5 of its 15 carbon black facilities in the Americas and EMEA by the end of 2025. Now, the carbon black, a vital component in tires, rubber and plastics, drives PCBL's robust outlook. So with the current capacity of 790,000 metric ton per annum, PCBL aims to hit 880,000 metric tons by FY26 and surpass the 1 million tons by FY28. So the Q4 EBITDA per million tons stood at 17,655 with a long-term target of 25,000 rupees, fueled by a shift to high-margin specialty and superconductive grades. So the stock rose 2% today, reflecting optimism for Indian carbon black players. Prestige Estates met its Q1 pre-sales guidance, reporting a 300% year-on-year surge to 12,126 crore rupees. Collections up 55% to 4,523 crore rupees. The blockbuster performance was fueled by its NCR market entry with the Prestige City, Indrapuram, where 80% of the inventory sold at launch. Average apartment realizations hit 13,339 per square feet. Now, the company launched 4 residential projects totaling to 14.94 million square feet, with NCR contributing 59% to sales, followed by Bengaluru at 21%, Mumbai at 12% and Hyderabad. Dixon Tech forms a 50:50 joint venture with Signify Innovations, now launching Lightanium Technologies Private Limited. The JV focuses on OEM operations in the lighting products and accessories, aiming to solidify Dixon's presence in the segment. So the cost of acquisition for which is 2.5 crore rupees. EPAC Durable has launched commercial production of washing machines at its Sri City plant in Andhra Pradesh. So this move strengthens its position in the white goods segment, aligning with its diversification strategy to reduce reliance on air conditioners. With a 250 crore rupees investment from Hisense for the facility, EPAC aims to boost long-term revenue growth. The company also venturing into air fryers and Nutri blenders projects over 35% top-line growth for FY26, capitalizing on rising demand for home appliances. Shalby Limited signs a landmark memorandum of understanding with Sri Vaishnav Vidyapeeth in Indore, launching cutting-edge BBA and MBA programs in the healthcare and hospital management. So Shalby, a leader in healthcare, provides hands-on practical training, ensuring students gain invaluable real-world experience in the dynamic healthcare industry. So this collaboration empowers aspiring professionals with the skills and expertise needed to meet the sector's ever-growing demands. Varroc Engineering and its subsidiary Varroc Corp Holding face a massive arbitration order worth 570 crore rupees from the International Chamber of Commerce. So the order initiated by Op Mobility Lighting Holding stems from alleged breaches of a securities and purchase agreement signed in April 2022. So Varroc is actively evaluating the matter and exploring all the legal and contractual remedies to address this claim. So the company vows to vigorously contest the allegations as this high-stakes legal battle unfolds. JSW Steel reports a robust Q1 business update, with crude steel production surging 14% year-on-year to 7.26 million tons. However, production dips 5% quarter-on-quarter due to planned maintenance shutdowns of the blast furnaces. Capacity utilization at Indian operations stands steady at 87%. JSW Steel confirms all furnaces are now back online, operating at optimal levels, signaling strong momentum for the steel giant. Gujarat Pipavav Port container cargo volume dips to 1.64 lakh TEUs, reflecting a slight slowdown in the container traffic. Meanwhile, dry bulk cargo volume remains steady, holding firm year-on-year at 0.55 million metric tons. Now, in contrast, liquid cargo shows a positive trend, rising from 0.34 million metric tons to 0.41 million metric tons. So, this mixed performance highlights stable demand in bulk commodities alongside a modest decline in the container shipments, while liquid cargo continues its upward momentum at the port. Jefferies delivers a bold outlook on consumer staples, spotlighting contrarian opportunities in the fallen angels. The brokerage sees gradual improvements in demand and margins with limited downside risk and significant upside potential if these stocks rebound. Varun Beverages, Hindustan Unilever, and Asian Paints emerge as Jefferies' top contrarian picks for the next 12 months. Asian Paints earns a buy rating with a target of 2,830 rupees, up from 2,000 rupees. So Varun Beverages also secures a buy at 560 rupees, revised from 650 rupees. So while HUL holds a buy at 2,950 rupees. Nomura initiates coverage on Phoenix Mills with a reduced rating and sets a target price of 1,400 rupees, citing concerns over slow consumption growth in its mature malls. Now, the brokerage expects a gradual ramp up in the performance only from fiscal year of 2028 onwards. So, despite this, Phoenix Mills projects a consolidated EBITDA compound annual growth rate of around 13% by FY27 and 14% by FY30. So, however, Nomura views the current valuation as stretched, suggesting limited upside potential in the near term amid cautious demand outlook in the retail real estate segment. Motilal Oswal initiates coverage on delivery with a buy rating and sets a target price of 480 rupees. So the company is built to scale and wired for speed, positioning it well to capitalize on the growing express logistics opportunity. MOSL expects delivery to strengthen its market dominance and achieve a robust 14% compounded revenue growth. With lower debt levels, the company is well equipped to fund its capital expenditure needs and is actively focusing on acquisitions. So by providing integrated logistics solutions, delivery aims to further accelerate its growth. Jefferies maintains a buy rating on Adani Energy, setting a target price of 1,150 rupees. The company locks in medium-term double-digit growth, fueled by 61,600 crore rupees worth of transmission projects, up 3.6 times year-on-year. So Mumbai distribution stays strong, while Mundra adds room for upside. Smart meter commissioning gains traction, emerging as a key growth catalyst. Jefferies reaffirms its buy rating on Adani Green Energy with a 1,300 rupee target, citing a 3.5 times capacity expansion from 14 gigawatt to 50 gigawatts by 2030. So the brokerage highlights accelerated capacity additions with 2.6 gigawatt added in the Q4 of FY25 and 1.6 gigawatt in Q1 of FY26. Valuations at a 60% discount to the January 2023 peak, so offer significant upside potential. Now, a 9,350 crore rupees promoter infusion strengthens the balance sheet, supporting execution at the 30 gigawatt Khavda project. Despite risks like execution delays, Jefferies sees Adani Green's robust growth and prudent capital management driving a 15% market share by 2030. EPAC Durables kicks off commercial production of washing machines at its Andhra Pradesh facility. So this is marking a strategic expansion in the white goods segment. Now the move positions the company to capture more market share and fuel long-term revenue growth. Supreme Industries secures a 54 crore order from BPCL to supply 2 lakh units of 10 kg composite LPG cylinders. Now, the deal strengthens its industrial supply portfolio and expands its footprint in the gas utility segment. The company commits to executing the contract within 6 months. Union Bank of India kicks off the fiscal year with a muted business update. So deposits slip over 2% quarter on quarter, while the loan growth also dips slightly. CASA trends stay mostly flat year on year, but see a 5% drop sequentially. So despite some annual growth there, the overall slowdown raises caution around the business momentum heading into the quarter two. Nomura initiates coverage on Godrej Properties with a reduced rating and sets a target price of 1900 rupees. So the brokerage firm expects companies' pre-sales momentum to lag behind expectations, citing concerns over the volume-led growth strategy. Risks include potential equity dilution and execution hurdles. Valuation appears stretched, prompting a cautious outlook. JP Morgan labels India's electronics manufacturing services a sunrise sector, projecting a 32% revenue CAGR through FY30. Now it initiates overweight ratings on Syrma SGS at 800 rupees. So Dixon Tech at 17,700 rupees and Keynes at 7,150 rupees. So this is citing robust growth. Syrma is set for margin expansion, Dixon for mobile-led growth until FY27, and Keynes for a 46% CAGR, targeting $1 billion by FY28. So Amber and Cyient DLM get neutral ratings at 7,350 rupees and 450 rupees, while Avalon is underweight at 650 rupees. Exports are a long-term growth driver for Syrma, Cyient and Avalon, but their 3 times rally over 3 years limits the upside due to its premium valuations. Indigo is looking to lock in more wide-body aircraft for its global expansion plans. The airline is likely to confirm an order for 40 more Airbus A350s on top of the 30. And it has also, already signed up for it. Deliveries are expected to begin in mid-27 as Indigo prepares to boost its presence on the long-haul international routes. Now, in a significant move for India's rail sector, Tata Autocomp, a leading auto parts manufacturer, and Europe's Skoda Group have announced a joint venture. So this partnership will focus on manufacturing railway propulsion systems and components right here in India. So this collaboration, backed by substantial multi-billion euro investment, aims to bolster India's expanding railway and public transportation networks. Viceroy Research, a Delaware-based investigative firm, has shorted Vedanta Resources a $4.9 billion debt, calling its group structure financially unsustainable and a risk to creditors. So the report alleges Vedanta Resources, parent of Vedanta Limited, drains cash from its Indian subsidiary to service its debt, forcing Vedanta Limited to take on the excessive leverage. Viceroy highlights discrepancies like inflated asset values, capex fraud, and governance failures, likening the setup to a Ponzi scheme. So proposed demerger, it claims, that won't solve the cash crunch but will burden new entities with debt. So Vedanta has dismissed the report as malicious misinformation. ICICI Prudential Asset Management Company files for an IPO with the UK promoter Prudential Corporation Holdings, selling shares worth about 10,300 crore rupees. So this is an offer for sale, meaning no fresh shares are issued and all proceeds go to the promoter. So the IPO could value the company at around $12 billion, making it one of the largest in the country this year. ICICI Bank holds 51% stake, while Prudential holds 49%. So the bank is actually planning to buy up to 2% more shares to maintain majority control. ICICI Prudential AMC is India's largest asset manager with a 13.3% market share and over 1.45 crore investors. China is cracking down on delayed payments in its auto sector. So the country's industry ministry has launched a new online platform where suppliers can report late or unpaid bills by automakers. So this comes amid the growing concerns that long payment cycles are hurting smaller suppliers. In response to new government rules, major car makers like BYD and Geely have actually pledged to pay suppliers within 60 days. A Jaguar fighter jet of the Indian Air Force crashed near Rajasthan's Churu district. The cause of the crash is not yet known. Visuals from the site show thick smoke rising from the debris as rescue teams and local authorities rushed in. Initial reports say that 2 bodies have been recovered from the crash site. An official statement from the Indian Air Force is still awaited. A tragic incident unfolds in Gujarat as the Gambhira Bridge in Vadodara collapses, sending 2 trucks, an SUV and a pickup van and an auto rickshaw plunging into the Mahisagar River. So at least 10 people lose their lives with 6 others injured as rescue operations have intensified. The 40-year-old bridge linking Vadodara and Anand gives way around 7:30 a.m., disrupting the vital connectivity. So local authorities, fire brigades and the NDRF is working tirelessly to rescue survivors and recover the vehicles. Prime Minister Modi has announced 2 lakh rupees of ex gratia for the deceased's kin and 50,000 rupees for the injured. The University Grants Commission has issued a strong warning to colleges and universities that using WhatsApp groups to harass juniors will now be treated as ragging. The UGC says that forming informal groups to mentally harass or threaten juniors is a serious violation and will invite strict disciplinary action. So the advisory also warns institutions that failing to act could result in grants being withheld. Tamil Nadu Chief Minister M.K. Stalin has stepped in to resolve a family dispute between his nephews, Dayanidhi and Kalanidhi Maran. So after Dayanidhi Maran sent a legal notice to his elder brother over a shareholding issue in the Sun TV, Stalin personally called both brothers for a meeting. Sources to NDTV Profit say that the Chief Minister helped broker a compromise with Kalanidhi Maran agreeing to give more shares to Dayanidhi. The Food Safety and Standards Authority of India has introduced stricter rules for e-commerce platforms selling food online. So these guidelines announced last week require platforms to ensure safety and proper labeling of food items or face serious penalties. So it's a big step to protect consumers who shop for groceries and packaged foods online. President Trump unveils a 50% tariff on copper imports and floats a massive 200% duty on pharma products, allowing 18 months for businesses to adjust. So he signals further action on chips and other sectors, emphasizing his push to localize manufacturing and counter foreign trade practices. US President Donald Trump escalates his trade rhetoric, warning that countries aligning with BRICS policies deemed anti-American will face an additional 10% tariff. So he accuses the bloc of trying to destroy the US dollar and declares that losing its global reserve status would be akin to losing a major World War II. Trump insists that dollar remains king and vows to impose heavy costs on nations challenging its dominance. Prime Minister Modi sets an ambitious target to raise India-Brazil trade to $20 billion over the next 5 years. He calls the partnership a pillar of global stability, with defense ties rooted in strong mutual trust. Clean energy and environmental goals remain central to both the nations, signaling deeper strategic and economic alignment. A deadly flash flood devastates the southern New Mexico after intense monsoon rains. Rescue teams carried out over 85 swift water operations with 3 people still missing and 1 entire house swept downstream. So local authorities urged the residents to avoid flood waters while emergency shelters are open, and climate experts warn such extreme weather could become more frequent. Joao Pedro, a recent Chelsea signing, scored 2 goals in his first start, leading Chelsea to a 2-0 win over Fluminense in the FIFA Club World Cup semi-final. So the match played in hot and humid conditions saw Pedro score early in each half. Chelsea now advances to the final to face either Real Madrid or Paris Saint-Germain. The Brazilian striker, transferred from Brighton for a hefty fee, proved his worth in the crucial match. Apple is in talks to acquire the US broadcast rights to screen Formula One when the contract becomes available next year, according to the reports. Now, the report follows the strong box office performance of Apple's high-octane racing film F1. the movie which has crossed $293 million in its first 10 days, according to Variety and other outlets. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit, and Malika will be joining us with Profit 360 on the other side of the break.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces.
Nifty ends below 25,000 to snap a 3-day gaining streak, while the Sensex loses over 150 points but closes above 83,500 after a quiet day of trading. Most indices and lower benchmarks underperform the mid and small cap indices. US President Donald Trump announces 50% tariff on copper imports, boon for Indian copper producers but a bane for copper consuming industries. Separately, he also announces 200% tariffs on pharma companies. Inflows into mutual funds normalized in June after a bit of roadblock in May due to geopolitical uncertainty. Equity mutual fund inflows jumped 24% to 23,587 crore. Gold exchange traded funds recorded the highest inflows in 5 months in June. Viceroy Research shorts the debt stack of Vedanta Resources, parent company of Vedanta Limited, alleging the group structure is financially unsustainable and poses a material risk to creditors. Sources say Tamil Nadu Chief Minister M.K. Stalin has intervened between the warring Maran brothers to call for a truce. 9 people killed and several vehicles fell into the Mahisagar River after a section of bridge in Vadodara collapses. Sabhi Khan, an Indian-American techie appointed as the new Chief Operating Officer of Apple. Hello and welcome. Good evening, viewers. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you all the latest updates on markets as well as national and international news. So stay tuned. Let's begin with the markets today. The benchmark indices dip as trade uncertainty looms. The Sensex shed 238 points to close at 83,474, while the Nifty ended 45 points lower at 25,477. Sectoral trends were mixed, with FMCG leading gains. My colleague Harsh now joins in with a detailed market roundup of the day.
Well, it's more of the same this Wednesday as well. For a predominant part of the day, the market was extremely range bound. We were trading in a 70-point band, but maybe over the last hour or so, we saw some bit of volatility where the Nifty fell around 0.5% thereabouts and thereafter recovered a bit. We've closed around 0.1% lower on where the Nifty 50 index is concerned. So that's with regard to the Nifty. And now when we zoom out a little bit on the Nifty itself, we've been extremely flat this week. It's as flat as we can get. So that's the week gone by as well. Now, when I'm looking at the breadth was largely even Steven, but we kind of worsened a wee bit. Where the Nifty 50's breadth is concerned, we worsened a wee bit right towards the end. So around 22 odd stocks gained for around 28 stocks which were on the losing end of things. But a very different picture where the breadth on the overall exchange is concerned. So the NSE breadth was 1:1 at close, but we tapered pretty much through the day. So we worsened as the day went by. The Nifty mid cap, which closed in the red, but the Nifty small cap was the outperformer of the day, 0.5% higher on the Nifty small cap index. So that one really stood out in trade today. In terms of certain sectors and pockets within the BSE 500, or rather the sectoral heat map that did well, we had a couple of sectors which stood out. One was the Nifty Realty Index was down 1.5%. Metals was the other one which was lower as well. But FMCG was the one that really stood out in trade. It was a weak day of trade, but despite that, FMCG 2 out of the last 3 days has been the top sectoral gainer. And that's what's really standing out. Another note from Jefferies kind of aiding the index higher. So FMCG was that one pocket. Last off, with regard to certain names, PCBL was one that really stood out. Philip Carbon Black was one of them. But the BSE 500 top gainers, top losers, plenty of movers on either side. Union Bank on the back of their quarterly update, disappointed the street. And PCBL was one that really stood out, as Orion, the global carbon black maker, decides to shut down shop. So that's how really it moved.
Thanks, Harsh, for giving us all the key details of how the market moved today. But Kryzac closed over 25% higher after making a strong debut on the bourses. The B2B education platform listed at a premium of 15%. The company's IPO closed on the 4th of July and the issue size was 860 crore rupees, with QI base subscribing over 141 times. Let's now listen to the company's Christopher Flood-Nagel, the CEO of the company Kryzac UK, who said their largest destination is UK, the United Kingdom. He also added that his largest source of market remains India. Let's listen in.
The UK is still our largest destination market, and Our largest source market remains India for now. However, as we are expanding into more and more different source countries across Africa, across East Asia, we continue to grow our market share in the UK. So maybe previously we were working with a partner just in South Asia, then we expand to work in Africa as well, and finally also East Asia. So continued growth in the UK is coming from our continued expansion across the world.
Let's shift focus to the other big news today. The Association of Mutual Funds in India, or also called AMFI, has released the mutual fund data for the month of June. SIP inflows rose to 27,269 crore, which is an all-time high. My colleague Alex joins in with more details on the June AMFI data. Over to you, Alex.
So the big headline, of course, is that SIP inflows and gross SIP inflows are at an all-time high. They've stood at 27,269 crore rupees in the month of June, and that has eclipsed the previous high, which was in the month of May, of 26,688 crore rupees. And that has contributed to a certain extent to an improvement in the net inflows into actively managed equity mutual fund schemes, which in the month of June stood at 23,587 crore rupees, and that compares with a net inflow of about 19,000 crore rupees. Now, this is particularly important because in the previous month, there were also new fund offers that generated about 4,000 crore rupees worth of inflows, and this month there were inflows of only about 1,400 crore rupees or thereabouts, and even less in the way of inflows into actively managed funds through new fund offers. So all told, you have flexi cap funds, you have small cap, mid cap, large and mid cap, as well as multi cap funds that have gotten pretty decent inflows. What is interesting is that the sectoral and thematic category, which is a investor favorite, has actually seen outflows if you remove the NFO that was launched in the month. In fact, along with that NFO, there were net inflows of 475.6 crore rupees in the month of June. So seemingly people are being a little cautious. They may be pulling money off the table if they've made considerable gains in indices like, for example, the defense index or actively managed defense funds. Apart from that, you have a reasonable inflow into hybrid schemes, most of which in the form of arbitrage funds, about 15,580 crore rupees out of total inflows in that category of 23,222 crore rupees. A lot of people have shifted from short-term debt funds or liquid funds into arbitrage funds, and that is visible in the outflows from the fixed income category as well. Of course, at the end of the quarter, you generally see outflows from liquid funds, and that was evident as well. But you've seen inflows of 10,270 crore rupees in the way of short duration funds as well. And this is an interesting development. Usually that does not take place towards the end of the quarter. All told, to sum it all up, it is a positive month for the mutual fund industry, with investors coming back into the fold after the uncertainty that they experienced in the month of May.
And moving on to an international story, the US President Donald Trump last night warned that the BRICS nations, including India, would face a 10% tariff pretty soon. He also announced a 50% tariff on copper and hinted at a very, very high rate, like 200%, for pharmaceutical imports. Shares of metal companies like Hindustan Copper, Hindalco, Vedanta, Tata Steel and SAIL, among others, traded in the red as investor sentiment took a hit after Trump's announcement. My colleague Rishabh now joins in with more details. Rishabh, please tell us what are the latest updates that you're picking up on this, and how can we really inform our viewers about what's happening globally on this front?
Right, Malika, what we've seen last night from Trump coming in as well. A bunch of letters were sent out on Monday night, nothing on Tuesday night, but fresh tariff threats to BRICS countries. Of course, India is a part of that country grouping as well. So a fresh threat, a reiteration of the 10% tariffs there. There is still no sort of an announcement whether the White House will be making an announcement for this mini trade deal that India has been negotiating for. There's no confirmation coming in from India, from the Indian side, from the Commerce Ministry as well. But what we know is that I'm sure negotiators are batting for lower tariffs. In the worst case, India could get up to 46% tariffs if you include the 10% BRICS tariff, if you include the 10% baseline tariff, as well as the 26% reciprocal tariffs. That adds up to about 46%. So that is something that India is definitely looking to avoid. Negotiators returned from Washington last Friday, but since then there's been a period of lull. We're not hearing much from the ministry itself. Interestingly, yesterday, what Trump said was that each letter that he's sending out, that is a deal that the United States is making to these countries. So it's possible that a letter also comes. It's possible that a letter does not come and a separate announcement of a trade deal comes. We really don't know at this point in time what the Trump administration decides. But what we do know is that today or tonight, rather starting 9:30, we can expect more of these letters, at least seven of these letters to come out. We don't know if these will be pure tariff letters or whether these will be deals that will be coming out. So we have our eyes peeled on this over the past week, and we'll continue tracking this very, very important development.
All right. Thank you so much for that, Rishabh. And US tariffs are set to rise from 14% to 20%, a move that could reshape trade flows and market sentiment. This is the word coming in from JP Morgan's Jahangir Aziz. But the key question to ask is, will this hike impact investor decisions? Let's listen in to his comment.
Our sense is that tariffs, which is effectively about 14.5% in the US right now, this is the average effective tariff rate, will eventually move towards 20%. It'll be made up of tariffs, these countrywide tariffs that you have right now, moving somewhere between 10%, which is their bare minimum that they have said, and the reciprocal tariffs that were announced, and tariffs on sectors such as copper, semiconductors, and pharmaceuticals, along with what we already have on steel, aluminum, and autos. Now, obviously, there are exemptions in all of these things. Our sense is that those exemptions will stay or will get diluted in part of those trade deals. But ultimately, the effective tariff rate has, in our view, another 5 percentage points on average to move up.
And in the wake of Trump's latest threat of imposing 200% tariffs on pharma imports, there could be severe ramifications for Indian pharma giants. Varsha now joins in with more context on this one. Take a look.
If you see, the 200% will not be levied immediately, as you rightly said. It will take almost 12 to 18 months, and this may provide a little comfort, I would say, or a relief to the pharma companies because the tariffs will be levied after 12 to 18 months. And this is the reason, if you see, US shares yesterday pharma shares ended in green after this announcement. So you have Pfizer, Amgen, and Coherus, which were up in trade yesterday after this announcement. Now, what Trump actually said, that there are going to be tariffs at very high rate, like 200%, but they'll give a certain period of time to get this act together, and they'll give people about a year and a half. Now, if you see pharma stocks with high exposure to US, you have Gland Pharma, Aurobindo Pharma, Dr. Reddy's, where the tariff range from 45% to 50%. Lupin, Glenmark, and Sun Pharma has tariff range of almost 30 to 35%. The least company which will get impacted from this tariffs would be Torrent Pharma. So, as you asked me the question, in the near term, no, there won't be impact. But the analysts are saying that to set up a company or to set up a facility in US, that will take much, like 4 to 5 years to set up a facility there. So they don't see this 200% tariff into play. But we need to see, go ahead, what the Trump will, maybe there will be negotiations or not. But let's see how much India export to US. If you see, India exports almost 10 billion 10 billions of pharma goods to US, and Indian exports contributes almost 6% to overall US export. Generic provides more than 400 billion USD in annual savings to US healthcare sector. So this is the industry analysis, how much India export to US when it comes to pharma products.
Right, Varsha, thanks for giving us that clarity. And pharma sector has now become immune to Trump threats, says Aditya Khemka, fund manager of Incred Asset Management, as Trump threatens 200% tariffs on the pharma space. Listen in.
the sector is definitely not, vaccinated when it comes to tariffs, but it is definitely now seems immunized to what Trump is saying. I think pharma has now become a part of the taco trade. Trump always chickens out trade. So I don't think investors are now going to react to any more threats. Once you have heard a threat too many times, you stop reacting. I think that's where we are today in pharma.
And copper prices are in focus as well, as copper prices have been pushed to record high post this announcement. What is the outlook now for these prices? We will be speaking to Kunal Shah of Nirmal Bang about that in a minute. But first, let's get to my colleague Vansh to set the conversation up.
So the copper prices are up 1% in the last 1 month, and they are up 8.21% since Feb 2025. Let's understand the entire scenario. There have been higher premiums in the US physical market, and there has been a substantial premium for the immediate delivery of copper to US. So what is being basically done is that for the arising arbitrage opportunity, the traders are buying copper elsewhere and shipping it to US. And 4 lakh tons of copper has been shipped, physical copper has been shipped to US this year, and the copper stockpiles in US are at the highest level since July 2018. Let's also understand the outlook and what the analysts are indicating for this. There is a strong demand growth for copper coming in from China, and there is a shortage of inventory of copper in China and other parts of the world, as majority of the inventory has already moved into the US. And the rise in copper prices, the analysts also anticipate that the rise is just a rush, and the inventory will be still lying down in the US. And the inventory US and the rise in the inventory in US have commanded significant premiums, and analysts anticipate the copper prices will settle down below $10,000. And also this would be a slightly negative for the copper consuming companies, as they may face headwinds in the near term.
Let's also get you some insights on the highly valued sectors of defense and energy transition. My colleague Neeraj caught up with S. Narain, ED and CIO at ICICI Prudential AMC, who spoke about his views on the pockets of value that he is bullish on. Listen in to a snippet of that wholesome conversation.
Energy transition is bound to happen. If you look at energy transition, and you could play it through transmission, you could play it through, solar, but I think it is bound to happen. And given that we have sunshine, I think, as the technology develops, as battery technology develops, it is something which is waiting to explode in the next 10 years. You have to identify the right technology, and if the correct technology comes, you're going to bet on it, it is going to work. But you've seen the rare earth problem in recent times. So frankly, we believe that you have to keep one leg in, one leg out, and keep on doing work. Once you are very clear, you can actually go in with both your legs in. That stage has still not come. So we keep on doing work. See, in defense, frankly, it's a completely, it's a very difficult sector for us to understand, because no one is going to come and explain to you all the technologies involved. It is stupid of any government to come and say, here is the technology, I'm going to explain what I'm doing. It makes no sense for them. So what happens is we have to buy on incomplete information. When you are going to buy on completely incomplete information, we are capped to the extent that we can buy. Because it is illogical for any company to explain what they're going to do in defense. If they start doing that, then we would distrust this, because if that company is going to come and explain this is what you're going to do, then I wouldn't trust that company in defense at all. The more ambiguous they are on what they are doing, actually it means that they are actually doing defense. That is where the dichotomy comes for us. That's why I think it is very difficult for us to actually do proper research in defense. It has to be somewhere, you say, okay, we'll take this risk in this company, although this company is not explaining things to us properly, and then take that bet on a few government companies, on a few non-government companies, and then move on. You can't expect them to explain to you anything transparently.
Meanwhile, ICICI Prudential has filed for an IPO. The UK promoter, Prudential Corporation Holdings, will be selling shares worth 10,300 crore rupees. This is an offer for sale, meaning no fresh shares are to be issued, and all proceeds will go to the promoter. The IPO could value the company at around $12 billion, making it one of the largest in the country this year. ICICI Bank holds 51% stake, while Prudential holds 49%. The bank plans to buy up to 2% more shares to maintain majority control. ICICI Prudential AMC is India's largest asset manager with a 13.3% market share and over 1.45 crore investors. And to give you the latest update in the Maran brothers feud, Tamil Nadu Chief Minister M.K. Stalin has intervened and brokered a truce between the sparring siblings. Sources say Stalin personally called the brothers together and had a conversation with them. Let's go across to my colleague Vishwanath Nair for more on this. Vishi, what are you picking up on this case?
So what sources are telling NDTV Profit is that the tussle between Dayanidhi Maran and Kalanidhi Maran over the ownership of Sun TV network seems to have ended. What sources are telling us is that the Tamil Nadu Chief Minister M.K. Stalin actually mediated a truce between the two brothers after a legal notice was sent last month by Dayanidhi Maran to Kalanidhi Maran over the ownership of the company. According to what sources are now telling us, there has been a discussion that Kalanidhi Maran will transfer some more shares in Sun TV to Dayanidhi Maran. Of course, the specifics of the deal are not yet out, but as and when details come out, we'll find out exactly how much Dayanidhi Maran will end up owning in Sun TV network. Remember that back in June, Dayanidhi Maran had sent out a legal notice to his brother alleging that the ownership of Sun TV was illegally transferred to Kalanidhi Maran's name after the death of their father. And this is why there was a big dispute that has gone on for over 20 years. And now finally both brothers are coming to the discussion table, and it's likely that the deal will be signed very, very soon.
Thanks for that, Vishy. And focusing on Vedanta, Vedanta closed over 3% lower after US-based short seller Viceroy Research called it financially unsustainable and operationally compromised. The report by Viceroy Research highlighted financial risks and called Vedanta Resources a parasite holding company. The report claims that the company relies solely on cash from dying host Vedanta. Viceroy Research pointed out that Vedanta Resources has no significant operations of its own. The report also highlighted major discrepancies such as bait and switch funding model, irreconcilable interest expenses, and inflated asset values. In order to cure these conducts, Vedanta Resources has proposed a demerger of the companies and diverted from its decades-long acquisition strategy. Meanwhile, Vedanta has responded to Viceroy Research's report, calling it a malicious combination of selective misinformation and baseless allegations. Vedanta added that the report is issued without making any contact and only to create false propaganda. And moving on, Adani Enterprise issues non-convertible debentures worth 1,000 crores starting today. The NCDs have a face value of 1,000 rupees each, and the minimum application size for this one is 10,000 rupees. According to their official release, these NCDs will be offered in tenors of 24, 36 and 60 months with a quarterly, annual and cumulative interest payment options across 8 series. The issue that concludes on July 22nd offers an interest of up to 9.3% and will be allotted on a first-come, first basis. Nuvama Wealth Management, Trust Investment Advisors and Tipson's Consultancy Services are the lead managers for this one. As per the release, the company will utilize half of the proceeds from the issuance for the repayment and the full payment of debt, and rest will be used in general corporate needs. And Maharashtra's hospitality sector is in crisis mode as the Indian Hotel and Restaurant Association has slammed a wave of tax hikes. The back-to-back levies include a doubling of liquor VAT to 10%, a 15% jump in license fees, and a 60% rise in excise duty. AHAR, the body, warns these hikes are unsustainable, especially post-COVID. They also warned that it could trigger job losses, reduce demand, tax evasion, and even liquor smuggling could happen because of this. The president of AHAR calls it a death blow to the sector, which supports millions of livelihoods. As Mumbai aims to position itself as a global tourist hub, AHAR urges the government to reconsider the hikes and engage in dialogue before the crisis deepens. Let's listen into the president of himself speaking.
The first point, like for the last 15 months, क्या क्या हाइक हुआ है वो जरा मैं आपके सामने लाना चाहता हूँ। अक्टूबर 2023 जो वैट था, लिकर पे जो वैट 5% था, उसको बढ़ा के 10% किया गया, ओनली फॉर द FL3 आउटलेट्स, यानी कि अगेन इट्स अ डिस्क्रिमिनेटरी। इसके बारे में डिटेल में मैं आगे बताऊंगा। इसके बाद इमिडिएटली सेकेंड जो पॉइंट था, मार्च 2025 डायरेक्ट 15% रेस किया गया एक्साइज फीस, विच इज ऑन अ वेरी हायर साइड, क्योंकि आपके लाइसेंस फीस जब 2 लाख रहता है, 3 लाख रहता है, 5% बढ़ाओ, 10 बढ़ाओ, सो इट इज एब्जॉर्बेबल। बट 9 लाख फीस हो गया और आप अभी 15% बढ़ाते हो, सीधा लाख 1.5 लाख रुपया बढ़ता है। So which is a very pain point for our industry. And the third is जून में excise duty जो over and above 60% हाई किया गया है। When you say 60% means 1.5 times of the existing rate.
A tragic incident unfolded in Gujarat as a section of the Ghamria Bridge in Vadodara collapsed, leading to at least 10 fatalities. Rescue operations are currently underway with local authorities, police, fire brigade and NDRF teams on site. NDTV's Manan Hingu sent this report from the location.
आनंद और वडोदरा को छूटने वाला महिसागर नदी पे जो ब्रिज है, गंभीरा ब्रिज, वो तंत्र की गंभीर लापरवाही वजह से आज टूट गया है। जी, आज सुबह में 8:45 बजे की बात कर रहा हूँ, 8:45 बजे आज ये ब्रिज चालू था और कई वाहन है वो ब्रिज से पसार हो रहे थे। उस वक्त भाग जो ब्रिज है उसका एक भाग है वो आज गिर चुका है। वहां पे अभी जो माहिती मिलती आ गई है वो वहां से 2 ट्रक भी थे और एक ट्रक नीचे गिर चुका है। एक ट्रक वो ब्रिज के जो फसल में फंस गया है अभी, और 2 गाड़ियां थी और उसमें 2 टू व्हीलर भी थी। अभी जो मौत की जो बात करें तो मौत उसमें 10 लोगों की मौत हुई है। ये ब्रिज का जो निर्माण है वो 1985 में हुआ था, लेकिन अभी कह रहा है कि 3536 वर्ष पुराना ये ब्रिज था। और ये ब्रिज का जो मैं दिखाई दे रहा हूँ आपका ब्रिज का दृश्य, वो ब्रिज का जो दृश्य है वो बहुत बिस्मार हालत में है। यानी कि कई लोगों ने यहाँ पे विरोध भी किया था, कई लोगों ने कई बार इसकी रजूआत भी किया था। ये ब्रिज जो है उसकी जो डेंसिटी है वो भी नहीं है और ये ब्रिज यूज करने के लायक ही नहीं थे, और फिर भी तंत्र, ये सब बात है वो उसको कुछ भी तंत्र ने उसका गंभीर से नहीं लिया ये मामला, और आज ये ब्रिज टूट गया है और 10 लोगों की जान है वो चली गई है।
Well, viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India,
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the out Do you like companies with deep moats? Do you like unique businesses? This one, which we are going to analyze today, Mahima and myself, will be one of those. Welcome to KYC. Thanks for tuning in. We're going to today deep dive into BLS International. We've been itching to do this actually for a while. Mahima's bias has stopped me from doing it. But nonetheless, we've managed to pull them together today. So let's quickly start off with what I want to know. I'm going to first try and understand what the volume growth is going to be like, because volume growth in FY25 was extremely strong. Can that sustain? Also, while I've not written it here, pricing, how is that evolving? Because again, we've seen very strong pricing growth in FY25. Mind you, BLS International is in the business of visas. It's very similar to the business that VFS does. If you've been to a VFS visa center, you'll know exactly what they do. So a clear competitor to a VFS. So you'll understand what I mean by a volume growth and by a pricing growth. More people coming in for visas will mean volume growth, and whether they have the appetite to increase the price that they charge to each person walking in will be value growth. So both of those will determine how the top line growth for this company evolves. Now, the second piece is new centers. How have they contributed? There are two levers here. One is you have existing centers which are getting self-operated by a BLS International. There are cost savings which are accruing and which is enabling them to do better EBITDA. And the second is they're opening up new centers, which is allowing them to have more customer walk-ins, and the volume growth that we just spoke about is being driven by that. The third piece is there's $1 billion of tenders which is up for grabs. It's a 2,000 crore top line company. So $1 billion can move and shake pretty much everything. Now, all of those should actually come up for renewal over the next 12 to 18 months. These are opportunities for BLS International, either to renew or bring in new clients. What's the success rate like is what I would want to understand on these renewals. Now, chunky customer concentration. This is a risk. The Spain visa that they actually have rights to is a chunky customer. If it were to go away, that is a key risk. What are they doing to hedge for that risk is what I want to understand. Efficiencies emanating from acquisitions. They've acquired a Turkish company called iData, which allows them access to nearly 20 countries. And that is a positive. It's a big positive. But what does this do? And how quickly do the efficiencies start to drive through? This has contributed to around 20% of the absolute EBITDA growth of FY25. I'm trying to understand whether this acquisition has still more efficiencies left to squeeze out, and which will drive EBITDA going forward as well. What are the global opportunities that they are looking at in other businesses? Mind you, BLS International has also ventured into some other businesses. Logistics, for example, caters to banks, goes and helps banks out with regard to where senior citizens are concerned, providing banking services at home. So some of those, and they're looking at global opportunities in similar businesses as well. I'm not sure if banking is the one they're targeting, but nonetheless, they are looking to diversify. So what are those opportunities coming in from abroad? And this is the big one, competition from VFS. VFS has a name, has a brand, has scale, has technology, all of that, which is much better than a BLS International. It's also unlisted, mind you, and it is Blackstone backed. So when you have that kind of a competitor, can you continue to sustain the kind of numbers that you have? Last off, usage of cash and the return ratios. There's plenty I want to know about this company. So probably we'll do a longer chat with the management, but how are they going to use the cash? What are the return ratio goals going to look like? They are guiding for a 30% ROC. Can they continue to clock that is really the question. Right. But I'm going to toss it over to Mahima because she's going to explain exactly what BLS International does for you guys.
Right. So basically, as Harsh rightly mentioned, the two kind of services that the company provides is first visa and consular services, and the second one is the digital services. To talk about the visa and consular services, basically it's one of the largest player globally, providing the government to citizen services, and has built trusted partnership with embassies as well as governments worldwide. Plus, it's a 19+ industry experience that they have, and they've built a broad network spanning across 70+ countries already. Plus, it has global offices working for government and diplomatic missions. The core services include outsourcing of visa processing, document verification, attestation, biometrics, e-visa, etc. And providing citizenship services also include your passport renewal, your document authentication, legalization, citizenship renewation, as well as citizenship renunciation and notary as well. So these are the kind of services that the visa and consular services bracket includes. But in terms of the digital services, basically that is providing digital as well as physical again, government to citizen, B2C, B2B services at grassroots levels in India, and this includes your services. Of course, this is one of the leading players in the services like business correspondence services, as well as it includes your e-governance services and assisted e-services as well. So that's the digital part of the business. Now, in terms of how they operate, overall they enter into long-term contracts. So your most of their contracts are exclusive and are long-term in nature. So that includes your 5 to 10 year contracts. So that is an important one. In terms of their overall network as well, as I mentioned in the start of the show, that it has a 70+ countries network that it is operating in. There is 46+ government clients across the globe. There is 19+ years of global experience, plus 44,800 business correspondents across India. There is 142,000+ touch points for their e-services and 1,000+ store spread across India. So that's the overall network that they have in India and across the globe. In terms of their subsidiaries as well, they've got BLS International, where there's 100% holding, which is your visa and consular services, and there's BLS e-services that takes care of the business, the digital part of the business. So that's everything that one needs to know about the counter as to what it does and what it actually is into providing services like.
Now, I want to just add a little bit here. So, of course, there are 45 countries that BLS International operates with. But what's the scope like?
Correct.
How large is the opportunity? So, VFS does 140 countries.
Correct.
So, that's how large the opportunity is. But, of course, VFS is a very strong competitor in those terms. So, so just want to kind of cover that as well. But, let's not delay this. Let's quickly look at the metrics that we'll cover this morning for you. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, street cred, street coverage, as well as valuations and guidance. We'll try and cover all of that. With street coverage, we'll also cover guidance. I'd like to keep valuation as point number 8 if we can. Street coverage and guidance will be point number 7. And there are reasons for that. You'll get to it. And we'll thereafter speak with Shikhar Agarwal, who's the Joint Managing Director at BLS International, to talk to us about numbers. Mahima, I want to start off with the income statement.
Right, so income statement definitely is a thumbs up for this particular counter. I mean, if we take the trajectory in terms of the revenue, it's grown from 850 crores to almost over 2,100 crores in 2025. From 2022 to 2025, it's seen a 3-year CAGR of 37% in terms of the revenue growth. The EBITDA growth has also been significant, a 3-year CAGR of 80% from 107 in FY22 to almost 629 crores in FY25. In terms of margins, significant amount of improvement there as well, constantly increasing from FY22 at 12.6% to 28.7% in FY25. The net profit trajectory has also been, has seen a good growth, a 3-year CAGR of 69% from 111 to almost 539 crores in FY25. In terms of the revenue breakup, just to give viewers a perspective, the two businesses that I talked about, the visa and consular services is 75% and your digital services is about 25%. And the volumes that Harsh was talking about is also significant in terms of the visa volumes. It's seen a growth of almost 31% in FY25 itself. In terms of new applications also, net new applications also, that also saw a growth of almost 35 odd percent. So, overall a very good picture when it comes to their overall income statement. So a thumbs up there.
Yeah, and we will tilt more towards the more material parts of the business, which is visa and consular, because that's where a bulk of the revenue comes from. That's also a more insulated business compared to others. So, and less competitive. Of course, there's VFS, but less competitive in relative terms. Let's look at the balance sheet very, very quickly. Again, looking very healthy from a balance sheet standpoint. I want to cull out 2-3 points here. The borrowing number is at around 180 crore. It's a 15,000 crore market cap company. So really no concern where the borrowing is concerned. There's a small spike in the short-term borrowings to 25 crore rupees. That's likely a payables number which is reflecting, which is also in fact impacting the cash flow positively, of course, given that it's a short-term liability which reflects. In terms of the cash balances, it's at 740 crore. So on a 15,000 crore base, it has 740 crore of cash. 5% of its market cap is sitting in cash on the balance sheet, and it does this regularly. It generally has anything between 450 to 750 crore of cash on its balance sheet. At least that's the trend in the last 3 years. So something again to keep your eye out on. But it looks like a healthy balance sheet, no concern. Where they invest cash is something Mahima will likely cover.
Right, and I think, as you rightly mentioned, the cash is enough to cover their debt. So I think that's not at all a problem there.
Correct.
But yeah, talking about cash flow, well, it's a thumbs up here as well, because overall cash flow from operation has seen a significant amount of jump in the past 3 odd years, from a 261 crore to almost 829 crores. So that's a good number there, a healthy number there. And cash flow from operations to PAT also, that's a good ratio overall if we see. In terms of net cash flow, FY25 was negative because they've invested a big chunk of amount in buying that iData part, and overall also they've done some investments in fixed asset purchase as well. So that's why it's a negative number. Otherwise, it's not a concerning part. Overall, a healthy cash flow statement. So thumbs up there as well.
And they generally use these cash balances to acquire companies.
Internal accruals,
It's a general part of the way they do business. So you'll continue to expect that to happen. So if you don't like that part of the business, something you should know, that they invest in acquisitions all the time. The question, of course, you should be asking is what do they do, or rather what do these acquisitions yield in terms of return ratios? And let's quickly point that out to you. Let's try and understand what the return ratios look like. There you go. Very healthy, right? Of course, it's fallen from the 28% high of FY24, but a 20% plus ROC on a consistent basis over the last 4 years just kind of brushes off any concern in terms of capital allocation that the company is making. Can we have the ROE ratios as well? And I will try to pull them out as well. There you go. So that's the ROE. So ROE, in fact, just increasing sizably as the years have rolled by. We're now at 30% plus. Question will be, is this sustainable? But shareholding, Mahima.
It's been on the constant rise, so
Yes,
it should
very
ideally be
impressive.
sustainable, and that's something, of course, we'll ask the management as well. But in terms of shareholding, it's a well-held company. Promoters have slightly reduced their stake from that 74% mark to a 70% mark, but it's a well-held company overall by promoters. A 70% holding is more than decent. In terms of FI holding, slightly gone up in the past 3 years from a 7.5% to almost a 10% mark there. In terms of DI holdings, not much of DIs are holding this particular counter. The March 25 number indicates a 2% odd holding by DIs, and public holding has remained constant from 17% to it went to around 19.6% by March 24, but that's again come down to around 17 odd percent. But overall, promoters have faith in the company, and that's been shown because it's a well-held company overall, because they hold around 70 odd percent. So a thumbs up there as well.
Yeah, the spike in the number of shareholders surely might raise a few eyebrows. But, a couple of things which we missed speaking about, Mahima, before this show. 16th Street has been increasing stake in this company, which is a positive. LIC is one of the DIs which have added a 1% stake in the quarter ended March 2025. So that's the other thing. Two things that you should look out for, because again, two interesting investors have bought in, and that kind of indicates or gives you some kind of direction as an investor. Let's also quickly look at how the street cred is and what has the stock done. Of course, in the short term, there's been some pain. 1 month down 2%, and even over the last year or so, as the graphics roll, you'll see. But over the year or so period, there has been pressure on the stock. But when you're looking at the 5-year picture, there's been a very strong rally in the stock. So 5-year performance has been outstanding. We've given this a neutral, of course, given that the longer term performance is strong and the shorter term performance has been difficult. But street coverage.
Right. So in terms, in terms of street coverage, there's not a lot of analysts that cover this counter, and that's one of the reasons as to why we are staying a little cautious in giving it a neutral rating. There's just one buy with an upside potential of 68% as per what Bloomberg suggests. So that's with regards to where the street coverage stands. But guidance, of course, a strong guidance. The management is confident of sustaining the 30% plus margins in the visa and consular business segment. But we'll have to wait. We'll have to go ahead and ask the management with regards to the blended margin for both visa as well as the digital business. They've said that they're at least targeting growth anywhere between 15 to 20 odd percent. And the one interesting part that I saw in their con call was that they are saying that they'll continue to evaluate acquisition targets because they are seeing some potential counters which they can go ahead and acquire. So we'll also ask them as to which of these counters are in which area are they going to go ahead and expand in. So this is with regards to where the guidance stands, Harsh.
Right. Now let's pull out valuations, probably one of the most important metrics. When you're looking at valuations, it's currently trading at 31 times trailing 12 months. FY26 is roughly 24 times. So 1 year forward, they've guided for around 15 to 20% growth for some time in the future. And therefore, we've kind of just extrapolated that valuation, but it's also basis the average Bloomberg analyst, which is just one analyst covering the stock. So the 5-year average in terms of price to earnings is 30 times. Doesn't look particularly expensive. But at the same time, you want to be cautious because there are no competitors and there is VFS, which is a big unlisted competitor of this business. Now, I want to also quickly cover analyst recommendations. Just one buy call on this one. Potential return being 68%. Again, we'll give this a neutral. We'll be cautious about this because there's only one analyst covering it. So we've given this a neutral. The total rating, let's quickly stack it up and let's give you a summary of all of the metrics we've spoken about. That's of course the street coverage, but income statement, balance sheet, cash flow, all of those were a thumbs up. Even return ratios a thumbs up. Very impressive across the board with regard to that. Shareholding is a thumbs up, 70% held. Street credit, street coverage, valuations all in neutral. Comes to 6.5 on 8 with no thumbs down with regard to where this company is concerned. Let's quickly go across. We have Shikhar Agarwal joining us, Joint Managing Director, BLS International. So I want to first understand from you. Firstly, welcome, good morning. We're in a rush because we're crunched for time. I want to quickly first understand from you, what's the tender pipeline looking like? What's the win rate that you have? How many of your clients currently are up for renewal in the next 12 to 18 months? Is there a concern on that count? Give us that perspective.
So I think I can start that off with telling you the 5-year trajectory. If you see last year, our revenue has grown by 30% and our profit after tax, which is what we actually see, is grown by 66%. So we have delivered 540 crores of profit last year, which was a 66% increase compared to the year before. If you see the volumes, there has been a steady growth in volumes over the last 5 years. We have delivered 4 million visa applications last year. Now we are proud to say we work with more than 40 client governments across 70 odd countries, around the world. As you see, in the last 1 year itself, we have won more than 10 new contracts with different client governments. Over the next few years, we've been telling, there are multiple client governments, coming out with new tenders from the existing market. There is upwards of $2 billion tenders that are coming up, wherein our competitors are the incumbent. Regarding our revenue, we have already renewed most of our contracts. So we have a clear visibility for 5 to 7 years at least. Some of the contracts that we have won are for 10 years. So we have a clear visibility on the potential of revenue that we have, and on top of that, the growth in the market. If you see, we have